what the stock is doing right now. And that's perhaps because of pre-sales, etc. Let's look at Oil India as well. Oil India was a sharp set of numbers. Stock is about 3.5% up. We were speaking earlier in the morning, Parag Bhai, about the possibility of increase in petrol diesel prices and the question about whether the reaction to it has already been priced in by the market or we will see a sharp one. Wanted to get your view on that.
So basically, my view is that OMCs, IOC, BPCL and HPCL, if crude remains above at this level, and if there is no petrol diesel price hike, they will have a 1 lakh crore loss in this quarter. So there has to be a price hike for sure. Otherwise, who will bear it? So basically, there has to be a price hike. Plus, you want to disincentivize consumer from using more petrol diesel, right? Because your dollar goes away. So that's why some sort of hit consumer will have to take. So I'm expecting petrol diesel price hike. It might be coming if oil stays at...
Is that priced in?
In IOC, BPCL, HPCL, you can say that, see, for example, in HPCL, yesterday it moved up because of good result. But the result was good because of low priced inventory.
Yeah.
So in those cases, in some cases, it is not priced in. So for example, petrol diesel price hike is happening, but it has to be meaningful. It cannot be just 5-7 rupees. Then the reactions, if it is a positive reaction, I'll be surprised.
So it will be positive for your OMCs once it comes in specifically.
But it should be very high level. Totally.
Will that not sour the broader market sentiment?
Yeah, I know. Inflation will go up.
Yeah, consumption.
Discretionary middle class pockets.
So the broad question is, no, it's not been priced in yet. If it's a sharp, steep one, we will see that big hit coming in from the market right
absolutely.
now. Shrikant, Oil India, if you have been tracking, let's look at an Oil India, let's look at a Metropolis as well on the charts.
Yes, in fact, the stock has been consolidating within this range of 520 and 460 for a longer time. And now it is on the verge of breaking that. So we can expect some more upward activity in the near future. That's the view, and which is concerning because whenever we see breakout or some upward activity in ONGC and Oil India, most of the time we see rise in crude prices. So I think market is more smarter than what the actual things are happening right now. I think based on current formation, yes, the stock is heading for at least 530, 535 sort of levels. And in case if there is any retracement, any pullback in the near future, close to 500, we should look for adding some long positions. We also like ONGC, there also we have a target of 330, 340.
Okay, just some news coming in. I want to pull up Mahanagar Gas. MGL has decided to hike retail prices of CNG by 2 rupees per kilo. In MMR, the new rate is 84 rupees per kg effective today. And then this is in NDTV Flash, which is also talking about how auto unions are intensifying demands for fare hikes consequently. So you are going to see that cascading effect come in one way or the other. If we had to look in particular at sectors which will be worst hit by a fuel hike, which we know now is imminent. The math is not mathing without the fuel hike. Which would be the top ones? You talked about OEMs a little earlier.
Yeah, auto OEMs for sure. Everybody will be hit. Everybody, and every sector's consumer middle class demand will be hit to some extent, I would say, to some extent.
Transport costs go up. So therefore, obviously, everything will get hit.
I would say that, see, in many cases, you should not extrapolate March quarter numbers because you are heading into a significant headwinds in going into Q1. Unfortunately, because this conflict has extended and whatever has happened.
So it's actually quite concerning, actually, if FMCG companies have also guided to a certain volume growth in FY27, that's going to be challenged, isn't it?
See, FMCG is a day-to-day consumption, so it depends on category to category. If it is a discretionary category within FMCG, then of course it will be impacted. But if it is a day-to-day need, then for example, as I gave you example, right? Last year, parachute prices have gone up by 60%, but the volume degrowth was just 2 to 3%. So there are some categories which are not that price sensitive. There are some categories which are price sensitive within FMCG.
There might be some down trading.
So Tata Consumer saw 16% volume growth, right? Tata Consumer. Now Tata Consumer tea, salt, that category will not see. Of course, if they are guiding for 15%, it might come to 13%.
So FMCG is a safe bet?
FMCG is a safe bet,
Yeah, more the staples. Top pick, Shrikant, after the pre-open session, before we get into the opening rates?
See, like metal stocks, they should do well. And there we are bullish on steel stocks. JSPL, which is currently around some 1245, 1250 sort of levels. From here, the stock can move towards the levels of 1300 or 1330. We can keep a stop loss around 1225 for the same. So there we are bullish.
Okay, we'll take Kush Bora's top idea in a bit. Maybe it will help viewers to try and stay in export-oriented names or companies which do not get impacted from this higher fuel, like maybe telecom. Let's wait and watch. But the markets for now are starting off okay, aided by, of course, global cues and the fact that we've fallen quite a bit, really. I mean, we are at 23,555 after a 0.5% uptick. I mean, 24,000 is long gone yesterday. Mid caps and small caps too looking okay because the market breadth is positive. Mid cap index 0.6%, small cap index 0.76%. Really strong show, really, by the small caps as well. So a lot of stocks moving around. Like we said, today actually was a day full of very positive results and some of which can be extrapolated. The IKS is kind of for the world. But let's get the heat map up on the screen and show you what is moving and what is not. Fair degree of green, very little red. IT yet again taking the stick. And well, that is that one index which has really been taken to the cleaners. But what is doing well? Cipla, 6% higher. What a big bump up there. And we spoke about it briefly. Maybe we'll talk about it in detail. Adani Enterprises, another 3% higher. Airtel, 1.26% higher. Rather subdued a reaction, I must admit. Adani Ports about 1.3% higher. HDFC Life, yesterday too, the Adani Group stocks actually had a very strong recovery. And I think it's playing on today. Maybe the rest of the group also could be doing well. We'll just mark that maybe. Tata Consumer, HDFC Life, M&M, Coal India, etc. That is the set of names which is doing well. Cipla is big bumper, 7.5. It's moving like a mid-cap stock, really. But look at that kind of a gain. And just before Tamanna comes in, or as Tamanna comes in, can we just get some of the other Adani Group stocks? In case Tamanna is marking it, fine. But otherwise, let's just show Adani Green, Adani Total Gas, etc. And just see Adani Energy is up 1.6%. Adani Green is up 2.7% as well. Standard disclaimer, of course, the Adani Group owns NDTV. There's some undercurrent here, Tamanna. Yesterday too, there was a strong move here.
Yep. So just the broader markets as well, Neeraj, also looking quite positive, and that's a relief, really. 150 points up on the Nifty mid cap, 150 on the small cap as well, about more than 0.5% up, nearly 0.75% up. Let me just pull up India VIX quickly. The advanced decline is also looking quite positive, 1803 to 367. This is a good figure, nearly 5% down, 4.5% down on the India VIX. So all things considered, at least the market is settling after a rough and tumble week. I would say most of this week has been quite tough. Let's pull up the sectoral heat map for you and see what's happening here. Pharma sector will be up there thanks to Cipla, possibly. See, healthcare is up there. And Nifty Pharma up there, 1.5%. Nifty Healthcare also up there. These indices are not that widely populated. So if you have one star of the show, it's going to pull the whole thing up. Nifty Energy about 1.5% up. Defense stocks doing well this morning, as are infra, PSU banks. The only one really sulking is Nifty IT, down about 1% today in trade. The Nifty IT, they're seeing a bit of a muted start. But let's look at specific stocks while we can. And results is what is going to be top of mind. We're still in that season. There's some good, some bad, and some ugly numbers which have come in. Let's see how they're reacting. Keynes Tech 10% down at start. Missed guidance, EPS downgrades, a whole host of problems there. We're hoping that the management can come and clarify what's been happening there. Good set of numbers for Metropolis. 7.5% up. Balaji Amines is the rock star really this morning. 18% up on the stock. As we move forward, you also have NLC, IKS. Let's look at some of those. All of them doing well. NLC about 13% up. IKS also up in the green. ADF Foods about 6% up this morning. Tata Motors PV, Oil India, DLF. Let's look at all of them. DLF was a muted set of numbers. The others are doing fairly well. I want to look at some of the sugar stocks. Exports have been curbed. It's a negative for some of these companies. We had one company come and say it doesn't make too much of a difference, but clearly the street feels it's going to be a bit of a downtick. You're seeing sugar stocks largely down in the red. Order wins have come in for NBCC, PNC Infratech. I think Bajel will also see a bit of a spike over there. Yeah, there you have it, about 6% up. MTAR also focused in focus this morning. Let's look at Parag Foods and Dodla Dairy, because milk prices have gone up, but the stock's fairly muted. A bit of action in the pre-open session, but yeah, you do have some big hits there as well.
You do, Tamanna, and what's actually looking good is the breadth. Because I look at the 500 stocks of the Nifty 500 and it's mostly green, over 400 in the green at this moment, and you've highlighted a few of the top gainers. I want to add to the list though. You have First Source Solutions that's up about 7.8%, one of the top gainers in the broader markets, that's doing reasonably well. Alkyl Amines is doing well. Inox India is doing well. These are stocks that are buzzing in trade. Zydus Life is up and about. Not a stock that you see very often. Bombay Burma is up 3% in trade today as well. I'm looking at the downticks and some of them stand out. Of course, we've already highlighted Keynes Tech. It's the accident of the day, if you will. And HPCL, a cool off taking place very quickly after yesterday's up move. And I wonder whether the rest of the oil marketing pack is also seeing similar cuts. So pull up BPCL, pull up IOC as well. No, not too much. So HPCL seems to be where the focus is. So a couple of cohorts that I want to focus on. Shrikant Chauhan, the Adani Group stocks. Something seems to be working here and building on strength that has come through in the last few sessions. Would you add to them, and which one would be your preference?
Yeah, technically, if we go through with the Adani group related stocks, most of them have crossed their long-term resistance levels. And it clearly indicates that the overall trend, short-term, medium-term, long-term, is like positive for all the stocks. And we can expect further more activity. But in that specifically, we like Adani Ports, which is around 1770, 1775 sort of levels. There we have a target of 1950 or 2000 sort of levels. See, all these stocks we should look for adding with a positional view, because in the near term, in the near future, even if we consider last 2 days, they have rallied a lot. But if we consider the period of, let's say, next 2 to 3 weeks, then all these stocks are trading. We also like Adani Enterprise, which is around 2590, 2600. There we have a target of 3000. Adani Energy Solutions, there also 1700, 1750 can be possible. And Adani Power is something which is like really doing well in this entire pack. And there also we have a target of close to 300. So based on technicals, we like the stocks.
Okay, a few more stocks in the broader markets. I'll take a quick view from Kush. Kush, I mentioned First Source Solutions, and by the way, you're welcome to comment on any of the stocks that I've mentioned in the past 5 minutes as well. Inox India, I'll throw that in as well. And HPCL specifically, big downtick very quickly after that uptick yesterday.
Let me start with Inox India. The reason for that is that this stock was about a month and a half ago our weekly pick. Did phenomenally well, profit booking now and on the way up. So it definitely remains on my radar for a long position from here on. 1440, 1445, that's a support zone. So that should act as your stop loss if you're going fresh longs on this one. Won't be surprised to see that, catch this same trajectory and move to 1550, even 1595 kind of levels, on the upside. First Source, nothing to write home about. And as far as, HPCL goes, again, this cohort of stocks has not really been, top of my list. The same view continues. And I will give in a quick view on the Adani stocks. Adani Enterprises is something that we discussed. We don't discuss this enough, but we discussed this at 2300, that yahan se breakout banta hai. Even if it's risen quite a bit, I think this has not done anything in a while. Yahan se 2700 seems fairly easy. I think about 2950 also very much on the card. So if you have a position, don't book out now. If you want to buy, you can. 2450, 2400, that should be your positional stop loss.
Credit where due, even Parag Thakkar for that matter mentioned some time back about these things and why Adani Enterprises was something that he was comfortable looking at, and the returns have been
I look at right issue price of 1850 when promoter brought in money, right? So 1850 almost it was bottom. It is incidental, but I am saying that sometimes you have to look at these factors, and plus this whatever assets they have got in Jayaprakash associate deal, I think those assets are huge. So I would say that plus that airport business is expanding. New Mumbai airport EBITDA will be visible next year.
Yeah.
So at that price I was constructive, of course. Now though it has rallied significantly. That too for a large cap stock.
Okay. All right. Let's go across to Varsha, who's talking about Cipla. Cipla could really be the stock of the morning with how the results have worked out. Varsha, were the numbers as good?
So I would say revenue was in line, but EBITDA and PAT was missed. But the reason why Cipla is buzzing is not because of numbers, but because of the commentary of the management, and of course the brokerage is being bullish post the commentary. Well, the company is expecting strong launches which will help to aid growth. EBITDA margin expansion is on the cards. US business is expected to do well. Now, talking about the brokerages, well, let's see what Goldman Sachs has to say. They've maintained neutral, though they've hiked target price. Q4 results, according to them, were below estimates, but India, South Africa beats US pipeline in focus for FY27, and One Africa gathers momentum. Kotak has maintained buy with target price of 1,625. According to them, the numbers were in line, but domestic business delivers strong at 15% year-on-year growth. Robust H2 FY27 is expected, and US guidance brings a positive surprise. While MS has maintained underweight, though they've cut the target price as well. According to them, the earnings were weak. FY27 remains a transition year. EBITDA margins down, sustainability of gross margin improvement and launch timeline of peptide assets will be a key thing to track, but the US pipelines is strengthening. So overall, all the brokerages and investors are, betting on the US pipeline, and of course the new launches and the capex will also go down, which will help the operating leverage, and hence the EBITDA margin will also improve for the company, and hence you are seeing the stock is buzzing in trade today.
Interesting, very interesting. Thank you so much for that, Varsha. Parag bhai, just on Cipla, because the numbers on the face of it were okay, but this is more of a forward-looking kind of excitement when it comes to it.
I think company has guided aggressively for FY27. There are mixed set of views on those things. Some people are saying it's a very aggressive guidance, although they have lowered their margin guidance. So I would say that this is a stock which has not done anything. I think the positioning might be such that there is a good rally. But I would say that the numbers were not that exciting, guidance was not that exciting. One of the key products is being pushed out to next year. And Revlimid sales are falling off. So I would not read too much into today's move.
Yeah, it's already cooling off actually.
Oh, really? So Cipla, if you hold it, would this be a good opportunity to exit? Would Cipla not be a top pharma pick?
Again, it's a good company, but I would say that for somebody who is holding it, will have to hold it for at least next 1 year. Next 6 months are not going to be that exciting for this company.
Actually, can we pull up the 1 year chart for Cipla, because it did go through a phase where it cracked very, very, very sharply, and I won't be surprised if it's not recouped that. There you go. It's just about, to a certain extent, recouped some of those losses. So, Kush, you want to comment on the levels that you would watch on the upside and whether it would face resistance at very close to where we are at right now?
Absolutely. 1440, that's the first level to watch for. And 1500, massive consolidation around that level, as you can see on the charts as well. See that, the initial part of the graph where that 1500 level was being maintained for a long time. Now, anyone who's been holding on to this will come on to sell, right? Once the price reaches that level, more psychology, right? So this is how technicals also work. So I wouldn't really buy a fresh, but if I had it from lower levels, 1440, 1500 for these levels, I'd continue to hold. On the downside, keep a stop loss at 1370, 1375 zones.
Two stocks which will be in focus today, and we'll have the managements there. One is MTAR Tech, large order win yesterday too from the lows, because they raised the guidance, the stock bumped up, and today too doing well. So Shrikant Chauhan, MTAR Tech is one. And the second one is Paramount Cables, which is actually sulking despite the investor names out, simply because the preference issue price is much lower. So Shrikant on the charts, MTAR Tech, Paramount Communications.
Yeah. So Neeraj, if we go through with the technical pattern of MTAR Tech, it's a parabolic rise that we saw, and it is like consolidating, let's say, for a few days, and again it breaks into the breaks on the upward side. This time also it is signaling the similar sort of pattern. It has spent close to 7-8 days within the range of 6,800, 6,900 on the higher side, 6,000, 6,200 on the downside, and now again it is breaking back. So broadly, I am of the view that till the stock is in the trend, and as it has broken the important level of 6,800, the next level to watch out for would be 7,500 or 7,600. So I think even at this price, around 7,200, it's a buy with a short-term view. we can keep a stop loss at 7,000 for creating any long positions with a target of 75, 7,600 on the higher side. For Paramount Communication, there means I don't have any idea because I have not seen that particular chart. But broadly, I am of the view that in this market, most of these stocks, they are doing really well. But I think fairer stocks, I think there we can expect a lot of activity even from current levels, especially JSW Steel and Jinto Steel and Power.
Okay, thank you so much, Shrikant, for joining in today. Thank you, Parag Bhai and Kush Bora. But we want to focus on another buzzing stock, which is Balaji Amines. And Varsha joining in to tell us what's working here. Varsha, the numbers looked good.
Yes, absolutely. So the number did beat estimates. We have seeing a sharp margin rise over here. This is on the back of product mix and the operating leverage. Cost efficiencies have also led to this expansion because there was the other expenses have lowered down, and the operating leverage is supporting profitability expansion. Now over here the story is because of the West Asia crisis and all the amines prices have also gone up. So there might be an inventory gain that Balaji Amines has been enjoying, number one. And number two, because of the shortage of ammonia, the productions were halted. So we need to watch out how Q1 FY27 will be played out for the company. But overall, the numbers look good, and the volumes in the amines are also looking good. But we need to wait for the press release also. And we have an interview at 12 today. So a lot of things will be cleared.
Okay, interesting. You look at alkyl amines and some of the other stocks as well. Everything is moving because of this. Do you think Balaji Amines and alkyl amines, Shrikant, if you get an opportunity, is this a profit booking moment?
No, I think after a very long time, these stocks have started pulling back to their recent sell-off that we witnessed. Alkali amines was somewhere close to 3,000, 4,000, 4,500 sort of levels. From there, all the way it fell to 1,200. So now it's a pullback rally that we are witnessing, and furthermore, upside is very much possible in the near future. We are targeting somewhere close to 2,400, 2,500 for alkali amines from current levels. So we should look for hold on to it. We also like Balaji Amines. There also the formation is more or less similar, and there also we have a target of close to 1,900 or 2,000. So both these stocks are showing a lot of strength, and furthermore activity is more likely in the near future.
Okay, so Balaji Amines in focus. This morning is also turning out to be interesting because of the positive breadth that we're seeing more than anything else, and the Nifty holding up above the 23,575 mark. Shrikant, now that we've had some stability in the markets, about 15 minutes of trade coming in, what is your Nifty outlook looking like?
No, I think market broadly is going to spend time within the range. That's my view. And even after dismissal of 23,600, we can expect a rally towards 23,800, which is like nominal up move that we can expect. But yes, while looking at the entire setup of the market, I'm of the view that downside is limited for the market. So in case if there is any, let's say, bad reason, then in that case also, I'm not expecting market to sustain below the levels of 23,000. So in the near future, I'm expecting market to remain within the range of 23,000 and 23,800 on the higher side. In case if there is any dip because of any reason, look for adding some long bets on stocks. And for the day specifically or with the intraday view, 23,600 is the level above which we can look for taking some long positions.
Okay, Shrikant, thank you so much for joining in today. And, before we get you more stocks that are buzzing, guys, I don't know if you're seeing what Xi Jinping is saying right now. And some of these flashes, we'll put them on our screen as well. He's obviously talking about Taiwan being the most important issue in the US-China talks, saying China-US ties can be stable if Taiwan issue handled well, but goes on to say China-US ties can be dangerous if Taiwan not handled well. I'm just wondering if one more front in what is turning out to be global geopolitical, misalignment has opened up with Taiwan. Xi Jinping has put Taiwan on the table.
Yeah, and I think Tamanna, one would expect that to definitely happen. But for the usage of words, the choice of words used on day one of the summit, is very, very interesting.
For me, what stands out is the stark difference in tonality between the two world leaders. You have a situation where Donald Trump is talking about his great friend and the possibility of positive talks on trade and on business. And on the other side, you have President Xi Jinping making a very clear statement, geopolitics first, sort out the Taiwan issue first, and then we'll talk about anything else that you want.
Yeah, saying that talks are going to happen at my pace.
Yes.
And according to what I want. We heard the Trump speech. We didn't quite hear Xi Jinping, so I don't know about the tone or if we could understand it. But the words speak very, very loudly for themselves. Okay, another one which is in focus and corporate action which deserves to be looked at is Swiggy looking to overhaul its governance structure as it eyes Indian-owned and controlled company status under foreign exchange rules. Why this is important is it's also moving to an inventory-led model following competition like Blinkit. Hiral joining us for more on this. Hiral, we were having this discussion. I don't think it's very well known that Swiggy was not already on an inventory-led model. This was on a commission model. They want to switch it up.
Absolutely. They are looking to switch the Tamanna in terms of an inventory-led model. And this is a step, where they've come in closer to transition to this kind of a model, specifically when it comes to Instamart. And to achieve this is why they are looking at this corporate action where they've reworked their board structure. Now, what they've done is they've proposed structural changes to its board nomination framework. And the aim is to transition to an Indian-owned and controlled company. Only once they do this and they get the approval, from the governing bodies, that's when they will be able to move to an inventory-led model. Now, they're aiming at achieving IOCC status under the FEMA regulations, and the focus will be on Indian shareholding as well as getting board control as well. Now, what the government change rationale is, they're aiming to restructure and rationalize their legacy board nominations. They're ensuring a steady board-level representation also for the core leadership team. And they will look at safeguarding the taking local control when it comes to supply chain as well. Now, moving from there on, if you have to look at the inventory-led model, they are actively, pivoting to this model. And in May 2026 is when they had made this announcement as well. The reason why they want to do this is because even competition has moved there. If you talk about Blinkit, in September is when they moved to an inventory-led model. And due to that, if you see their Q4, their revenues actually grew 4 times. So you are seeing results from a financial perspective as well. Very lastly, if you have to see why the shift, 1, their margins will improve. 2, there is better control and quality. 3, in terms of competition with Blinkit, they will be able to fill in the gap quicker. And you have the average order value also that could potentially go up for a Swiggy. And in terms of the steps taken, they've already hived off the this quick commerce vertical into a separate subsidiary, and they've called it Swiggy Instamart Private Limited. And they've also actually hived it off into a separate app. So all of these are actually coming in place. Once they get an approval, it'll be interesting to see how FY27 pans out, because you will see good revenue growth coming in. If Blinkit has seen the 3 times, let's hope a similar kind of performance from an Instamart as well, and your margins will also improve.
Got it. Okay. Thanks so much for that. And keep an eye on the stock. The stock currently trading with gains of about 0.5%. Remember, we were talking about Eternal in the same breath, of course, for different reasons. The stock was under a tad bit of pressure earlier, but it's trading with gains of just about 0.33%. Now, a very interesting regulatory piece coming through from the perspective of the Reserve Bank of India. This whole conversation about upper layer NBFCs has just got a little bit more interesting, pertaining to the government non-banking financial companies, things like Power Finance Corporation of India. Exclusive information being picked up by my colleague Piyush Shukla about that, and the fact that they're tapping the shoulder of the Reserve Bank of India seeking exemption. Why is that, Piyush?
Good morning. That is correct. There are these government-backed large NBFCs, over 1 lakh crore of asset under management. They have actually sought exemption from the RBI from coming in the upper layer category. Essentially, when a NBFC is promoted to an upper layer category, they have 25% ceiling on large borrower group exposure. So some of these NBFCs like PFC, REC, IRFC, these companies do a lot of of large ticket lending to infra projects. IRFC, for instance, has just one client, which is the Indian Railways. So it is not practical for them to diversify so much in the time period that has been given by the RBI. So that is essentially the reason that they are seeking an exemption from being added in the upper layer category. There is one more aspect to this, that the RBI said that standalone NBFCs with up to 1 lakh crore loan assets will be included, so they can actually hive off also some of their loans into another NBFC. But that negates the purpose of this whole upper layer classification. So it is an interesting aspect to watch. 1 lakh, there are a lot of government-backed NBFCs which will come under the upper layer category as per the RBI's draft norms, which had come out in April.
Right.
And we are picking that the large government-run NBFCs are concerned on this particular aspect.
Got it. Okay, Piyush, thanks so much for getting us those details. Really appreciate your time. Let's go across now to the first management of the day. Paramount Communication, plans to raise capital, the mix of shares and warrants. The cable and wire makers, it's a cable and wire company, remember, raising some money. First, let's get in Varsha to talk about this development before we get in Mr. Sanjay Agarwal, the chairman and CEO of the company. Varsha.
Well, company plans to raise 122 crore. This is via equity and warrants, and will issue 2.2 crore equity shares at 42 apiece. Now, additionally, company will also issue 72 lakh warrants worth 30 crore. Now, the interesting point over here is the proposed allotee includes a backers, diversified alpha funds, singularity funds, and the warrants are proposed to be issued by two promoters also, Sanjay and Sandeep Agarwal. So overall, interesting fundraise, considering the backers, diversified alpha funds and singularity fund will also participate in this fundraise.
Got it. A backers, diversified alpha fund, singularity fund, and others. Sanjay Agarwal, thanks Varsha for that. Sanjay Agarwal, chairman and CEO of Paramount Cables Johnson, right now on the show. Mr. Agarwal, thank you so much for joining in. Interesting time
and
to be doing.
Thank you for having me.
No, pleasure is entirely ours. Just tell us, actually, before we get to that, just tell us a bit about your business. You are in the cables and wires business, but do you largely export? And if so, is it to the US or other geographies?
You see, we have a large export percentage of our revenue. I'd say roughly it varies between 30 to 35%. At one point, it had touched nearly 50% also, some 3 years back. But we want to keep it steady around 30-35% in the coming years.
Okay. And this export is to the US or which other geographies?
Yeah, now for the last few years, we've been focusing on the US because it is one market which is unparalleled in its size and depth, especially for the cable industry. It's roughly $30 billion worth of imports every year into that market. And to have a strong presence and to have a recognized quality name in that market is a huge advantage.
Mr. Agarwal, thanks so much for that clarification. And so let me jump straight into the fundraise, which is 120 odd crore rupees, mix of warrants and equity. You've got warrants issued to the promoters. You've tied up the investors as well. What are the timelines that we're talking about, and what is this fundraise for? What is it going to be used for?
You see, we are basically going in for a greenfield expansion project at Narmadapuram near Bhopal. It's around a 32-acre piece of land. And we are proposing to spend around 300 crores over the next 2 years. In the first phase, we plan to spend around 150 crores. And the fundraise, we are going to use partly for our working capital and partly for the project.
Okay, so this capacity increase that will take place, just give us a sense of the timelines of the completion and the integration into your existing facilities, and what are the heads that it will cater to? Because you've got power cables, railway cables, telecom, house wires, and pipes and others, right? So it's a pretty diversified set that you have. Will all be manufactured at this new facility? And what do your existing facilities have with regard to capacity utilization?
You see, our existing facilities, we have got 2 factories, one in Jharsuguda in Haryana, the other in Kushkeda in Rajasthan. Both have been practically running at 100% capacity utilization for the last 4 years. And we have been, progressively increasing our capacity. We have invested around 120 crores plus into the capex into these existing 2 plants. But we are running out of space in these existing 2 plants. And that's the reason for our setting up the new plant. As to your question about the capacities that we are looking at in the new facility at Narmadapuram. We expect to do roughly 2,000 crores at the end of the expansion when we have invested our 300 crores approximately into this project.
Mr. Agarwal, quick question. Now, your numbers and the growth that you've shown over the last 2 or 3 years has been strong. A couple of queries here. One, because of this capacity expansion plan, what does it do to growth? Let's say, because you have a 3-year project in mind, but it comes up in phases, I'm presuming. What does it do to growth? FY27, FY28, any thoughts here?
You see, FY27 might be slightly less than the continuous progress that we have had in the past few years because the existing factories will be, having a limitation on their capacity a bit. But still, we hope to do reasonably well, maybe 25% plus or 20-25%. Over the next 3 years, we hope to again double our turnover, which we have done in the past also. And that's a track we wish to, plan to follow, to double every 3 years.
I hear you. Just the small follow-up there. So therefore, you've done very well on the revenue front, EBITDA front, profit after tax front as well. You've doubled, but your EPS hasn't, right? Simply because I presume, and this is my presumption, I do not know, but I presume that you've done some share issuances and as a result of which the earnings per share hasn't done. And you're doing one more share issuance. So is this a business which consistently requires capital? And therefore, would the EPS growth lag the profit or the EBITDA growth over the next 3 years?
Yes. You see, we are doing a very limited dilution right now. It's just 120 crores odd. And a good part of the overall expansion is going to come out of our own funds or through out of debt. You see, we are barely leveraged. We just had 110 crore debt on our books as against more than 700 crore plus of net worth at the end of the previous year. So there is enough space to have debt on our books. It's just that we wanted to, have a more solid footing while going into the expansion and to have some prominent investors on board.
But so the question your minority shareholders might ask, Mr. Agarwal, is that if you have so much space on the gearing ratios, why not utilize a portion of that? Because and therefore, incrementally, are you likely to fund future expansions with debt? And what are the levels that you see them going to, the gearing ratio perhaps, over the course of the next 3 to 5 years?
You see, the gearing ratio, I would say we would be comfortable till, it's roughly 1:2. Beyond that, we'll have to be a bit more careful. But you see, there are various other ways to, fund your working capital, including, tightening your debtors and all. So all of those aspects have to be looked into, and we have to try and become more and more efficient in use of capital over the years.
Leave it at that. Mr. Agarwal, all the best for the quarters ahead and the expansion plans. Thanks for taking the time out.
Thank you so much. Thank you. Bye.
All right. To what is arguably one of the key stocks of the last so many days, if you will, because of what one technical chartist told us as well, the parabolic rise at MTAR. And remember yesterday, after starting off lower, once the management raised the guidance, the stock actually did even better yesterday. And now, today we learned that the company secured a new order as well from an international client. Before we speak with Mr. Parvat Srinivas Reddy, the MD of MTAR, Puneet Johnson to set up the chat for us. Puneet.
Well, 200% return, Meera, just in this year itself. It's up 377% in the last 1 year. And as you rightly said, the 2,200 crore just announced today at 9 a.m. Now, they've not given too many details of the client because of confidentiality reasons, but as well as the timeline. So those will be some of the key aspects to start off this conversation. But 67% growth in revenues. Profits are also, up 3x at 44 crores for this quarter. Just two key aspects also was that the FY27 guidance has been raised again. So they are now penciling in an 80% growth in FY27 versus a 50% growth earlier. And the second key aspect is that the order book now is expected to be at 5,000 odd crores versus the closing order book of 2,600 odd crores at the end of March 2026. So I think 2,600 crores plus the order which we've gotten today at 2,200 crores. That's the calculation. I think that's the management will also speak about. But those are some of the key numbers. Parabolic, just the right way to describe them.
Yeah, parabolic. Okay. Mr. Reddy, I wonder if he agrees with that description. Managing Director, MTAR Technology is with us. Mr. Reddy, thank you so much for joining us. Let's speak about the latest news coming in, which is this 2,279 crore order that you've got from an international client. What can you add on this? I know you can't maybe disclose all the details of who the client is, etc. But what is the detail or the color that you can add to this?
I won't be able to add much on that, more than what we have said, but it is part of our normal course of business, the way we are growing as such, and whatever we are trying to do. And it's all the effort done over the last few years or a number of years that we're able to take this forward in this manner. But I won't be able to disclose much because of the confidentiality agreement that we have.
Fair enough. What is the kind of client concentration that you have now? Because your largest client has a lion's share of your revenue. Is there an attempt or to now diversify further? Can you give us some sense of that direction and your thought there?
Yes, absolutely. If you look at, obviously, there has been a remarkable increase in certain areas in our revenues, but also at every vertical that we are working on, whether it's aerospace and defense, nuclear energy, we're looking at oil and gas moving forward as well. So the absolute numbers are going up phenomenally well, and that's a very good sign. And we have been focusing on every vertical as equally as possible in comparison to the clean energy sector that we are working at this point in time.
What has fired for you in Q4? You've had a robust set of numbers. Which of your segments do you think have performed the most? And is Q4, in a sense, indicative of what we will see? The world has really changed between Q4 and Q1 of this financial year. Should investors be looking at your Q4 numbers and seeing it as indicative of sustained performance?
Absolutely, yes. That's what I've said clearly. I've upped the guidance to 80%. If you remember, last year we had a weak first half of the year, but this year we'll have a strong first half and even better second half. So that's a clear indication the way we're moving forward.
Mr. Reddy, good morning. This is Alex here. So I want to stick to or talk to you about that guidance improvement, 80% versus 50% approximately earlier. If you can talk about the mix therein, because you've also guided to EBITDA margins around that 24% mark, if I'm not mistaken. So is it because you anticipate that the mix of projects that you will be taking up will be relatively higher margin?
Absolutely, yes. Not only the relatively higher margin, we're going to execute a lot more nuclear orders in the current year, as well as the operating leverage, which kicks in with the higher volumes as well. We have analyzed this very carefully, and we are pretty confident of achieving the required margins for this year.
Let me ask, so you mentioned nuclear, Mr. Reddy, but there is also for your company an AI data center play. And one of the new orders stands at 35 crore rupees. Of course, the order book is significantly higher. So I'm just wondering, what is the kind of exposure to data center as a business, and where do you see it going perhaps in FY27, FY28?
I mean, that's a very interesting part of the whole story, because it's another customer which we are working with, and that's just the first article you're talking about, which is 35 crores. But over the next 2-3 years, we're looking at more than that increasing to about 450 to 500 crores. Basically, we're going to supply mainly to the data center infrastructure requirements in terms of the various assemblies that they require for implementation of the data center projects. And that's something which we would love to do. And it's actually moving in the right direction. We already received the order. We're also going to sign a long-term agreement with the customer shortly. And that would take us to where I've mentioned around 450 to 500 crores for the next couple of years or 3 years.
Okay. So, Mr. Reddy, I presume the exit order book at the end of FY26 was healthy. You added a new order today and maybe some others in the last few weeks. And you're talking very healthily about the data center business order book as well, I presume. What's the anticipated order flow for FY27? I'm just trying to understand what's the visibility that you would have for execution and growth for how many number of quarters or years?
No, we'll have visibility for a couple of quarters normally, and the orders that are released, or even sometimes even more. But by the end of the year, probably we are looking at almost. I've clearly mentioned that we'll have a closing order book of 5,000 crores, and we are pretty confident on that. And that's also on the kind of conservative front.
Conservative front, 5,000 crores, which is a significant order win considering the execution that you have and the fact that you were at 2,800 crores of order book at the end of 9 months. The second quick follow-up that I have, Mr. Reddy, is on margins. I know you answered that briefly, but just want to understand at the end of quarter 3, you are maintaining your guidance at about 21%. Now you're talking about a step-up jump, 24% over 21% for FY27 is a big shift on margins. I presume it's because of the mix, but is that the new normal that you would operate at, circa 24%? And do you expect that you could take them even higher over the course of the next 2-3 years?
Absolutely, yes. So if you look at the current year, we're going to have margin improvements quarter-on-quarter basis, the way we are ramping up in each quarter. And then we'll end up with that 24% level. But moving forward, this would be 24% would be the base minimum margins that we are going to work with. And then there will definitely be further improvements over the next 2-3 years that we can look at.
Just one last piece, Mr. Reddy, which is lumpiness, if at all. And I just wonder if FY27, the tendency to look at quarter on quarter is there. But would you warn against doing that and to perhaps look at a longer time frame for your company, or do you think that there's unlikely to be any lumpiness in FY27?
Absolutely, there will not be any lumpiness. The reason I've said is we're going to have a very strong first quarter and even better second quarter, right? So there will not be any lumpiness, and we will do better quarter-on-quarter basis, and based on the kind of order book we have and the execution plan we have on hand.
Got it. All right, Mr. Reddy, thanks so much for taking the time and wish you all the best. Look forward to speaking to you once again.
Thank you so much.
Now, all right, take a look at the markets very quickly. We've come off the high point of the day, but...
cooled off quite dramatically, really, the markets have. And this is the typical issue, right, from the last several sessions, that you have a rise and then a whole host of sell calls coming in. Let's get to Jake's N. J. Kumar, MD and Group CEO, Prime Securities, with us this morning. Jake's, always a pleasure to have you on. Are you looking at what's happening in Beijing very closely, or wondering what's going to come next from Delhi in terms of, I don't know, broadly calling it austerity measures? What do you think is the biggest factor to look at right now?
Well, I think the one factor that I'm looking at is the long bond in the US. The 2-year has just about inched up to a new big figure. The 4.4% has been breached on the 10-year. And we have a situation where the 30-year has now gone above 5. As markets feel more and more comfortable at these levels, we have a big risk that refinancing becomes a huge issue and a real issue as far as the US markets are concerned. So to my mind, that's the one point that we need to look at. And every time these levels have been tested in the last 18 months or 12 months or thereabouts, you've had some policy action, some talk of de-escalation, and some almost, 1 to 2 week kind of measure which cools yields down to 10, 15 basis points lower. To my mind, that's the one thing that we need to look at, because those are, the bond markets in the US are the deepest, most liquid, and almost most independent markets in the world. You can't talk them up, you can't talk them down. They react to what they see on the ground, and I think that's the single biggest important thing to look at.
What is the indication that you're reading from how bond yields are moving, Jakes?
I think they are pushing for de-escalation. They're pushing for some stability in the Middle East. And, whether it's Scott Bessent or it's Trump, I think if there's one thing we can't take away is their absolute riveted focus on the bond yields. And my own assessment is that China may well provide that magic wand, if you will, or a platform or a shoulder on which you can actually talk about a de-escalation. You can talk about some measures which will bring down, whether it's actually opening up the straits, I'm not sure. But yeah, to some extent, they will get opened up. And I think China may well turn out to be that pundit which Pakistan has been unable to perform the role as.
Jakes, good morning, Neeraj here. Is the deck stacked against India for the time being, per se? Because despite the valuation drop off, I mean, and despite the parabolic performance of South Korea, that's the term we're using this morning for a lot of things, it still trades at what, high single digits or very low double digit multiples, and the earnings growth is real in those AI plays as well, right? So crude high, AI not a play. Are we sandwiched in right now in an unfavorable place, and will it take some time for us to move away from there?
If you look at markets from a allocation perspective and a flow perspective, maybe that's true. But what's really happening is that foreigners are only able to sell what they own, which is heavy on financials, heavy on technology, etc. My assessment is slightly different, which is that we are products and animals of the Indian market, and we need to discover spaces here that give us comfort and, in fact, can actually feed off the tailwinds coming from, unintended as they might be, feed off the tailwinds from whatever is happening right now. And we'll talk about a few of those. But I think the real issue here is not so much Korea and others. The allocation money isn't coming in here because foreigners have lost, whether it's on the equity markets or in the currency market or in the bond markets. They've actually been losers everywhere. So from that point of view, it seems like it's like a climaxing of all these multiple negatives, if you will. This can last a little longer, sure it can. But I think it's also true that at 96 rupees to a dollar or 112 rupees to a euro, there are tremendous, non only currency related exports sectors that are there. I think good quality engineering exports. We waxed lyrical on pharma, especially generics. But even today, whether it's in terms of textiles and others, the adjustments that take place in terms of the contract terms almost happens instantly. I mean, you just have to go back in time to see that at 60 rupees to a dollar, the margins that they talked about with growth in the IT services, today they're talking about the similar margins and declining, and the businesses got disrupted. So I think as I've always maintained in the last now few quarters, that pharma could well be the next IT in terms of having those characteristics and growth, but without the headwinds of a disruption that IT is witnessing. That's one. Engineering exports, I think PLI schemes, those industries that are looking to manufacture domestically and export could be beneficiaries. I'm not of the camp that necessarily says that because the rupee is weakening, that exports will take off. But sectors that have been exporting consistently, and there are large pharma companies that are doing close to 25, 30,000 crores of exports and more, are actually significantly benefited by the tailwinds of this. Telecom infrastructure, big beneficiary of this. Yeah. Telecom infrastructure, especially expansion of some of these infra players into other parts of the world like Africa, etc., or whether it's cybersecurity, data centers. Wow. So there are themes that are beneficiaries of this, and so I don't think there is all doom and gloom.
Yeah. I kind of understood that. Jakes, just a disclaimer, the stock of the morning for the wrong reasons, unfortunately, is Keynes Tech because of all that's happened. So the con call is on, so we'll have to cut to it at some point of time while the conversation is on. But having said that, interesting point that you made about pharma, and just want to pick that, right? Not getting disrupted, but you were amongst the earlier identifiers of CDMO, right? And that's done really well. Is that the theme that plays out, or do you believe generic exporters now stand to benefit? The likes of Cipla, Sun Pharma, etc.
I think generics more than a CDMO, because I think a lot of manufacturing is actually now slowly moving into the US markets also, given certain incentives, etc. This may come back to haunt or pare down some of the CDMO businesses, especially over the next 2 to 3 years. So I think generics is the way forward. It's also price competitive. It's also being able to, supply medicines at an affordable price to the countries that are importing. So given that, that's of course a theme we've played out. Its weightage is still low. It's underinvested. etc. So given all that, I think we are in a situation where we could see a scenario where the weightages for some of these companies will continue to grow, and we could have a scenario of this being an unexpectedly big beneficiary. But the unfortunate thing of what has happened is oil has got reset to an 8500 scenario rather than 65 to 80. Interest rates in India have moved up. Exchange rates have moved up significantly, against the Indian rupee. So some of these are structural changes that have happened, which I think sectors like I talked about could benefit hugely from. So, we need to be sector specific, maybe even company specific, far more than we've ever been. This is not a market where you can say that allocations will increase and MSCI flows or others will come through. I think we may still be a few quarters away from that.
Okay, and that's exactly what I want to ask you about, Jakes. Alex here, morning. From what you've described, it's not all gloom and doom, and there are pockets of relative strength that you can pick. But let's face it, there are macro challenges at this juncture that could potentially get worse. And ultimately, for a large part of the last 1 year, one of the major challenges we faced as a market is a sentiment against the up move, right? To say that it's not justified more than anything else. And so therefore, if the view on the India market as a collective remains negative for the next 3 quarters because of macros worsening, even those pockets that you've identified that could potentially benefit on the earnings front may not actually see a significant up move. Should you be prepared for that?
I mean, it's a generic question, and pardon the pun here, but my feeling is that some of these macro factors are way outside the pay grade of anyone to predict or have any control over. So I think no point getting into that. I think we are seeing the macro worsening already playing out in terms of the currency, in terms of interest rates, in terms of the FI being at 2-decade lows, etc. So it could play out a little longer. Nobody can call a bottom in that sense. But I think local liquidity...
Jakes, I must apologize, but we want to cut to the Keynes con call, because that is the stock of the morning. We need to hear what the management's saying. Let's just go across and listen to that.
We respect those expectations. We are conscious that when a company scales at the pace we have scaled, execution has to mature equally fast. That journey of institutional strengthening is underway, and we remain fully committed to improving consistency, predictability, and delivery against the confidence placed in us. There has been some top management restructuring and role realignment in this phase. Such transactions naturally take some time to settle, particularly in an organization that is expanding across multiple technologies, manufacturing, and strategic platform simultaneously. However, these changes are intended to sharpen accountability, deepen execution ownership, and build a resilient operating architecture for the next phase of scale. The organization is adapting quickly, and the leadership team is fully aligned to match with the market expectations. In core EMS as well, our diversification strategy continues to hold strong. As discussed in the earnings call, growth is increasingly broad-based across automotive, EV, industrial, aerospace, and railway-related segments, with lower dependence on any single business line. This diversified vertical mix gives us confidence that near-term volatility is one area will not define the long-term trajectory of the company. I am pleased by the trajectory of our 2 new growth engines in OSAT. Unit 1 is fully operational, and Unit 2 is in commercialization by Q2 26. These business strengthens Kaynes further by deepening backward integration, adding technology depth, and expanding our presence in high-value manufacturing. In OSAT, the order outlook for both the current year and the medium term remains strong, with revenue visibility of over INR 25,000 million over the next 5 years.
So that's the management of Kaynes Tech. The stock is down about 17.4% at the low point of the day. Jakes, you were making a point and we had to cut you off. Please do complete that point.
No, I was just saying that one of the fallouts of this has been, at least for the medium term, a near structural re-rating in 2 or 3 levels. So where crude used to trade in the 65 to 80 range, it's now moved into the 8,500 as being the sort of range at which, especially if you build in some discounts, etc., that you can get. Number 2 is interest rates, which should have been logically tending towards the 6s, is now comfortably above 7%, the 10-year treasury in India. And the currency is now, instead of being in the mid-80s, and in fact more, should have appreciated with a weakening dollar overseas, we've actually depreciated against every currency in the world. So there's been near structural de-rating of some of these aspects. Having said that, one of the things that's happened is that the banking system now has got tremendous amount of capital that's walked in. Banking, when I say that, I mean banking and NBFC put together. You know, the spate of deals announced aggregate almost $8 to $10 billion of equity capital. And if that were to get leveraged, even 4 to 5 times between the NBFC and the banks, which is closer to 8 to 9 times, you're talking about nearly $60-65 billion of fresh lending that can take place over the next 18 months, which means credit availability could be dramatically higher. It's unfortunate that the credit availability is happening in a scenario where interest rates have moved up. It's also happening at a time when actually foreign capital through the FDI route has walked into these spaces. Most of this is international PE firms, banks, strategic investors, etc. So there is that disconnect that maybe we can take some solace from the fact that the same oil price shock, if it had happened 5-7 years ago, the disruption or the impact on the GDP could have been higher. But because of our dependence on solar or wind or cleaner forms of energy, we've actually reduced that impact on GDP. So now credit availability is there in the system. If interest rates were to even hold at these levels or come down, I think reinvestment, which is what even the Prime Minister talked about and some of the industry leaders have, reinvestment or investment thesis itself should actually take off. So I am firmly of the opinion that what has happened may be more than just a hiccup. It's actually a bit of a structural negative that's crept in. But it's also happened at a time when equity capital on the FDI side has walked into the banking and financial services space, which is not a bad thing from an investment point of view. I think a lot more PLI schemes, balance sheets, for instance, of corporates are far, far better.
Sure.
So there are positives here.
Yeah.
So we'll need to play this out and go sectorally from a stock picker's perspective.
Okay, speaking, and you were referring to the banking and financial services space. So let me ask you this. You were talking about interest rates. There's now one view that you could see interest rates go up by as much as 50 basis points in the next cycle, starting from December, not very soon, but implications for the BFSI, and you're talking about earnings that could actually have an improvement on the NIM at least.
I would say that interest rates actually, in a sense, get front-loaded. So movements that you see overseas in India are a function of not so much a demand or supply of money in the short run as much as sentiment. And people move quickly into these markets which are deep and liquid. So can interest rates move up another 50 basis points? Sure, a lot of things can happen. I am actually in the camp that 7, 710, 715 may be well the top end of the range for now. And were resolutions to happen in the Middle East, we could actually have the interest rates, in fact, logically, they should come down to the 6.75, 6.8 range. So, in fact, I'm of the camp that we may be at the top end of the interest rates, at least in India. And given refinancing, $37 trillion of debt in the US, I would be of the opinion that they can ill afford any kind of escalation in yields there. And this would now have to be done in terms of hard policy and hard, whether political steps or in terms of economic steps. You can't just talk down interest rates. So, whether Wash comes in and tries to just cut interest rates, which I don't think will be immediately doable, but ultimately steps have to be taken to de-escalate the Middle East for interest rates to come off. Otherwise, you could be talking about a near permanent, at least for the next 3 to 4 quarters, hike in interest rate levels, which could dramatically impact everything, including the AI mania that's going on. So please understand that many of the Mag 7 companies and some of the new companies, the infrastructure space there, are now beginning to borrow. Not beginning to, they've been borrowing for a while now. Borrowing costs have gone up. In their bid to announce orders, they are dramatically expanding their access to the debt markets. And if interest rates go up there, I don't think some of these borrowings will be tenable. So right now, the markets are only reacting to order wins and order giving. And some of this could also be circular, as multiple erudite WhatsApp forwards have indicated, that some of these could be A, giving orders to B, sure, B to C, and C coming back to A.
Yeah.
So keep that apart. So I think we may be at a beyond a mania level there. Valuations will drop off. But in India, which now it's probably fashionable to say that we've not been part of the AI move and therefore, we've not attracted capital. That's not true. People, I think a lot of activity in the private space in terms of FDI is happening. Situation is not as bad as it's been made out. But of course, the warning and the cautionary note which has been struck by everybody, especially and including the Prime Minister, indicates that if we tighten our belt, we in a sense go back to the old Indian habit, the old Indian, pardon the sexism here, the housewife habit or the housemaker habit of saving in difficult times. And I think that housemaker approach may well be the way forward, both in terms of portfolio construction and otherwise. It doesn't mean you put all the money and put it under your bedside when you go to sleep. It just means you're a little more careful about where you spend.
Yeah.
And I think there's nothing wrong with that in my opinion.
There isn't. Absolutely. Jakes, as always, a pleasure speaking with you. Some sound advice there. Thanks so much for taking the time.
Thank you.
All right, you might have seen some of those visuals of the Foreign Minister or External Affairs Minister Jaishankar, and he's actually meeting with key leaders. Among them, you had the Foreign Minister of Iran, Araghchi, that was in frame out there. And this is, of course, at the BRICS meeting. We'll get you more details as they emerge. We have to slip into a very quick break. We'll be back on the other side with more, so do stay tuned.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी
India's unshakable news habit. NDTV.com is India's #1 English news website.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices.
And here's where you can watch us.
Welcome back. You're watching India Market Open, and you've seen a bit of a sell-off from the top. We're hovering very close to that 0.4% higher mark for the Nifty 50. 23,500 is what you're flitting with at this juncture. And the broader markets have actually lost ground and then come back just a tad bit. So the small cap index trading with cuts, the mid cap index coming back to the green, up about 0.2%. Let's zoom in on Sharda Cropchem. On the back of its earnings, it was a strong set of numbers, volume-led growth and sharp margin expansion as well. We're going to speak to the management about the outlook going forward and whether the trajectory in Q4 can be sustained in the new financial year. But before that, let's set the context with Varsha. Varsha, what are you picking up from the numbers?
Well, overall a strong set of numbers which was driven by, volume, and we have seen the EBITDA margin expansion as well, also as guided by the management in the last con call. Better product mix and cost control has led to this expansion in margins. Well, West Asia crisis, is one of the key highlighting way, because that's the impact that we want to see how this is going to impact Sharda, because higher freight and supply disruption can impact margins and deliveries. Well, onto the adverse weather impacts from output is also one of the key aspects that one should also watch out, which may lead to weak agri demand and lower agrochemical volumes. Onto the cabinet MSP, where the higher minimum support price has been set to support farmers' income, which will boost crop protection demand and is also positive for agrochemical companies like Sharda. So overall, a lot of triggers, yes, working for the company. We need to see how FY27 will look like. Will it be a volume-driven growth or a pricing-driven growth?
It's actually a very good question to start with. We've got Mr. R.V. Bubna, who is the Managing Director of Sharda Cropchem, joining in. So thanks so much for taking the time and for speaking to NDTV Profit. Let me start with that question. It's been a good Q4, but everyone's worried about FY27 because there are so many headwinds coming through. How much of the growth is going to come from price and how much of it is going to come from the product mix shift?
More better growth will come from the product mix shift and also partly because of the price.
Okay, that's what panned out in the fourth quarter. Can you explain in FY27, just give us a sense whether this is going to accelerate and what are the kind of numbers you anticipate on account of this?
Sir, I would hesitate to use the word accelerate. I would say it will grow.
Okay, so if you say, so how much, okay, say if you say that pricing is something that is sustainable, you have the MSP that has been announced, right? Are you worried at all about the fact that this is a year that is going to have a massive El Nino effect? There could be a headwind with regard to domestic demand. Is that something that worries you at all?
Sir, it does not worry me at all.
It does not
because we are selling our products to about 70-75 countries around the globe. This El Nino may affect few countries, but that will not affect our total business.
Yeah, I saw that. In the fourth quarter as well, you have pretty strong numbers coming through from Europe. Your revenue was up 20%. The contribution now increasing to as much as 70%. You have rest of the world revenue that was also up 77%. So that's quite considerable. Fair point, Mr. Bubna. I wonder about margins. You've had pretty strong margin growth as well. How sustainable is this 23 to 24% margin mark? Is this the peak or the new normal?
It is sustainable.
And what are
I won't say it is a peak. I would say it will become normal, but nobody can predict about the future more accurately.
That's fair. So freight costs, etc. You're talking about the West Asia crisis, Mr. Bubna. It's affecting a lot of entities that have business in countries around the world, and you pointed out 70 plus countries, right? So what is the kind of impact that you're seeing on freight?
Not much. I would say almost negligible. Because freight constitutes a very small percentage of our total cost and prices.
What is the percentage of...
It's very easy to pass it on to the customers because they are fully aware what is happening around.
Understood. So just for our understanding, can you tell us what the percentage of impact has been, and you've been able to pass it on already? Have you done so in price increases to your export customers?
Sir, we do it every day.
Okay.
I won't say that. This is a very normal process for us. And I want to tell you one more thing. Our products are not freely tradable products. They have to be registered, and we have limited competition, and our customers are fully aware of it. They have to source the products only from registered sources, and registered sources are limited.
Absolutely, Mr. Bubna. So things are looking up in FY27. You say that the margins can be sustained and the business looks good. Thanks so much for taking the time and wish you all the best in FY27.
Thank you so much, sir. We need your blessings and good wishes.
Absolutely, sir. Let's go back to the earnings con call of Kaynes Technologies, the stock under pressure today. Let's listen in.
Yeah. See, what happened is while we have got the indication from an LOI from the customer, we started ordering the material. And in fact, if you ask us, we have started even the pre-manufacturing activities of this, which gave us the confidence that yes, we will be able to deliver. If you see, more than 50% of the manufacturing of those activities also has been on the pipeline. As I said, it is not a denied order, it is a delayed order. We sincerely apologize for that this has happened. But I'm sure that you will all trust with me that it is beyond our control. And going forward, we will take this input in terms of committing for the future numbers. We are committing for our growth based on what market can pull in. And one of the reasons that you will see that going forward, we will be better is, like when our Executive Vice Chairman said, our dependency on every vertical, we are bringing it down. So we are taking into many other verticals so that the impact on one business will not have an overall impact, but we will definitely keep this in mind and make sure that in future we will be better prepared for mitigating these risks.
Fair enough, your answer. Sir, yeah, please.
Our type of business, we also depend on customer inspection, accepting it. I hope you all appreciate that.
Sure. Sir, which is a fair enough point for the P&L side of you. But sir, OCF 600 crores of negative. I think that is a bigger disappointment, especially when you kind of guide that you will be just about neutral or slightly negative, sir. So you would have known that, and sir, why have we not been able to turn that around, sir?
Okay, I think it's a fair question. The operation cash flow, I think there was a little misunderstanding. I was also in the call during that time. The two cash flow that we were talking as a standalone EMS business, I wanted to bring it to all your notice that in a standalone EMS business, our cash flow was 250 crore positive when compared to 65 crores last year. However, as a consolidation entry, 65% of our revenue today comes from EMS business where we are cash flow positive. The metering business, which is a specific model, this is the first full year we have taken and we are getting matured into this business. One of the things that happens is, this business model is a strategic acquisition for Kaynes in order to make ourselves getting matured towards a product-based company rather than an EMS assembly company. I just want to bring it to all your notice that prior to acquiring metering company, we have been supplying them the EMS business. So the entire revenue is not new to us. At most 50% of the revenue as an EMS business we have been supplying there. But this is a unique acquisition where it is not only making the meter, but also installing the meter and also maintaining the operation maintenance of providing the software. We are the only company which has got a unique combination of all the three, and that's the reason for why Kaynes has committed and moved into this acquisition, which has definitely brought back the good amount of insights on product development, as converting ourselves Kaynes into a product company and putting us maturing into launching no more new products in that segment, like whether it be a water meter or gas meter, we are on the pipeline. Having said, whereas 25% of the business comes from EMS, where the receivables is 67%, we have worked out a strategy as a management team on how to mitigate this. We've been working with various organizations to see that how this business model can be mitigated. Rest assured, ladies and gentlemen, we'll be able to bring it back at least to a level of reduction. I think the inflex point has stopped and we'll come into the reduction, and we will come back in 3 quarters with a positive results on specific this entity. But on EMS business, we have demonstrated our ability of how to bring back the next days by both working on supplier side and also on the customer side, and brought it back. The numbers are available in this. I think you can see from our opening receivables of about 399 crores in the EMS business. By end of the year, 379 crores. But the end of the year, we have come to 399 crores. Even though we've grown the EMS business at 30%, our outstanding or receivables have gone up only by 20 crores, which clearly shows how we could be able to manage this business efficiently. Ladies and gentlemen, trust us, in the years to come, we will manage the metering business and demonstrate our ability to manage the product development, which is going to be a strategic shift in the Keynes organization from moving an EMS provider to a product provider.
Okay, so certain messages being sent out to the analyst community asking to look at the next 3 quarters and the trajectory on certain business lines, EMS in particular, but the stock is still pretty much at the low point of the day. That brings us to the end of this edition of India Market Open, but I'm sure that you've got questions on individual stocks and you can ask them on the show that is up next. That's called Ask Profit, and stay tuned. This is NDTV Profit.
केसरिया से मन जोगी हुआ रे से मन जोगी
हर पल मनाओ केसरी त्योहार विमल।
से मन जोगी
हर पल मनाओ केसरी त्योहार विमल। बोलो जुबान केसरी।
India's unshakable news habit. NDTV.com is India's #1 English news website.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information blitz into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, no hype, just sharp takes on what to watch next. Editor's Cut, every Friday, 3:30 p.m. only on NDTV Profit. Excellence measured by those who built it. Presenting the jury of the NDTV Profit Business Leadership Awards. Sunil Bharti Mittal, Chairman of the jury. Founder and Chairman, Bharti Enterprises. Noel Naval Tata, Chairman, Tata Trusts. UK Sinha, former Chairman, SEBI. Kiran Mazumdar Shaw, Chairperson, Biocon Group. C.S. Sethi, Chairperson, SBI. Jayant Sinha, former Union Minister of Finance and Civil Aviation. Ramesh Damani, Value Investor and member of BSE. Cyril Shroff, Managing Partner, Cyril Amarchand Mangaldas. NDTV Profit Business Leadership Awards, honoring excellence, coming soon.
Economy, business, world, technology. Noise filtered, numbers decoded. Insights that rewire your worldview. From governance to growth, we connect the dots. Your daily edge, your global advantage. India.
Welcome back to NDTV Profit. You're watching Ask Profit, a show that solves all your stock-related queries. My name is Puneet Zaveri. With me today is Soumya Sarkar, and we also have Kush Bora in the studio today for solving all your tech queries. Kush, thanks so much for joining in. We are also being joined very shortly by a fundamental guest, Mr. Chokalingam, who will be giving us all your views as well. And here he is, the man himself, giving us his stock-related queries today. But when you look at the markets before we start taking all your stock-related queries, it's been kind of like a decent run today, almost 100 points on the Nifty 50. Been sluggish. 23,300 continues to be a stubborn level that we continue to monitor at this point of time. But overall, broader market led by earnings is also the other key factor to watch. Now, we've seen in terms of the heat map for the Nifty 50 that one of the key stocks today was Cipla. The numbers were weak yesterday, as expected, came during market hours. But when you look at the heat map, that'll give you that perspective for the other gainers as well. So you've seen that Cipla continues to be one of the biggest gainers for today. You've also seen that apart from that, of course, the commentary driving in for Cipla, but the Adani group of stocks continue to be the other top gainers for the Nifty 50. While we've seen tech yet again bearing the brunt of the bottom. So you've seen HCL Tech, you've also seen Infosys and TCS being some of the key losers in today's trade, while Eicher as well as Maruti, those are a couple of stocks are also down in trade today, but seeing a green skin largely positive at this point of time. Sectoral heat map also gives you that perspective where you've seen yesterday as well that the Nifty Metal continues to be the other one that's rallying almost, and the top gainer for today, up 1.6%. While the IT is down almost 2% now. Nifty Realty also down in trade, while we are seeing some positive move on healthcare and the pharma sector. The advanced decline ratio, though, this one has been a very choppy one since the trading session started. You've seen that in terms of the advances, up almost 1200 at this point of time, but the declines have now, so you've seen a crisscross pattern coming in there. And the same visible on the BSE 500 as well. Some movers that are doing well in trade today, some have been led by earnings. Keynes Tech continues to be one, which is a big casualty right now, down 15%. Balaji Amines, on the other hand, is up 20% at this point of time. NLC India up 15%, while Alkyl Amines is the other player, up 12.3%. So Balaji Amines, led by earnings, is doing well and taking along its peer with it as well. But let's go across and start taking your stock-related queries, and it's the first one from Prashant, and this is pertinent right now. His question is on Dixon Tech as well as Keynes Tech. If it's a good time to hold for the next 2 to 3 years, and Kush, I'll come to you as well for a view. But Mr. Chokalingam, weak set of earnings for Keynes yesterday. Dixon also wasn't the greatest, but you saw the commentary. Potential Vivo JV also, those comments I think drove the markets. What's your view on both these stocks now? How are you viewing this space?
Yeah, this is a problem with these kind of fundamentally sound but strong momentum stocks. When any negative development happens, they crash. So that's why I stay away. But then that is also not a perfect approach, because these are the stocks sometimes create wealth also. Now, coming specific to Keynes, I looked at the number. Operating profit growth is only 15% year on year, despite sales growing at 26%. So there is a pressure on the margin. So my only point is that should we want to pay more than 50 PE when the profit is growing only at 15%? And so therefore I see some more room for correction in Keynes. Similar is a view for Dixon. It may not fall badly, but it might take more than a year to give a meaningful reward from current level. For both, the only one concern is that the L&T giant is getting into EMS business. I think once they enter, it's going to be very tough for other players, considering the balance sheet size and experience of L&T and the success rate of the new business they launched in the recent times.
Got that view, Mr. Chokalingam. So, Kush, most certainly on the fundamentals wasn't the strongest. So what's on the view on the tech on the charts right now? First of all, very good morning, guys, to Mr. Chokalingam and viewers as well. There's a long-term double top formation on Cairns. That's been a problem. It's given up those gains massively from 8,000, 1,700 odd levels. The neckline support for that actually came at about 3,800. That's also been broken. Immediate support at 3,300, but with the kind of ferocity with which it is falling, I won't be surprised if that is also taken out. And to 2,800, that's the level to watch for on the downside. Dixon, on the other hand, is consolidating, awaiting a breakout, but if you have to pick between the two, obviously Dixon makes the cut, but here too, because of the missing momentum, I wouldn't really buy into it right now.
But you said 2,800 on the lower side for Cairns, and that's a near term that you could see that stock going there as well?
Absolutely. See, because 3,300 was the recent lows that it tried to...
and then it bounced back.
It rebounded, right? Correct. But this is the third, in fact, the fourth attempt at holding on to that level. Now with the kind of news flow coming in, the volumes on the downside and market being what it is, market is not going to reward. Any kind of such news or such actions. So I think 3,300 breach is quite likely.
Yeah, got it most certainly. Well, it's a difficult one to imagine as well for Cairns Technology. Stock was at almost 7,000 just a year ago. 2,800 could be one to watch out for. But let's go across and take our first caller for today. This one's coming from Gurugram, and Manav has a stock query for us. Manav, very good morning. Welcome to Ask Profit. What's your query?
Hi, good morning to everyone. So today I have a query on DLF.
Okay.
So I've been holding these 50 odd shares for a little more than a year now at an average price of 730. So yesterday or day before the earnings were out, and the revenue was also down by more than 40%, and the profit was also like nearly flat on the flattish line. So would it be advisable to to hold on for another 2 years or maybe more than that period? I have no issues in holding on, or should I book losses and move to something else?
Got it. Mana, very pertinent question as well. Mr. Chokalingam, what's your view on DLF? Because as he rightly mentioned, has been sluggish, and but in terms of collection and pre-sale, is the only one, right, which matches both of them. But what's your view on the stock now, and should he buy? Given that it's at he bought it at 730, so is it a good time to average?
I also looked at Q4 results. It's a little disappointing, but one fact is that sometimes a DLF results, have a wide volatility on a quarterly basis. So that should not be taken as a, guiding force for its medium to long-term growth. Because if you look at last 3-4 years, on an annual basis, it has reasonably done very well, and stock price also corrected a lot. So I am afraid that it may not give a very attractive return next 6 months or even 1 year, but beyond 1 year it can definitely give, because it's sitting on a lot of land. Through subsidiary, it has got a leasing business model, which is a play on inflation. As inflation rate remains positive, the leasing rental income will also keep growing. So I find it quite attractive for medium to long term, but not expect much return within a year's time.
Got it. Well, that's the view on DLF. It's down almost 20% in the last 1 year. So it comes at a very interesting juncture, this question as well. But Rohini from Bangalore has the next question on SBI. Now, she's holding shares at 1,043. And Kush, of course, sitting in losses right now and asking a 6 to 12 month view, but she's asking a chartistic view. What should she expect?
Yeah, so you can hold on to this one. The stock's actually, yes, given up some gains, but if you see the last 4 sessions, that 975 support zone that we spoke of happens to be a technical support level, also the 200-day moving average. Also on the morning show, we've spoken about this a couple of times. So here it's consolidating, and probably a lot of corrections already done. So could remain under some pressure, but with a 6 to 12 month kind of a horizon, I think you should continue holding on. Stop loss on this one, 935.
Right, an important flash coming in. In fact, Siemens' parent company yesterday reported their numbers, and in the conference call, the management has clearly said that they're looking India growth at around 21% for the March-ended quarter. Now, do remember that the street estimates for Siemens for the March-ended quarter estimated a growth of just 6%. So quite a strong growth is what the parent company has reported for the India business. Mr. Chokalingam, any view on Siemens India, or would you want to stay away from it given the fact that the valuations are quite on the expensive side?
But definitely valuations are expensive, but unfortunately or fortunately, it always remains as a very costly stock. Rarely the valuations swing badly. So with a small correction now, I would say that it is better to hold for a medium to long term, because the Indian stock market also now focusing more on power and other infra valuing better as compared to the traditional sectors like IT, FMCG, etc. So I would give a hold recommendation for medium to long term on Siemens.
Right. The next is a caller query coming in from Hyderabad. Anjali, you can go ahead and ask your query.
Hi, sir. Good afternoon to all of you. Actually, I'm having a Oracle Financial Services holding 110 shares at the price of average 8,200. So shall I add further, and what is the support and resistance and long-term and short-term view on this? I wanted to check with Kushbura, sir. Actually, all the analysts are good, but I have been waiting from last week. I missed my call. So please, ask Kushbura, sir.
Okay. Kush, any view on Oracle?
That is so sweet of her. Anjali, thank you so much, for those lovely words, for those kind words. And I'm so sorry that you had to wait for one entire week for this query to be answered. But that's really sweet of you. For now, I think you should continue holding on to OFSs. In fact, in the entire space, this is a standout stock. Yes, I know you're probably hurting because you saw those 10,000 odd levels on that stock, 9,900, and now it's slipped quite drastically. But if you see the fall has been on very thin volumes. So I won't be surprised, once this fall stabilizes, the stock starts to move up again. So my suggestion, don't look to average, as you would have probably guessed, I will perhaps be saying, but hold on to this, keep a tight stop loss at 8,450. That's the level. Even if the stock goes to those levels, you'll still be making profits because that is above your buying price, right? But on the way up, the stock has a good potential to go to 9,300 and 9,600 levels once again. So my suggestion, hold on to this, don't average, keep a stop loss at 8,450.
Got that view, question. Definitely one of the most, active stocks at this point in time in investors' portfolio as well. We've been getting so many queries on this one. Has given decent returns for investors who've held on to it for some time. The next one coming from Vijay from Chennai, Mr. Chokalingam, he wants to know between HDFC and SBI for the next 1 year, which is a better pick, or would you suggest that either of those can be invested in equal proportion? What's your view?
Right now, post results between HDFC and SBI, I think SBI can give better return in 1 year because SBI is growing its credit much faster than HDFC Bank, and post correction it's also available at attractive valuation of 1.7 times as compared to HDFC, which is more than around 2 times. So in the short to medium term, SBI will do better, but for a very long term, HDFC Bank will do better.
Got it. Well, that's the view from Mr. Chokalingam. The next question coming in now, it's on BEL. Kush, our viewer wants to buy into these shares at 415 odd levels, and what would you recommend? Is it a good time to add?
Already bought it or wants to buy?
Wants to buy.
Oh, not a bad idea. 415, very good levels. I'm sure they're very good with their analysis on this one. Multiple technical factors emerging at that point. So kudos to you on that. 415 is a good level. Only hitch there is that the momentum is missing. If you have seen in the recent past, the stock has actually not crossed those 455, 460 levels meaningfully, seen rejection from there. But if you're playing for those kind of returns and those kind of levels, then 415 is your ideal level. I would, however, suggest a stop loss on the way down at about 390, 395 odd levels. So the risk reward ratio becomes attractive. Immediate targets would be on the upside 445 and then about 465. So yes, when you buy at 415, the stop loss at 390, 395 zones, risk reward ratio becomes attractive, but you might want to exit at those levels because it's been taken some time or rather some effort to cross those levels.
The next query is coming in from Raj from Bangalore, and it's on Tata Motors commercial vehicle. The company reported its numbers yesterday. They were a bit cautious on the outlook. Now, Raj has around 550 shares at a price of 410. What's your technical view on this, Kush?
I'm going to have to suggest an exit on this. The stock had run up quite a bit. It is seeing selling pressure. Yes, it has seen some recovery on an intraday basis, and it's not too far away from your buying price. So I'm assuming that the loss is not very deep, but the selling pressure continues unabated. And even now, after having fallen so much, the volumes on the way down are still relatively high. So my suggestion would be exit right now. Maybe you can consider again at lower levels.
Got that view, Kush. The next question is from Mohit, and it's an interesting one. He's asking if what are some of the correct time to invest into the energy, power and the coal space for the next 2 years. Mr. Chokalingam, what would be your pick?
Coal space, yes, Coal India, if somebody wants to invest for beyond 1 year, because a phenomenal amount of money being spent on expanding the coal capacity and also renewable energy capacity and also getting into coal gasification projects. And not only that, it's getting into critical minerals as well. And also the management has proposed to list another one or two companies in the current fiscal that will enable Coal India to maintain, good dividend yield also. So short term, there is a concern. Q1 results may not be good because of recent cost hike and management commitment not to pass on fully to the consumers. But if somebody wants to wait beyond 6 months, this is the one good stock. Power stocks, most of the power stock, energy stocks have rallied. One can wait. On declines, one can consider Tata Power.
Okay. The next query is coming in from Gautam. He has 10,000 shares of Jio Finance, bought at a price of 300 rupees, currently sitting on a loss of around 20%. Kush, should he continue to hold this counter or sell?
Is there a time horizon that he's mentioned?
12 to 18 months.
Yeah, then you can continue to hold because yes, the near to the medium term structure on this one is a little iffy. The stock has seen selling pressure, below the 20 and the 50-day moving averages. So all of those things not really working for it and, substantially low from his buying price. But given the kind of time frame that he has, there's a good chance that the stock could again find support at those 205 to 215 zones and, attempt a rebound. So with that kind of a time horizon, I would suggest a hold, tight stop loss at 205.
Got that view, Kush. But the next one coming in on Tata Steel, and the metal pack has been flying in trade over the last few weeks. Now, Bala Subramaniam actually bought into the shares at 156 and he's holding on to 70 shares of them. Mr. Chokalingam, he's mentioning that he's a long-term investor, but asking if it's a good time to book profits or continue to hold. What would be your opinion?
I believe it is a good time to book profit as it starts improving further from current level. The steel company quoting around 22 trailing PE is slightly stretched. And secondly, the rupee depreciation and war conflict in West Asia all contributed for steel and metal stocks to rise. But I think this is going to be temporary. I am very still optimistic. I believe within a couple of months, a conflict would end. Otherwise, the global economy will fall very badly. And therefore, when such thing happens, all this metal and steel will correct substantially. So therefore, my research view is sell on further rise.
Next query is coming in from Bindu from Hyderabad and it's on Sansera Engineering. She is holding 50 shares, bought at a price of 2,415. Should she hold more? Should she continue to hold, add more or sell? What's your long-term view on this, Mr. Chokalingam?
Long-term view is good, but I'm not comfortable with the kind of valuation of 53 PE on a trailing basis. So probably if it corrects at least 10%, then only I would consider Sansera Engineering.
Got that view, Mr. Chokalingam. The next one coming in from Anwar from Andhra Pradesh. He's bought 500 shares of Lenskart, Mr. Chokalingam, at 539. Asking if he can add more at the current range. It's not cheap in that sense, Mr. Chokalingam, and really you need to wipe your glasses essentially to look at that kind of valuations over the next couple of years, 3 years. Is this a business that you like? What's your view?
I can't like such company. That is my problem. So the investor should seek somebody else's review because hundreds of PE I normally don't touch.
Kush, you have a view because I know it's a very recent listing, but one of those investor favorite counters in that sense.
Yeah, I like your wordplay, by the way, on that. Very smart one and unexpected at that. You rightly said limited data, but from whatever data is available, 480 was a level it was trying to defend. Given that up, near-term trend has turned a little bearish. I wouldn't really stay invested in this for a long time. So I would perhaps book profits right now. Maybe at lower levels you can consider, but for now the trend seems a little bearish.
Okay. The next query is coming in from... he hasn't mentioned his name. It's Shrikant from Bangalore and it's for you, Kush. He wants a short-term view on Sirma SGS. He can invest up to around 4 lakh rupees in this counter. Should he do that?
Thank you, Shrikant, for that query. If you heard me on the morning show, I said from this entire pack, Sirma being the standout performer that it has been, remains on the list for buying. My only hitch here is that for the last 2 days, it's been falling. Today is the third day, and right now, as we speak, it is at day's low, which indicates that the selling may not be over. although the volumes on the way down are now starting to reduce, so they could be abating, but the price action is not suggesting such. So I would suggest wait up on this. Definitely the stock to keep on your radar, maybe around the 945, 950 zones. If it comes to those levels and halts, becomes a good buy. In that case, keep your stop losses at about 915.
Got that view, Kush. But let's go across and start the rapid fire round in this edition of Ask Profit. Viewers as well as Kush and Mr. Chokalingam, you know the drill. The first question, is it a right time to accumulate Texmaco Rail for the next 1 year is what Sanjay is asking. Mr. Chokalingam, would you recommend that?
Yeah, one can consider buy.
Padma from Bangalore is holding 152 shares of KFintech, bought at a price of 927, currently sitting on a loss. Should she continue to hold this counter for the next 2 years, Mr. Chokalingam?
Yeah, hold.
The next question coming in now, it's from Satish on MobiKwik. He's bought into this Kush at 229. But he's holding 5,000 shares and asking a short-term view.
Continue to hold. 180 is a strong support zone. If that is broken, you want to exit.
The next query is for you, Mr. Chokalingam. It's from Ramanna from Bangalore. He wants to know whether is it a good time to enter Voltam transformers for the next 1 year.
Yes, one can buy after a steep crash in the stock price.
Britannia bought at 5,350 and asking what's a good target price here, Kush?
A good buy price. I think you can hold on to this one. Prices would be 5,500 and about 5,650. But more importantly, a stop loss at 5,250.
Venkat Raman from Bangalore. The next query is for you, Kush. 500 shares is holding of SAIL and Tata Steel, currently sitting on a profit. Should he continue to hold or exit?
My suggestion, book partial profits on both of them and keep trailing stop losses about 3 to 5% lower from here, both of them.
Pramit from Pune is holding on to Infosys at 1353, question asking if it's a good time to buy the dip.
No.
The next query is from Surya Prakash from Visakhapatnam. He wants to know whether should he enter Tata Capital at current levels. Mr. Chokalingam, any view?
If somebody wants to hold for 1 to 3 years, yes, it's a great buy.
MCX Kush, is it a good buy for the next 2 to 3 months is what Viswa is asking.
Overheated. If you get it around 3,000, 3,050 odd levels, then yes.
The next query is for you, Mr. Chokalingam, on Balaji Amines. Rajesh Maheshwari from Indore is holding 85 shares at an average price of 2,485. He wants to know whether should he continue to hold this counter or exit.
I'm sorry, I have not analyzed the stock recent time.
Okay. The next one's on Vesuvius, bought at 522, Kush. Our viewer AK Bhalla asking a short-term view.
Sorry, what's the price? 582. 522. It's consolidating and right now in the middle of the range. I would suggest a hold, but a tight stop loss at 440.
The next query is for you, Mr. Chokalingam. Soumya from Bangalore is holding 30 shares of Kalyan Jewellers, bought at a price of 416 rupees. Currently sitting on a loss. Should she hold, sell or average?
One can hold. I mean, these stocks will come back after a year or so.
Ramesh wants to know a technical view, Kush, on Spark, Sun Pharma Advanced Research Company, is bought at 181. But would you advise to play into this counter?
You can hold because the risk reward ratio is extremely favorable. Needs to take out some key levels, but I would suggest a stop loss at 155.
The next query is for you, Mr. Chokalingam. It's on Zaggle Prepaid. Giridhar from Bangalore is holding 168 shares at an average price of 270. Should he hold or sell?
Hold.
Last query for the rapid fire on Motherson Sumi Wiring. Mr. Chokalingam, our viewers bought it at 44. And Ramesh is asking if he should buy more now at 39. It's not a cheap stock. What would you recommend?
If somebody wants to hold for 1 to 3 years, then one can buy. Otherwise, leave it.
Got it. Well, that is the end of the rapid fire in this edition of Ask Profit. But a lot more stock-related queries on the other side after this very short break. So do stay tuned.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी
Excellence measured by those who built it. Presenting the jury of the NDTV Profit Business Leadership Awards. Sunil Bharti Mittal, Chairman of the jury. Founder and Chairman Bharti Enterprises. Noel Naval Tata, Chairman Tata Trusts. UK Sinha, former Chairman SEBI. Kiran Mazumdar Shaw, Chairperson Biocon Group. C.S. Sethi, Chairperson SBI. Jayant Sinha, former Union Minister of Finance and Civil Aviation. Ramesh Damani, value investor and member of BSE. Cyril Shroff, Managing Partner, Cyril Amarchand Mangaldas. NDTV Profit, Business Leadership Awards. Honoring Excellence, coming soon. India's unshakable news habit. NDTV.com is India's #1 English news website.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets.
LIC Housing Finance is in focus on the back of Q4 numbers. Mr. Tribhuwan Adhikari, MD and CEO at LIC Housing Finance, joins in. Mr. Adhikari, welcome to the show. Always a pleasure to speak to you. This is Hiral on the side. My first question coming to you is, let's talk about the net interest margins, a 2.8% number in the fourth quarter. Sequentially, there is growth, but compression on a year-on-year basis. What's the outlook then looking like in terms of FY27?
Well, it's going to be a difficult to predict, actually, honestly, here at the moment now, with the West Asia crisis on, the economy under stress. You never know how these things are going to play out. Right now, what we are witnessing is an elevated cost of borrowing when compared to Feb and March. So honestly, going forward, we will have to see how the geopolitical and the economic scenario plays out, and then probably give you a fair idea. Yeah, for the quarter, I think I would hazard a guess and say that the margins would be between 2.6 to 2.7 for the quarter. We would try to retain it where they are. 2.68 is where we ended for the year. 2.8 is for the quarter only. So 2.6 to 2.7 is the guidance I'd like to give you for the quarter. And then when we meet again in July, let's see what the situation, the West Asia situation and the overall economic situation stands at, and then probably give you a guidance for the entire financial year.
Okay, so that's with regards to where net interest margins go, and it's fair to actually understand that yes, there is impact of the West Asia crisis, and that's what industries are grappling with to ascertain what the impact could be. The other concerning area that I see is in terms of the loan growth. Now, the annual loan growth, if I see for FY26, 4.2%, which is contrasting with the high double-digit expansion that has been reported across the, Indian housing sector. A 4% AUM growth is what you've seen on a year-on-year basis. I mean, analysts are saying that this could be a key overhang as well in terms of the stock. How are you looking at the annual loan growth rate and AUM?
Yes, honestly, 4.4% loan book growth, slightly disappointed. Beginning of the year, we had given a guidance of double-digit growth. But I had, at the beginning of the year, I had also said that the year is going to be very challenging in terms of competition, in terms of the rates at which we lend. And that is exactly how it played out. And in the beginning of the year, I had said that if I had to make a choice between book growth and protecting margins, I would prefer to protect the margins rather than going for a book growth. That I think we've been able to do that. Margins have been fairly, I would say, protected. Yes, slightly disappointing, was wanting more. Probably as a growth of around about 7 to 8% would have satisfied me. But in view of the intense competition in the market, you'll have to understand that LIC HFL, about 80% of the business 85% of the business we do is individual housing loans. And again, in individual housing loans, these are all prime customers with CIBIL scores of 750 and higher. And this is the exact segment which coincides with what the bank sell to. So our intention, competition is entirely with banks. Banks slightly advantaged with a lower cost of funds And in fact, the other part of it is that we borrow from banks. So basically, we are competing with our borrowers, our lenders, so as to say. So it becomes a little bit tough. But yes, in the fourth quarter, quarter four, we have been able to ramp up our business, and we've been able to show a 10% growth in business. The same has continued in the April month also, where we are showing a 20% growth in business. So hopefully this year, we will be able to overcome the shortcoming of a low book growth and come to double-digit figures.
Okay, so FY20.
Well, that was the management of LIC Housing Finance. Disappointing year in stocks, reflecting that underperformance as well. But on the flip side, though, Metropolis reported a very strong set of numbers in quarter four. And to just get a quick perspective, we have now been joined by C. Surendran. He is the managing director of the company. Mr. Surendran, very good morning, sir. Thanks so much for joining in. It's Puneet this side. Just in terms of your quarter four performance, we've seen a very strong growth in revenue, but the EBITDA growth actually has been much higher, almost 70% at this point of time. But could you give us some perspective of it? Was this largely led by volume growth, by upselling, by more expensive tests in that sense, seeing a much higher volume? Is that how you would describe the quarter gone by?
Good morning, Puneet, and good morning to all your viewers. On the revenue side, the upside that we got is largely on the basis of patient volume growth. We could almost get about a 10% patient volume growth in the last quarter, right? That's something which has really driven our revenue growth. And of course, please remember that we also had acquired entities this year on the numerator, whereas in the last year it was not there. So about 8 to 10% of revenue growth is coming because of the newly added entities. Right. So otherwise, organic business growth is about 15% and about 8% is coming from acquired entity. Let me clarify that. And secondly, on the margin side, see, remember last year in quarter four, we had a one-off. We had booked about 20 odd crores of expenditure on account of the money that we spent on acquiring 2 or 3 new entities. Right, so that came on the denominator. So hence, if normalizing that, normally you see about 30 to 34% of margin growth this year, but still 34% margin growth and a 23% revenue growth is a very strong performance and a good way to end the year.
Right. So was that, in fact, your EBITDA number, obviously it was aided, the number looks higher because of one-offs in the base quarter. But despite that, the numbers were much ahead compared to what the street house was anticipating. So is it because of higher specialized testing that has happened? Is this margin level sustainable even going forward?
No, so we have beginning of the year and we have initiated a lot of actions around correcting our margins and improving it further. Right. And what I can tell you 2 or 3 big items is like one, of course, we have stopped the rapid lab expansions in the last financial year itself, in the year before. And in the last 1 year, we did not add any new labs. So the erosion happening because of the new lab expansion is almost, getting over now. And that is aiding the margin for us on one. And second one is we have undertaken a lab platform change and modernization across all the labs in the country. And as a part of the process, we upgraded the lab platforms and we did some vendor consolidations. And in the process, we got some gains in terms of material consumption, which is helping us to improve the gross margins, right? So that's other sustainable action that we have taken in terms of getting margins better going forward. And also many other productivity initiatives in terms of automating our processes and digitizing our other platforms, etc., is reducing our spend on people, right? And all these put together, we are getting good traction on the margins, and these are all sustainable action, not one-time actions. So we hope to see the margins getting further improved during this year and the next 2 to 3 years.
Got it. So, Mr. Surendran, as you talk about the margins and the effort that's gone in, which will be visible in the next 2 to 3 years. What's your expectations for revenue then for FY27? Could we expect it to touch roughly around 2,000 crores? You're already at 1,650 odd. And do you feel that the margin growth will be coming in more from the specialty contribution, which is already at 37? Do you expect that to go in the medium term to over 40, 45%? So if you can give us just these two perspectives for now.
Well, I think the estimate that we have for the future is the next 2 to 3 years is like our revenues will definitely grow in the range of 14 to 15% year-on-year basis, right? That if you just to add that up, it may not reach up to 2000 if you the number that you put across, unless until we bring in another acquisitions in the year, which is very unlikely for this year. And as far as the margins are concerned, we ended the year with about close to a company level 24.5% and the group level. So we believe that we will be able to take up the margin to 27 to 28% in the next 2 to 3 years. In terms of the testing volumes, what we are seeing is the growth is coming largely from the specialty testing. The oncology segment and the neurology segment is definitely giving much higher traction. And we also introduced genomics in the last 2 quarters, and we set up 2 labs, one in Gurugram and one in Mumbai, our genomics labs. And we also started seeing good traction on the genomics side. The specialty testing is what is largely going to take the volumes up, and also the True Health, which is your preventive healthcare. That's also, continue to do well, which is in the range of 22% year-on-year growth. So these are the things which are going to help us in terms of, getting higher, revenue growth in the days to come.
Right. Thank you, sir. Thank you for joining us and giving us the way forward for Metropolis Healthcare. Well, that was the management quite confident on growth going forward. Well, moving on to our next query, that is a caller query coming in from Yogesh, from Jaipur. Yogesh, you can go ahead and ask a query.
Yeah, I can speak in Hindi also.
Yes, anything is fine.
मेरी क्यूरी है कि मेरे भी 500 शेयर आईटीसी के लिए और अभी मई 12 मई को लिए। ये पहले भी मैंने लिए थे 15 अप्रैल को, और फिर मैंने 16 अप्रैल को मैंने बेच दिए थे। 300 में लिए थे और 316 में बेचे थे। सेकंड टाइम आई एम बाइंग दिस थिंग। और अभी जो न्यूज आया है कि गवर्नमेंट कभी हर फिक्र को धुएं में उड़ता चला गया, तो धुएं में उड़ता चला गया, इसका मतलब आईटीसी इज गुड फॉर मी, दैट आई एम थिंकिंग अबाउट, दैट आई एम आस्किंग।
आपका शॉर्ट टर्म व्यू है, लॉन्ग टर्म सर?
मेरा लॉन्ग टर्म है, बट एक्चुअल में मेरे को शॉर्ट टर्म दे रहा है, दैट्स व्हाई आई एम टेकिंग रिस्क।
अच्छा, तो मैं कुछ से एक क्वेरी लेता हूँ। कुछ, आपका क्या व्यू है?
बड़ी इंटरेस्टिंग क्वेरी थी, आई हैव टू गिव हिम दैट। देखिए, स्टॉक फिलहाल वैसे तो कुछ नहीं कर रहा है, बट अगर किसी ट्रिगर से यहाँ पे कोई मूवमेंट आता है तो मेरे हिसाब से स्टॉक में इतनी क्षमता है कि 312 से लेके अबाउट 320 तक जा सकता है। अब अगर इनको इन लेवल्स के लिए खेलना है तो मेरे हिसाब से बिल्कुल खेल सकते हैं। उसके बियॉन्ड जाने के लिए थोड़ी मेहनत लगेगी स्टॉक को, तो यहाँ पे आप बिल्कुल अगर आपने बाय किया है तो होल्ड करें। 295 के आसपास का यहाँ पे सपोर्ट जोन है, बट जैसा मैंने कहा वैसे कोई ट्रिगर है नहीं, वैसे कोई मोमेंटम है नहीं, बहुत लंबे कंसोलिडेशन फेज में है, तो होल्ड का व्यू रहेगा 295 का स्टॉप लॉस।
Got that view, Kosh. But let's go across to the next question from Reenu from Bengaluru. Her question is on Cello World. Now, it's a stock that's continued to underperform over the last over the last 1 to 2 years. So let's pull up the 1-2 year chart as well, and it'll give you that perspective. Now, Mr. Chokalingam, she's bought it actually at 534. Stock's trading at 400 now. What would you recommend her for the next year or so? Because the growth just seems to be very absent, even when you compare it to DOMS that's been performing much better.
Yeah, unfortunately, on an annual basis, last 2-3 years, it's stagnating. Revenue and profit, not much growth. But that is partly in price also. So at around 28 PA, I would give a hold recommendation and sell hold.
Okay. The next query is coming in on Sandur Manganese. It's from Rajendra. He wants to know whether he's holding around 1,000 shares at a price of 240. He wants to know whether should he hold or exit. Any view on this, Kush?
You should continue to hold on to this one. It's had a good run. The resistance is actually at 235, and hence you're seeing the stock consolidate around that level for the last couple of sessions. I think a good clean break above that will push the stock to upward trajectory of about 255 and 270 plus levels also. Healthy volume accumulation over the last few sessions. So I would suggest a hold. Stop loss on this one should be placed at about 215, 218 zones.
Got that view, but next question, that's coming in now. This one's an interesting one. So we've seen that specifically on Azad Engineering as well as on GE Power. Now Azad actually has done very well over the last few months. We've seen that on the aerospace side of stocks have started to see a lot more traction. And Subha Rao from Iluru actually is asking if he can buy into this counter right now. So within this, Mr. Chokalingam, within Azad or GE Power, anything that you like from the space?
GE Power looks better purely on the basis of fundamentals. Azad Power is a strong growth company, but valuation comfort is not there.
Okay. Kush, the next query is for you, and it's it's on Imami. Sayan from Kolkata, he's holding around 100 shares at a price of 440. Should he average out or continue to hold this counter for short term?
No. Exit. Very weak structure, has been an underperformer for a while. Every rise there has been a selling opportunity. Luckily, it's a little far from his buying price, but not too much. I would suggest an exit. If he wants to consider something in this space, I would suggest Marico on declines.
Marico on declines. Got it. Well, the next question, coming in now. This one, it's specifically, yet again, Kush, for you, wants to invest between PG Electroplast as well as on Praj Industries and NetWeb. Anything that you like on the charts for Anil Singh?
So, PG Electroplast was attempting, an up move. With the entire sector doing what it's doing, that rally's been fizzled out. So I wouldn't suggest, investing in a PG Electroplast. Like we've discussed some time ago, Sirma, once it takes halt, of this fall, you can consider. Praj also ran up, but now seeing sharp profit booking, so would avoid that also. And the third one, I suppose, was NetWeb, correct?
Yes.
Yeah. So here you can consider, but again, support immediately comes in about 3770, 3775 levels. So maybe around those levels. So not really, very gung-ho about all the three stocks picked. So I'd be a little wary on these.
Okay. Next is a caller query coming in from Hyderabad. Aruna, you can go ahead and ask your query.
Yeah. Hi, sir. Good afternoon to all of you. Thanks for taking my query. Actually, I wanted to invest short-term and long-term in transformer stocks. So I'm requesting Kushpuro sir to suggest one short-term and one long-term stock and with entry and prices.
Okay, Kush.
First up, this is very lovely. Thank you so much for that query. In this space, there's already been quite a bit of run-up. I think what you can do is, yes, you can consider Tyrrell, itself, because the run-up's been, or rather the fall's been quite steep and the run-up's been very gradual, and you want that kind of a move. You don't want a V-shaped kind of a recovery on the stock. So Tyrrell is something that you can consider from a long-term perspective. The momentum is missing, but the gradual recovery offers a good risk-reward ratio. So buy Tyrrell, keep a stop loss at 275 odd levels, and on the way up, you can expect a rise up until 350, even 375 odd levels in the next few months. So that is something that you can consider. One stock which has run up quite a bit and you can consider on declines is actually BHEL. Like I said, not now. From a short-term perspective, you can consider BHEL, but let it slide to about 375, 380 odd levels. Let the cool-off happen, and then you can consider BHEL from a short-term perspective. But let me reiterate, not now, around 375, 380 levels.
Got that view, Kush. The next one's coming in from Raju from Tirupati. And he has a question actually on MTAR Tech. He bought these shares at 4850. We also had another query on a similar stock. And the viewer actually, Vanita Bara, was asking if it's a good time to enter MTAR Tech for the next 2 years. So, Mr. Chokalingam, again, one of those rank outperformers, but the run-up also is strong, but they've guided for almost an 80% growth in revenue for next year. What's your view on this stock now?
I find it difficult to justify the current valuation. Even if the revenue grows at 80%, the stock is trading at 225 PE on trailing basis. So I may be wrong, but personally, I find it very difficult to justify.
Right. The next query is coming in from... the next query is coming in from Vijay from Chennai, and it's on M&M. Kush, he wants to know the short-term target on this counter.
The entire space is going through some pain, and M&M also, despite the kind of standout performance that, it has given in the recent past, is also seeing some pressure. My suggestion that, you want to hold on to this one, which is fine. There is a rising trend line support, gradual uptick on this one, tight stop loss around the 3050 mark. On the way up, however, the stock has a potential to go to about 3275, and if that is taken out, 3400, but it could take some time.
Got that view, Kush. But the next one, Mr. Chokalingam, it's a small counter. Rajesh Power bought at 870 by our viewer Sunny. By any chance, do you track this one? Almost 1800 crores in market cap.
No, I'm sorry. I have never tracked it.
Any on the charts, Kush, that you might have?
No, I'd give it a miss.
Got it. Well, let's go across and take a caller then from Hyderabad. And Aparna has a stock query for us. Aparna, very good morning. Welcome to the show. What's your query?
Yeah, very good afternoon to all of you, sir. I wanted to check with Quality Power. So what is the, view on this on short term and long term? Is there any price to enter? I wanted to check with Kushpura, sir.
Got it. Well, Kush, on the counter, what would you recommend?
This is why I love Ask Profit and especially those viewer queries. Aparna, this is so sweet of you. Thank you so much. I think we've spoken in the past, and at least we've certainly spoken about Quality Power on the show. And I remember, the Pan Mahima made about how Quality Power still has quality, correct?
Yes.
I think this is still a good stock. You can consider this. It's already run up quite a bit, and hence the profit booking. So I would suggest you can consider it, but let it slide a bit more. Maybe around 1090, 1075 odd levels. The risk reward ratio becomes very attractive. What you're seeing in the last 3-4 weeks is mere profit booking rather than any structural shift. So I would suggest a buy on this, but close to 1100, 1090, those levels. In that case, your stop loss should be at 1040, and on the web, the stock's already shown that it has potential to run quite a bit. So about 1250, even 1325 are the levels that you can track on the upside. So buy around 1100.
Right, the next query is coming in. The viewer hasn't mentioned his name. It's from Lata, and it's on Ashok Leland. She wants to buy Ashok Leland for the next 3 to 5 years. Mr. Chokhalingam, should she do that?
Yes, certainly. But this morning also we saw the most reputed rating agency giving positive outlook on CV growth. So one can buy for long term.
Got it. Well, the next question coming in now, it's on a recent company is Seshasai Technology, and Sharat from Tirupati is actually holding on to this counter at and wants to know if it's a very good long-term bet for the next 5 to 10 years. Mr. Chokhalingam, by any chance, any view here?
I just looked at the numbers, very poor return ratios, extraordinary P valuation. I'm not comfortable.
Okay. The next query is the next query is from Vedant Garg, and it's on IIFL Finance. He's bought few shares at a price of 506 rupees. He wants to know the targets he can continue to hold this counter for the next 3 to 5 years. Mr. Chokhalingam, any view on IIFL Finance?
Yeah, good. For 3 to 5 years, definitely the growth momentum will continue. It's a good stock for long term.
Got that view, but let's go across, take the next caller now, and from Hyderabad, and Murli is joining in for a stock query. Murli, good morning. Welcome to the show. What's your query?
My query is to Pushbora, sir, on Varun Beverages. I have about 100 shares in 2 years at an average of 220.
Okay.
Should I hold it for another couple of years?
Okay, so you bought these shares at 220, and when was this? How long have you been holding on?
For 2 years.
Okay, for 2 years. Okay, got it. Kush, on Varun Beverages, I don't remember when was the last time it was at 220, because those levels seem very attractive. But anything on the charts for Varun Beverages?
Sure. First up, Murli, thank you so much for this query, and you can drop the sir. Kush or Kush Bora is just fine. But kudos to you on buying this, holding on to this for now. I'm sure you're probably hurting a bit because you've seen those higher levels of about 600 plus, and now at about 500. This stock has been on my radar. This is now attempting a rebound, now a more meaningful one, because there was a long-term, medium-term falling trendline resistance that has been broken. The 200-day moving average, which it was resisting around for a while now, that's been taken out. So yes, it is on the cusp of a breakout, attempting that. So it's not a bad idea to continue holding on to this one. However, I would suggest that you keep a stop loss around the 425, 450 zone, because if it fails and if it falls again to that level, then this entire recovery could fizzle out, and you don't want to be losing out on those profits that you're making right now. So right now, hold a steady recovery underway. You just want this to continue for some time. Stop losses around the 425, 450 zones.
Okay. The next query is from Ankit, and it's on Enviro Infra Engineer. He has around 250 shares, bought at a price of 160. He wants to know whether should he add more at the current levels of around 180, or should he continue to hold what he has? Kush, any view on this?
The buy price you said was 160?
Yeah.
Yeah, no, don't add more. 200-day moving average resistance massively playing out, massively. It's not been able to take that out, and market's not helping its cause either. I wouldn't suggest averaging either. I normally don't. But I would suggest continue holding on to this, because this consolidation breakout could happen if there is any bit of support from the markets. So yes, you should continue holding on. 160 is your buy price. 180, in fact, should be your trailing stop loss. So I would suggest a hold, trailing stop loss at 180.
Got the view, Kush. But time now for the rapid fire round in this edition of Ask Profit. Kush, as well as Mr. Chokalingam, you know the drill. First question coming in on Cohance. Manoj has bought shares at 500 and he's holding 200 shares, Mr. Chokalingam. You've seen weak results, but there's been a big management change. Umang Vora coming in. Would you believe in the stock?
The problem with this stock is a good quality stock, but EV to sales was highly stretched. One can at best hold it now.
Shankar from Dubai wants to know the targets on Hindustan Copper and Hindustan Zinc. Kush?
For Hind Copper, good move. I would hold on to this one. Immediate targets about 635. And once that is taken out, 655 as well. That's a good move. I will continue holding on to this. Hind Zinc, slightly differently placed. Seeing some negative resistances on the weekly setup, but you can still hold on to this, has that metal momentum. 705 and about 730 are your targets.
G. Varnova Kush, bought by Surya from Dubai at 4650. He's asking us 6-month view on the stock.
Yeah, had a good run, profit booking right now. Keep your stop losses at 41, 4150, 4135 levels, but you can continue to hold.
The next query is for you, Mr. Chokhalingam. Prakash is holding 300 shares of Wari Renewable, bought at a price of 1,040 rupees. Can he hold this for the next 2 years?
One can hold it. If one receives a capital invested or even marginal profit, one should exit a solar company like this.
Got it. Mr. Chokalingam, you like Coal India, but on Bharat Coking Coal, Murthy is holding shares at 38. For the long term, do you have a view?
Long term, it should do well because of a huge shortage of coking coal. Long term, it will do well, so one can hold it.
The next query is for you, Mr. Chokhalingam. It's from Shrijit from Bangalore. He wants to know whether should he add Bellrise Industries for long term in his portfolio.
Sorry, I'm not an analyst.
Got it. Well, the next question coming in now, it's on Avantel, Kush, and a viewer, Ansh, actually holds shares at 153. He's asking what he should do with his 3,000 shares.
If a quick word I may on Bellrise, the structure from a near to medium term is positive. You can hold. If I can just going to quickly address that. Avantel, I would continue to hold. Consolidating, attempted breakout failed, but that attempt happened right on back of good volume. So hold, stop loss at 143.
The next query is for you, Mr. Chokhalingam. It's from Rajan Iyer and it's on JM Financial. He's holding 500 shares at a price of 136. For the long, should he continue to hold this counter for long term or switch to Vedanta post demerger?
Long term, it's a good JM Finance.
Avinash Naidu from Bangalore asking on delivery, Mr. Chokalingam at 269. Should he still continue to hold?
I would not hold it. I will sell on rise.
Kush, the next query is for you. It's on NLC India. Tarakaram is holding few shares. Should he continue to hold them? He hasn't mentioned his buying price.
Right now, book profits, maybe consider again at about 350 odd levels, but right now book profits.
Got it. Well, the next question coming in now, this is from Harsha, holding on to Persistent, Mr. Chokalingam at 5,450, asking what she should do with this counter. Is it a good time to add more now or sell out?
See, it is one of the best quality mid-size IT stocks, no doubt. Credible performer. The pain is only from the industry outlook. So at best, one can hold it for medium to long.
The next query is for you, Kush. It's from Baba Saab from Karnataka. He wants to know whether should he buy NHPC 5,000 shares at a price of 78. Is it a right time to enter for short term?
Again, it's consolidating. The range is 72 on the downside and about 85 on the upside, bang in the middle of the range. So if you want to do a range play, then perhaps a little lower, closer to 75, you can consider stop loss at 72.
Sunil from Baroda is asking Mr. Chokalingam, what are your top picks in the hotel space?
Hotel space, my top pick is East India Hotel Limited, EIH Limited. I like the stock most.
Got it. Well, that is the end of the rapid fire as well as this edition of Ask Profit. Mr. Chokalingam, Kush, as always, thanks so much for joining in, giving us your views on a whole host of queries. But viewers, out of time on this edition of the show. KYC comes up next and all the stock related queries at 2 p.m. So we'll see you there.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
Excellence measured by those who built it. Presenting the jury of the NDTV Profit Business Leadership Awards. Sunil Bharti Mittal, Chairman of the jury. Founder and Chairman Bharti Enterprises. Noel Naval Tata, Chairman Tata Trusts. UK Sinha, former Chairman SEBI. Kiran Mazumdar Shaw, Chairperson Biocon Group. C.S. Sethi, Chairperson SBI. Jayant Sinha, former Union Minister of Finance and Civil Aviation. Ramesh Damani, value investor and member of BSE. Cyril Shroff, Managing Partner, Cyril Amarchand Mangaldas. NDTV Profit Business Leadership Awards. Honoring excellence. Coming soon. India's unshakable news habit. NDTV.com is India's #1 English news website.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through.
Hello and welcome to KYC. I am Sharad Dubey and you are watching NDTV Profit, and this is one of the best KYC shows where we get you hidden gems, interesting stocks, anything which is trending, and if any alpha can be made or not. But before that, let me give you some hint. Try to guess the company. Of course, it will be a bit tough for you to guess. It's recently listed. It's a workforce and an infra support company. That's the first hint for you. दूसरा हिंट आपको देते हैं, कंपनी हाल ही में लिस्ट हुई है March 23rd, 2026. It's just been 1.5 odd months and the stock is still down 29% from its listing price. It's pretty much interesting for you to understand which company I'm talking about. The company's name is Innovision. Of course, this is a North India based company and this is the company which we'll be talking about. But why have we got this company in KYC? इस कंपनी में ऐसा क्या खासियत है या क्या न्यूज़ आया है जिससे हमने इन्हें KYC में बुलाया है? First question. Let's see why this company is coming in. Of course, right now a lot of order flows are coming in and that's where my interest came in for this counter. I checked that the company was recently listed also and it was not covered in KYC. So what's the exact business model? Is it a toll player? Is it a manpower service player, or is it both? And there's an angle of drone also in it. The recent order wins is something where my interest came. So we'll be understanding the order book status and the outlook going ahead. But also let's talk about the other key questions is the digitization of tolls. So we have heard about that news. How much does that benefit and that infra pick up? What does that happen? Of course, this looks partially like an IRB infra, and also the strategic growth outlook for the security manpower business. What's the growth looking like? We already have Quest Corp and TeamLease, so you can understand a little bit of that business model as well. And overall, the long run growth, especially coming on the revenues and margins, because the first time the company came out with its numbers in Q3, but we need proper clarity on the future outlook. And to understand more, we'll have Lieutenant Colonel Randeep Hooda, the Chairman and MD of Innovision, giving his views on the queries asked by us and to discover this company, what's this all about. That's what the focus should be on, innovation. Lekin ye company karti kya hai? I've given you two hints. Manpower is there. There is of course a toll infra at play. But let us go a bit back. This company was founded in 2007 by defense veterans. That's an interesting company to feature in KYC. That deals with the workforce and toll infra solutions, but there is some more layers to it. I'll come to that. 14,000 plus workforce members across 23 states and 5 union territories. That means they have coverage. But what are the key services for this company? Manpower, toll plaza I spoke about. There is also skill development services and the emerging drone services. This is where a lot of interest is coming in the street. The company operates as a B2G dominant platform, यानी कि government को ज़्यादा services देते हैं, So there is of course a little bit of risk there. 80% of the revenue comes from NHAI, central and the state government. This is how the picture looks. Recently IPO आया था and the IPO proceeds are likely to support the bidding for the next 3 to 5 additional toll plazas in FY27. So that's something to talk about, and a 31 crore toll order win was there from NHAI. Recently the company announced post its listing. Apart from that, a couple of more orders were there. There was a manpower award coming in from Chhattisgarh State Marketing Corporation, and also if you look at it, there was a 13 crore NHAI fee collection order as well. So a lot of order wins are coming in post the IPO. But let's look at the operational data, how things are panned out. We have taken the data from the toll management business. There's roughly 12 active businesses in this NHAI segment, and the revenue which has gone up, that collection was roughly 281 crore rupees, and this is for the last 2 months, December 2025 to January 2026. This is where the collections data has come. But one thing which was very interesting was the drone service business. That's where my attraction came to this counter. The commercial ramp up is expected in FY27. The margin target, as per the company estimates, that's roughly 40 to 50% versus 5 to 6% for manpower. And if they move towards this side, that is where the margin outlook starts improving. And FY27, the revenue target for this drone service business is set at 50 crore rupees. So very interesting and a very developing setup. But what are the positive triggers for this stock? That's what we need to understand. Improving operating leverage. We need to give it a little bit more time. If 3 quarter का ही number आया है, 4th quarter numbers are expected to come in. The DI exposure remains strong for a company जिसका market cap is around 700 to 800 crore rupees. Around 5% of that stake DIs are having. 9,000 crore market opportunity for the drone service. So that is something we will definitely have a big conversation about. And a structural surge seeing in the toll outsourcing. So this is something which we are looking out for. It'll be pretty much interesting to speak about it. It's of course a little bit asset heavy play as well. Manpower demand for the infra space. That is where, if in case the infra push happens, that's where the momentum lies. And Street is expecting overall strong Q4 numbers as well for innovation. So we will be tracking this company and understanding the entire picture. But to understand a company in KYC, we have 8 parameters where we judge the company, how the company is doing and what's the future outlook looking like. So I'll just mention you: income statement, balance sheet, cash flow and return ratio. These are the 4 important ratios we track on terms of numbers. But apart from that, we also see the shareholding, what has moved. याद रखिए सिर्फ 1.5 महीना ही हुआ है. So the history is quite small. So we need to take our analysis with a pinch of salt, wait for street cred. And interestingly, valuations also, we'll try to figure it out with which business model does the company fit. Most importantly is the outlook. That is what the street wants to know. It's recently listed, untracked, and that is where we try to find any hidden gem if it's there and get you more details. And that's the speciality of KYC. Let's talk about the first parameter, and that's the income statement. Of course, a lot of data has come in from the RHP. H1 numbers, look at the revenue, that's around 510 crores, 893 in FY25. And even if you double this up, this comes out to 960 crore. That's what the estimation is looking like. This is just the H1 numbers. I'll get you the Q3 numbers. But net, look at the strength coming in these numbers, and that is showing good. Margins also, you see, it's holding up almost 6% odd. And looking at the Q3 numbers, largely, if you see the year-on-year basis, there has been a good improvement, especially in the bottom line operational numbers and the bottom line numbers. That is where a little bit of bullishness is coming. Is there an inflection there or not? And of course, from that 6.4 in FY23, it's back to its higher levels in H1 FY26 as well. So margin play is coming good. Operational numbers are improving. So net income statement, I'm going to give this a strong thumbs up. Let's talk about the balance sheet. What's happening here? They recently had in the IPO also a little bit of borrowings reduced, but the way they are expanding, I explained to you, this asset heavy model as well. So borrowings are definitely there. That's what we'll try to understand with the management. Are they reducing it, or is the focus going to some other businesses or not? The cash is pretty decent, as around 55 odd crore rupees, and it has increased each year. And comfortably it's sitting at the end of H1 FY26. So it's a kind of a neutral rating right now. Let's give it a little bit more time. Since it's in an expansion mode, there might be a little bit of pressure. So income statement was strong, balance sheet was neutral. Let's see what's there in cash flow. And always remember, whenever there's a company in the B2G segment Cash flows at times will be an issue because it's coming in from the government. There might be a delay in receivables, and that is what the reason is. Look at the cash flows, it is not very uniform. So this is a business model itself. It's not a flaw, it's the feature when you judge these companies. So largely it gives an infra company vibes, but manpower, of course, receivables is much stronger. So we need to get more time to understand that. But as of now, on this data, I'm going to give this a thumbs down when it comes to the cash flow segment. But interestingly, the return ratio is something which caught my eye. The ROC numbers we speak about, of course, this is before the listing. This is around 20 to 22% kind of a business. But after that, there's been a good up move coming in. Of course, there are some capital adjustments from the IPO, but currently it's at 30 plus in the ROC number. So net, a strong performance when it comes to the return ratio. So I'm going to give this a thumbs up as well. Apart from this, let's talk about shareholding. और shareholding में ज़्यादा समय नहीं हुआ है, बस एक ही बार का जो है shareholding pattern आया है. So right now net we see promoters are holding a decent 74% stake. 75% is of course the SEBI cutoff, so it's comfortably below that. But interestingly, what I liked is the DIs. They have done a good participation, and around 5% of that equity is amongst DIs and almost 2% coming in for FIs. Roughly the remaining 19% float is with the retail. So it's a neutral rating. समय देते हैं. That's why we have just kept this a neutral one when it comes to shareholding. But let's talk about street cred. Company को 1.5 महीना हुआ है listing के. So we need to give it a little bit more time. Of course, market conditions are also, you could say, impacted. So from the IPO price and the listing price, there has been a big downtick coming in. Of course, the listing price itself was down 10%. After that, a little bit sell-off happened. And of course, stock is flattish, for the last one odd month. And of course, company is coming out with 3-4 important orders also. So the street is looking for the Q4 numbers. That's where the clarity comes in. And that's why I picked up this company in KYC to give you a first-hand view of any chance of alpha being made. So net, let's give it more time. So I have given this a benefit of doubt and a neutral rating when it comes to street cred. Let's talk about the valuations. Hey, धंधा इसका peer कौन है? And that's where the confusion a little bit happens, because innovation has the toll management business also. Innovation also has the manpower business also. But let's see how the valuations stack up. We have taken the trailing P ratios. It's around 23 times. That's what the number is coming as per our calculations. We compare that with IRB Infra, it is cheaper at 31 times. But if you talk about the other players for the manpower segment, that's where TeamLease and Quest comes in. That's around 14 to 17 times. These businesses do have good cash flows also. Over here, that cash flow gets used in toll and asset heavy announcements as well. And companies, of course, doing other businesses also. So net, in our analysis, I'm going to give this a neutral rating as well. But let's talk about the outlook. What is there? Is there any change happening here? How's the things looking? There's a large order win expectation in the security surveillance theme. That is where everybody is talking about. We have seen companies like RNIT AI also in the small cap space doing well. The beneficiary of expansion of toll infra, that is where, some little bit of alpha is lying, and the government is pushing hard for that. Now they're growing advanced drone and smart monitoring solution. That's also one of the key takeaways which the management had mentioned in their IPO discussion. Deeper penetration across tier 2, tier 3 cities. That is where the movement is happening of the key products. So we'll be looking out for. So net, as of now, outlook looks strong. लेकिन आइए आपको पूरा KYC रेटिंग बताते हैं इनोविजन का. क्या आंकड़े हैं? What should you be focusing on? And the income statement has done really well, but a concern comes from the cash flow, and of course this the business model as such. Return ratios are improving, and if you look at the street cred and shareholding, that itself also, it's largely, you could say, a neutral rating, and the valuations also, the story remains the same. The one thing which is good is the outlook. That is where the outlook, it seems like there is some inflection in the business as well. So the final rating, do market, that's around 5 out of 8 we have given for innovation. It's largely in line to slight positive on the average ratings which we give in KYC. But we have an interesting conversation, and very rarely this management comes from the armed forces. We have Lieutenant Colonel Randeep Hundal. He's the promoter and chairman of MD at Innovision, and a very interesting snippet about him. He began his career as an officer in the Indian Army, and that's of course a matter of pride. Over 15 years of experience he has in manpower services. And interesting, snippet about him is that he's also a DGCA certified remote pilot training instructor. So of course he's running a business and he's a qualified person as well. So it'll be a very interesting conversation about it. But we'll speak to the management just after the break.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी
India's unshakable news habit. NDTV.com is India's #1 English news website. Excellence measured by those who built it. Presenting the jury of the NDTV Profit Business Leadership Awards. Sunil Bharti Mittal, Chairman of the jury. Founder and Chairman Bharti Enterprises. Noel Naval Tata, Chairman Tata Trusts. UK Sinha, former Chairman SEBI. Kiran Mazumdar Shaw, Chairperson Biocon Group. C.S. Sethi, Chairperson SBI. Jayant Sinha, former Union Minister of Finance and Civil Aviation. Ramesh Damani,
Welcome back to New York Company. We are joined in by Lieutenant Colonel Randeep Hundal. He's the Chairman and Managing Director at Innovation. Good afternoon, sir. It's always a pleasure to have you in our show. And it's a very new company, recently listed Innovation. Just wanted to understand a little bit more about your company and what's the exact motto of your company? ये आपकी company करती क्या है और अलग कैसे है?
Yeah, firstly, thank you for having me on your show, Sharad. So, Innovision Limited, we have 3 major verticals in the company. Though when we started, we being from the armed forces, I was a short service officer. So when I left, and I also, come from a post-generation army background. So the first thing when we started the company, we started purely as a guarding company, and we started with 2 guards. And today, as we stand, we have more than 17,000 workforce across India. We are present in more than 23 states and 5 union territories. So that is what from 2007 till date we have been able to achieve. So starting from manpower, then we slowly graduated into skills development. When in 2014, then when the Ministry of Skill Development and Entrepreneurship came into being. So that was the time we saw this as an opportunity where we started, these programs, skills program was sponsored by the Ministry of Skill Development. So since we already have had an infrastructure in place, so we started training the security guards. And very quickly we realized that there is a lot of opportunity in the other sectors as well. Now, since there are more than 42 sector skill councils in the country, so we are affiliated with all sector skill councils, and we are carrying out skill development training in across the vertical, whether it is logistic, retail, security, BFSI, and so on. So this is how these skills development vertical started. In 2018, we were already providing manpower to these toll operators, and that was the time when we realized that since we are already doing the hard work of training the manpower who are managing the toll plazas, so as well understand the entire holistic business of toll management and get into this. So 2018 was the first toll plaza that we bid under the EPC model, which happened to be a very profitable toll plaza for us. And that's how the tolling journey for Innovision started. And from, one plaza, so far we have more than 35 toll plazas across India.
Mr. Hundal, you explained us about the toll plaza entire ecosystem. So that is where the manpower is something which you are giving in the infra space. So that's an important clarity coming in. But there is also a digitization of toll plazas which is happening, government is pushing. How does this benefit your company? And of course, if you could just give us a little bit about the order book regarding this.
Yeah, so see, the digitalization of toll plaza has already happened with the adoption of FASTags. And for an organized company like Innovision, it has stopped the pilferages. It has enhanced the collection efficiency of toll plazas. Now, in this financial year 26-27, we have already secured 125 crores of contract with us across Uttar Pradesh, Madhya Pradesh, Tamil Nadu, and Pondicherry. We have 25 existing toll plazas, so the revenue from these toll plazas is also going to be carried forward. And as far as digitalization is concerned, we ourselves have started now developing integrated traffic management system for smooth mobility of traffic. So I think another 2 or 3 months we will be able to bring out this technology, and we would start the validation of this technology on our existing toll plazas. So as far as the market is concerned, we typically operate, as of now, we are operating under EPC model with NHAI. And under this model, the market size is almost around 55,000 crores. Typically, there are more than 850 toll plazas across India. So there is a strong bidding pipeline already in place for this ecosystem.
Right, so there is a strong bidding pipeline coming in. Apart from this, of course, there's a lot of B2G exposure. Whenever the company is having a B2G exposure, of course, the questions arises on the receivable front. What are the payment cycles looking like in your business? What are the risks involved here?
So if I talk about toll management, now here, the cash flow is very positive because we collect on a daily basis and we remit NHAI on weekly basis. So there is no gestation period of cash as far as tolling business is concerned. There is a gestation of around 45 to 60 days in manpower business. But B2G, if you talk about tolling is cash positive. In manpower segment, I would not say that there is a problem from B2G, but generally, by the time you raise the invoices and the monies are realized, the gestation time is around, anything between 30, 45, 50 days.
Right, but apart from these businesses, thank you very much, Mr. Hundal, to explain us the payment cycle. Because Street was having a little bit of concern on the B2G segment. So just to put that in perspective, manpower business will have 40 to 60 days of gestation period, and mostly your cash flow collection. So the tolling business is on the same day itself. Of course, a 1 week lag might be there here and there, but trying to understand the drone solution also. And interestingly, you are a certified instructor also. Just wanted to understand drone solution as a service. How nascent is it right now, and how big of a market can it open for you? Because there seems to be, a move to a high margin product also. I was just trying to, connect the dots. It's a newly listed company, so we have less information. So I just wanted to know from you.
Yeah, so, this is a fairly new initiative. So we have a subsidiary by the name Aerodrone Robotics Private Limited. And when we started this company, we started purely as a training, company for pilots. So we are a DGCA certified remote pilot training organization, wherein we train pilots and issue them the remote pilot certificates, which is basically the license to fly the drones. Now, after, when Ops Sindoor happened, now that was the time we also realized that there is a lot of, the entire warfare of, the Indian Army has changed, and it has become a drone warfare now. And we also saw this as an opportunity, and we quickly gotten our new R&D team in place. And I'm very proud to, say that within a span of, 6 to 8 months, we were able to bring out the products, 4 good products, which are drones, which have already passed the trials, defense trials, and as we speak, we have already started supplying these drones to the armed forces. So other than, training the pilots, manufacturing drones, we also saw this as an opportunity with the drone as a service. So it also complements my security business. So we are providing drones for perimeter security. We are also, in talks with a lot of oil refineries where the drones can do perimeter security. So this is how, the Aerodrone Robotics, and it's a high margin business for us. As we speak, we have more than 24 crores pipeline in place. And by the end of the year, I am very, very bullish that we will be able to cross 50 crores.
Right. So that's the target coming in, 50 crores of revenue from this segment. But I just want to understand the IPO portion. There were some proceeds which are going to be used for the bidding for toll plaza. I just wanted to understand what are those numbers looking like if you have to bid for these toll plazas and what's the timing of it?
So, since, now for the financial year 26-27, we are looking at high margin, businesses. Now, for us, toll plaza management is a high margin business. So, most of the IPO proceeds are going to go into tolling vertical. Manpower vertical is going to be a steady growth. And though we are with the new technology, which is the AI-enabled electronic surveillance system, which we have introduced along with the physical security, we are looking at improving the margins of physical security. And this electronic surveillance system itself is a very high margin vertical the technology for us. And drone, any which ways, so going forward, these are the verticals in 26-27 that we are going to focus on these high margins.
Right. And Mr. Hundal, just wanted to talk about any numbers or the growth or margins, any aspirational numbers are there which you could share for the next 2 to 3 years? What's going to happen? I know the Q4 numbers are not out yet, but in case if you have to give, a range of what growth numbers are looking like, you mentioned 50 crores for revenue for drone as a service, but for the other businesses or as a combined business, any kind of a growth outlook?
So, see, if you look at my past deliverables, we have been able to deliver more than 50% of growth year on year. And going forward, and this was also when, the biggest problem we had, faced was the working capital problem. Yet with that, problem, we've been able to give this kind of growth. Now, after the IPO, after, raising the working capital, we will be able to give at least, if not more, 50 to 60% of the growth year on year. And now we are really looking forward, to scaling all our verticals, which we are very, very bullish about. And we are looking forward, to these exciting times, which is financial year 26-27.
Right. I just have a last question from you, Mr. Hundal. This surveillance theme, it's very much important, be it border or even oil segment. And also a lot of government schemes are also promoting it. We have some listed players also. How do you see this space going?
See, now this is for all the sectors, especially for defense. Now, drone is the futuristic thing. Even for I being part of the armed forces, I'm also serving with the territorial army. So I have myself been inducted in Ops Sindoor. So I have seen firsthand, where now the entire warfare has changed to drones. Even in security, we are looking at the requirement of our clients, wherein the manpower is being replaced by the drones. So this technology going forward is drone technology. If you look at it, is going to come into every sector and majorly, the defense, and that is where the most of the focus of aero drone robotics is.
Right, so that's important. Drone will be coming in defense. That's an interesting take and a very interesting company as well. It's always a pleasure to talk with you, Mr. Hundal, and best of luck for the future.
Thank you, Sharad.
So that's the management of InnoVision, interesting company. And just to give the clarity, most of the working capital issues are sorted in the toll road segment, and the management was bullish when it comes to the overall drone service and the defense segments. Of course, there are this industry has payment issues as well, but something to wonder and understand, and also stay tuned to NDTV Profit for these new companies getting discovered in KYC.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
Excellence measured by those who built it. Presenting the jury of the NDTV Profit Business Leadership Awards. Sunil Bharti Mittal, Chairman of the jury. Founder and Chairman Bharti Enterprises. Noel Naval Tata, Chairman Tata Trusts. UK Sinha, former Chairman SEBI. Kiran Mazumdar Shaw, Chairperson Biocon Group. C.S. Sethi, Chairperson SBI. Jayant Sinha, former Union Minister of Finance and Civil Aviation. Ramesh Damani, value investor and member of BSE. Cyril Shroff, Managing Partner, Cyril Amarchand Mangaldas. NDTV Profit Business Leadership Awards. Honoring excellence. Coming soon. India's unshakable news habit. NDTV.com is India's #1 English news website.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the
US President Donald Trump expresses optimism about great talks with Beijing. Trump is in China for a highly anticipated summit with his Chinese counterpart Xi Jinping, with tech leaders like Elon Musk and Tim Cook accompanying him. All eyes will be on talks on trade, Taiwan, and Iran war. The Lal Street cheers optimism signals from high-stakes Trump-Xi meeting. Benchmarks hover close to days high, with the Sensex gaining more than 800 points. IT is the only sector trading in the red. The rupee hovers close to a record low of 95 rupees 94 paise against the dollar and amid global uncertainty. Currency pressure comes after India hiked the import duties on precious metals, with US-Iran tensions and the Trump-Xi meeting adding to the market nervousness. Sugar stocks are under pressure today amid rising concerns over Middle East crisis and supply chain issues. This after the government has banned the exports of raw, white and refined sugar with immediate effect until September 30th to safeguard domestic supplies and contain inflation risks. The spotlight will also be on Iran's Foreign Minister Saeed Abbas Araghchi meet with his Indian counterpart here with a high-stakes meeting of BRICS foreign ministers hosted by India ahead of the bloc's annual summit later this year. Hello and welcome. You've tuned into Markets at 12. I'm Nisha Poddar, and yes, markets are looking pretty today. Lots of global events are really impacting, and the most hope being built up with the historic meet of a US President Donald Trump really making a visit to China, meeting with Xi Jinping and also taking the global tech leaders. And that optimism of probably the Iran war, shadow boxing also being figured and coming up in those talks also is one thing something that is adding to the momentum and hope in the Indian markets. Over 1% up when we talk about Nifty 50 in 23,650 odd levels at the moment. If you really take a look at the sectors, it's an all-round participation really coming in, except for IT sector, which has been seeing a constant downgrade and also nervousness because of the AI thrust. But apart from that, a little bit of auto, but on the other hand, pharma, metal, defense, financial services, banks, these have been really contributing to the overall market momentum. When we really take a look at the other internals, take a look at how Nifty 50 is really panning out today. And remember that it's the banking blue chips which have been taking the onslaught of either nervousness coming in about the Indian economy, and also on good days, they are the ones really leading the charge. So HDFC Bank has been one of those trade-off plays in the investments into India or out of India. And today it is seeing a good day of trade, adding 75 points to Nifty 50 at the moment. Bharti Airtel, after its results and restructuring announcement, that also is adding quite a bit of momentum as the second important gainer for Nifty 50. ICICI Bank, RIL, all of them really doing well in trade. On the downside, it is mostly the tech companies which are really not performing and contributing to the market. All right, before we start more on markets, let's also take a look at the conversation that will really set the tone for the markets today. Let's listen into what the US President had to say about the talks in China.
It's great.
Did you talk about Taiwan?
Great place. Incredible. China is beautiful.
All right, and External Affairs Minister S. Jaishankar says that the meeting comes amid flux in the global relations, which are shaped by, remember, conflict and challenges in trade and technology. With energy, food, as well as finance pressures really rising, emerging economies expect the BRICS to act as a stabilizing platform and also explore practical, diversified solutions. Listen in.
We meet at a time of considerable flux in international relations, ongoing conflicts, economic uncertainties, and challenges in trade and technology and climate are shaping the global landscape. There is a growing expectation, particularly from emerging markets and developing countries. Development issues remain central. Many countries face challenges on energy, food, fertilizer, and health security, as also access to finance. BRICS can help them respond more effectively.
All right, some big political global events really taking shape today, and markets are really keeping a very close watch on all of them. Let's get chatting with Sonam Srivastav, who's the founder and fund manager at Right Research PMS. Sonam, pleasure welcoming you on NDTV Profit. Given the global volatility and now there is some semblance of hope again being built up, and the market really reacting to that as well. Sonam, how do you look at the market in the current scheme of things, where a large part of damage with the oil prices and inflation has already been seen on the ground?
No, definitely. I think, the damage has been done, and you're seeing a recovery from the bottom that we went into. I think, we remain positive on the market. I think, companies are at a very fair value. If you look at Indian market compared to a lot of their global peers, a lot of emerging market peers, we are quite cheap, and I think there's a good path ahead. But, like you said, that the geopolitical crisis is still going on. There is no conclusion that has come into place yet. And if there is no solution, then India definitely is vulnerable, because, we import a lot of oil. We're dependent on a lot of commodities from the global markets. And if something like that, keeps on going on, right, the crude prices continue to remain escalated, we could face inflationary pressure. We could face pressure on our current account deficit. So those fears are still alive. But I hope with this, new China-US visit, I think there are positive offshoots in the global market. And, if there's a solution that comes into place in the Iran crisis, that would definitely allay a lot of fears for India, and that could lead to continuation of the up move.
Right. Sonam, hold on to your thoughts. Of course, the rupee market is also becoming very, very critical in the larger scheme of things. And somewhere the markets are impacted or will continue to get impacted. Anindya Banerjee, who's the Senior VP of Currency and Commodities Research at Kotak Securities, also joins in. Anindya, pleasure having you add to this discussion. Of course, I spoke to some of the economists yesterday, and the worrying thing is that already it's being penciled in that 96 and a half rupees to a dollar is what is being penciled in. What is your in-house view and the factors driving it?
A very good morning, and thank you for having me. See, the entire trade of rupee continues to be on Hormuz, and Hormuz stays shut. And the global situation which is emerging, it looks like the way we are facing 12 to 13 million barrels per day of deficit. I think if this continues into June, the world could actually face shortages of products or crude oil. So that can lead to a substantial jump in the prices, something which even the global leaders are warning about. So I think a lot depends on how long this shutdown continues. We are hopeful that the current meeting between Xi and Trump, and also Lavrov is here. So I think all those things should pan out well and in a positive way. But the bigger issue is how long will this Hormuz shutdown continue? So if it continues, then oil prices rise.
India, just hold on to your thoughts. Of course, Bharti Airtel management is talking about their numbers. Let's listen into that.
Opportunities. The first one being homes, enterprise and data centers, and the second being Airtel Money, where there is a potential for further value unlock with listing. This is a no-cash deal and value accretive to Airtel shareholders. Before I hand over to Shashwat, I would also like to talk about the impact of the ongoing geopolitical crisis. There are a few areas of our operations which are seeing impact, including international roping, capex on account of INR depreciation, restriction on gas supply affecting galvanizing industry, in turn leading to lower tower build-outs. The other obvious impact is energy price increase. Africa has already been impacted by it. Having said that, we are looking at all possible opportunities to mitigate the impact with amplified efforts through our War on Waste initiatives. With this, I will now hand over to Shashwat for an update on India business.
Thank you, Showman. Very good afternoon to everyone. I'll start by sharing an update on our ESG plans, followed by each of our business segments, and then our strategic priorities. Let me start with ESG. Our ESG progress is anchored in our strategy and in the way we leverage technology and digital innovation to drive sustainable operations with enhanced efficiency.
All right, so that's Bharti Airtel's management really talking about the numbers and the outlook as well. And that stock is considerably contributing to the overall market momentum after results, as well as the share swap to gain more stake in Africa. And that is what is really playing out, over 3% up. But we were speaking to Anindya about the rupee movement and the in-house view on the numbers being penciled in the present circumstances and factors impacting it. Anindya, sorry for the disturbance. We can go ahead again.
Yes, so if the oil continues to rise, I think we could see levels of even 98 on the USD INR over this month.
Right. And Sonam, looking at this particular, right now landscape, which the market is really treading with, where there are many pressure points and the upcoming outlook for the next quarter earnings, along with the lower than expected monsoons, how much of that is really being penciled in, and how are you really estimating the market momentum going forward?
See, I think, these things definitely will have a pressure on the markets, right? I think upcoming earnings, this quarter, you're seeing a decent earning come in, but upcoming quarters definitely will be impacted by the high crude prices. But, looking at the market, we continue to remain optimistic. Like I said, there are segments in the market, where you're seeing a very interesting, opportunity being played out. You look at stocks that are involved in the data center theme, the hyperscalers. You're seeing, strong movements in stocks like MTR Technologies, and even a lot of stocks in the power transmission sector. You're seeing metal prices actually, sustain a very strong up move. So I think there's going to be a narrow market which will be positive, but I think there are other segments in the market. For example, your IT stocks in India, which are actually very negatively impacted by the news coming out of AI right now. So I think it will be a mixed market on the whole, but there are some opportunities which are very strong in this market.
All right, some opportunity is very strong. I'll pick your brain on that. But Anindya, just to focus on the kind of steps that are being taken by the government and the RBI to arrest the fall of rupee, that has really not impacted so far. Of course, there was a slight bit of recovery after the big treasury speculation was banned by the RBI. And after that, the rupee's downslide really continued. Now this gold and silver duty that has been increased by the government, how much of that will really impact, and by when do you see that strengthening rupee, if at all?
See, I think this import duty will have marginal impact as far as gold is concerned, because gold, the demand of gold comes from two major areas. One is investment, other one is consumption, which is jewelry. Now, as far as the jewelry demand is concerned, yes, that will get negatively impacted. But as far as investment demand is concerned, that I think totally depends on momentum, the international prices and its momentum. If the momentum comes back, we might see a lot of people entering the market to chase those returns. So it will have a marginal impact. That's why oil is the main thing as far as Indian rupee is concerned.
Right. And what more measures are required in India?
See, RBI has a lot more measures, but we have to understand the challenge which they are facing. Like on one hand, we have a higher import bill. So like 120 odd billion dollars was the import bill last fiscal. It is expected to jump towards 160 or 170 billion if things don't really escalate even then. Plus, we have FPI outflows which are happening from equity and to some extent in debt. So I think this pressure or this demand for dollars being met by RBI through interventions. They have measures. They have the FCNRB window. They can open an oil window. So all those things are there. But for the trend to change for USD, I think, again, I'll come back to the key point. The Hormuz has to open up.
Right, Anindya. So Hormuz has to open up, and so says Sonam Srivastava as well. So all the equity and money market both really want that. But Sonam, you also pointed to the opportunities that are there in the market. Of course, the downside that we had seen and the kind of sell-off pressure that we have seen a lot of. And of course, the larger market has also been outperforming the key indices on several days. So which are the pockets which are at good valuations for a slightly long-term perspective of 1 to 2 years?
Yeah, I think I mean the valuations you could discount in sectors like I said, the power and the hyperscale, the data center sector, right? So if you look at the recent news also, you would see Google has set up a discom in Hyderabad. We saw announcements of Uber doing a deal with Adani for data centers and for that infrastructure. So I think there's a lot of movement happening there, and you have a lot of stocks that sort of form the proxies of that development. So we talked about MTR Technologies, which plays a role there. We talked, you'll see stocks like Polycab, KEI. You'll see other, infrastructure stocks in that segment, which we think, which I really think can be a positive. If you look at the US earnings that came out for the software sector, you'll see that the companies which are doing AI in the US have come up with great earnings. Plus, the capex is going to be strong. So I think that is going to have an impact on the India data center sector. So I am really positive about that. Along with that, we're seeing, very good movement in the metal sector as well. I think JSW Steel is coming up with the results right now. You're seeing a very sustained up move in a lot of companies like National Aluminium, Hindalco, SAIL, Tata Steel, etc. in that segment. So I think, and if you look at the global steel prices also, there also seems to be sustained momentum. So I would be positive about that segment as well. I like a few stocks in the auto ancillary space also, and I think select names in the consumption theme also. So while the broader market might have its ups and downs, I think there are very strong themes that are coming into play, which will be very interesting, in the coming few quarters. And that is where we think that money could be made in this market.
Right, and as markets have normalized above $100 per barrel crude numbers, because it's still holding at 105 today and the market is gaining. So that showcases that a large part has been really built in at least these levels, which is actually a good news. Final word to you, Anindya. When we look at the rupee situation, the import bill, which is inflated because of crude, and the way we are being also downgraded in terms of our growth. What is the summation when we talk about the economic pressure points from your viewpoint?
One hand, it will be negative for growth. So the real GDP will get downgraded. Other hand, it's actually a stagflationary kind of a situation world over. Some countries are facing that pressure more acutely, some are less, but it's a stagflation globally, because globally there are no strong growth centers. India was one of the few, but India will also face the impact of the inflation. We just had the WPI inflation released. So this is higher inflation, which is going to ensure that the interest rates on real terms stay negative, and that will exert pressure on the Indian rupee. So that's something which will continue till the oil prices stay elevated.
All right. Thank you so much, Anindya, as well as Sonam, for joining in with all your take on the money market as well as the equity market. And of course, rupee is at worrying levels. Let's also focus on some big earnings. Pharma major Cipla really announced a weak Q4 with the revenue declining 3%. Varsha is here with a detailed report on what brokerages are really penciling in on the back of the Q4 Cipla numbers. Varsha, tell us.
So I would say revenue was in line, but EBITDA and PAT was missed. But the reason why Cipla is buzzing is not because of numbers, but because of the commentary of the management, and of course the brokerage is being bullish post the commentary. Well, the company is expecting strong launches which will help to aid growth. EBITDA margin expansion is on the cards. US business is expected to do well. Now, talking about the brokerages, well, let's see what Goldman Sachs has to say. They've maintained neutral, though they've hiked target price. Q4 results, according to them, were below estimates, but India, South Africa beats US pipeline in focus for FY27, and One Africa gathers momentum. Kotak has maintained buy with target price of 1,625. According to them, the numbers were in line, but domestic business delivers strong at 15% year-on-year growth. Robust H2 FY27 is expected, and US guidance brings a positive surprise. While MS has maintained underweight, though they've cut the target price as well. According to them, the earnings were weak. FY27 remains a transition year. EBITDA margins down, sustainability of gross margin improvement, and launch timeline of peptide assets will be a key thing to track, but the US pipelines is strengthening. So overall, all the brokerages and investors are, betting on the US pipeline, and of course the new launches and the capex will also go down, which will help the operating leverage, and hence the EBITDA margin will also improve for the company, and hence you are seeing the stock is buzzing in trade today.
All right. Thank you so much, Varsha. But now let's shift focus to another stock which is really having a great day of trade, over 18% up on this particular counter. We are talking about Balaji Amines, and D. Ram Reddy, who's the managing director of the company, really joins in now. Good to have you on the show. Welcome to NDTV Profit. My first question, which probably the markets are really very, very positive about, is the DME plant, which is an LPG substitution. Our market, our economy needs substitution. That has been the need of the hour, and this is one exciting bit. Can you give us more details about what the substitution means? And of course, the commissioning is in the first quarter FY27, and how will this work, and how soon can this be largely utilized?
See, we have
installed capacity of 100,000 tons capacity of dimethyl ether plant. And we are just about to commission. Maybe next 1 week, we are going to commission that plant. Only thing is, presently we got part peso permissions. That is about cylinders, small cylinders permission we have received. And now we are expecting the tanker permission. The moment we get the permissions, it will go in full swing. And actually, the BIS, Bureau of Indian Standard, has given a clear notification that around 20% can be blended in the LPG. In other countries like China and all, they are already mixing more than 30 to 40% of the DME in the LPG. So initially, we will be targeting the commercial establishments where the LPG presently used as a heating purpose.
Yes.
And,
so in
also
commercial
petrol.
use, yes, Mr. Reddy, in commercial use, you're saying you gave us the steps of how soon and what are the steps forward, but how soon can it be rolled out in the market? Is the back end tied up for that rollout to happen, for that 20% addition to LPG, so that the LPG pressure, shortage pressure is really eased a little? When is that going to happen?
That is left with the government. We have already requested the government to give the permission to the oil companies to blend this with the LPG. But in the meantime, we can reduce the pressure by giving it to the aerosol and some of the commercial, where there is no regulations that we can directly go to the commercial establishments like hotels and bakeries, like biscuit factories, where the LPG used for the heating. There, this can be replaced easily.
Also, Mr. Reddy, your numbers were good. How much of the revenue uptick is really coming in from the price versus the volume push? And on the other hand, how much of operating efficiency can be pushed? How sustainable are these numbers? If you can give us a guidance for this particular quarter, please.
See, presently, because of this geopolitical situation, we have faced a lot of problems. Still, we were maintaining almost some of the plants 80% level and some of the plants 60 to 70% level. They are operating. Because of the proper, perfect inventory management, we could manage these numbers. And as regards this margins, as I said earlier also, in our type of industry, specifically for the specialty chemical industry, 22% to 24% of the EBITDAs are the sustainable. And present, this last quarter is about more than 25, 26. But I can say 22 to 24% is easily sustainable for the coming quarters.
Right, 22 to 24% easily sustainable, and the stock of Balaji Amines is really doing well. All the best for your rollout of LPG substitute. Thank you so much, D. Ram Reddy, for joining us right here on NDTV Profit. All right, completely out of time on the show. Thank you so much for tuning in, but keep it with NDTV Profit.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी
Excellence measured by those who built it. Presenting the jury of the NDTV Profit Business Leadership Awards. Sunil Bharti Chairman of the jury, Founder and Chairman Bharti Enterprises. Noel Naval Tata, Chairman Tata Trusts. UK Sinha, former Chairman SEBI. Kiran Mazumdar Shaw, Chairperson Biocon Group. C.S. Sethi, Chairperson SBI. Jayant Sinha, former Union Minister of Finance and Civil Aviation. Ramesh Damani, value investor and member of BSE. Cyril Shroff, Managing Partner, Cyril Amarchand Mangaldas. NDTV Profit Business Leadership Awards. Honoring excellence. Coming soon. India's unshakable news habit. NDTV.com is India's #1 English news website.
You're a Malad boy. You started by trying to do something with sweets, pivoted to chaat, then pivoted to vada pav, then you pivoted to vegetarian burgers.
When we started the Mithai brand, again it was a little too ahead of its time. Chaat never happened. We just called, Jumbo King was called the Chaat Factory for some reason. I love the name. I started with one store of 50 square feet. We are fully vegetarian, and my first reaction when we did vegetarian burgers, when we pivoted, they said burgers vegetarian kab se hone lage, right? A burger is basically...
It's like veg biryani.
Veg biryani.
Why is Jumbo King not only about vada pavs anymore?
Vada pav is a Mumbai product. Within Mumbai, this was like the poor man's food, or the my struggle ke days ka sathi. There is a problem in the name vada pav. The moment you call it vada pav, you can't charge more than 20 rupees. People will say that isme sona chandi thodi dala hai. Why should I pay more than this?
How many people told you कि MBA करके आप वड़ा पाव बेच रहे हो?
My friends used to joke around, tell us the truth. You've been disowned by the family. You're not telling us that. We have a family business. And I told my dad I don't want to join the family business. When Jumbo King started, it was seed capital of only 2 lakh rupees, which I borrowed from my dad. I said I don't need money because I had burnt about 55 lakhs in the mithai business.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets.
Hello and welcome to NDTV Profit. You're watching Trending Stocks with me, Hiral Dadia, and Sharad Dubey standing at the NDTV Profit Market Pit. Sharad, good afternoon. Markets at the day's highest levels, if you see Nifty 50 as well as Bank Nifty. And from where we ended in terms of yesterday's session, there was dilemma as to what happens. Now, is this euphoria on the back of, Trump and Xi Jinping actually meeting? Probably a resolution when it comes to the West Asia crisis is on the cards, and that's what the market is reading into.
Well, yes, looking at the markets, there's a sudden spike coming in and we are at the day's high levels. Look at that. It's almost, you could say, 300 points up coming in the day's trade. Nifty Bank also, the big spike is coming in and the reports are coming that the government might reduce taxes on the foreign bond investment. And that is what is cheering the markets. Look at that. Nifty Bank also up almost 1.5%. But what are the key triggers is the most important right now for the market. The report suggests government is considering to reduce the taxes from the foreign bond investments, and that is why we're seeing a good up move and you could say basket buying happening. But will this technical reverse hold up? That's the big question. Yesterday the strength fell off. We saw that a little bit of short covering was there. And interestingly, the Nifty support range, the immediate numbers, they are 23,300 to 23,400. That's the level we are looking right now. Also Nifty Bank, let's get the support range that holds between 53,000 to 53,200. That's the minor bump up which has happened. But let's look at the other key factors. What is important right now in the current markets? Pharma, metals are shining. But the IT segment, that's where the drag is definitely going to be there. And that's what we are seeing in the trade. Value buying continues in the small and mid cap space. It's not that bad as, compared to the overall indices, but the rupee has strengthened and the yields, they have also cooled off as well. So this is an important macro trigger as well. But globally, Trump and Xi Jinping meeting is still underway right now, but coming back to the earnings, that's where a lot of action is happening. We have 3 major earnings today: JSW Steel, Tata Motors PV and United Spirit. Before the earnings, all of them are in the green, especially JSW Steel, as we have seen a good run up in metal. But Hiral, the entire story right now is definitely there on the government's initiative. If it is announced, it will definitely be very positive for the FIs, because we have been seeing a lot of sell-off in the equity space, at least for the FIs.
Absolutely. I mean, the FI holdings has actually gone below your DII holding, and this has happened for the first time in 2 decades. So that is telling you what the mood of the FIs is so far. But let's quickly look at what the watch list is looking like. Cipla is in focus on the back of earnings and brokerages which have gone ahead and hiked target price. You have Adani Enterprises. The stock is at a 7-month high in intraday trade. Partly Airtel, a solid Q4 broadband and enterprise business. That stock also seeing some smart moves. OpenAI's deployment model fears is what is spooking IT sector for a second or a third consecutive session, and that is under pressure if you have to look at Nifty IT at the day's lows. Hindalco is also trading at record highs, and this is that metal rally which has continued for all metal majors. NLC India, a strong volume buzzer. It's interesting to see how mines companies like Balaji and Alkyl are panning out, and this is a strong Q4 that has been posted by Balaji Mines on the back of the profit number that has come in. Godrej Industries will be reporting numbers tomorrow, so strong moves there. Care Ratings again buzzing on the back of earnings. MTAR Technologies, they've raised their FY27 guidance, and in addition to that, they've got an order win as well today, which is keeping the stock afloat. Keynes is a disaster. It's missed its guidance in the fourth quarter. In fact, we will be speaking to the management at 1 p.m. to grill them in terms of what has happened, what has gone wrong, and what's in store, because they did make promises in the past as well, which have not really fructified. So please stay tuned to NDTV Profit to hear out the management as well. Zaggle, the margins have contracted and office is trading under pressure. Sharda Crop, volume buzzer plus reacting to numbers. Zydus as well has acquired a US oncology firm. Swiggy is switching to an inventory-led model, and that's the path it's taking, and that's the reason why it's making the switches it has to. Siemens is also in focus because the parent guidance has been upgraded. So that's what is on our watch list. But Sharad, over to you to take the rapid fire with Ajit Mishra of Relicare Broking.
Thanks a lot, Hiral, for that. Good afternoon, Ajit. It's always a pleasure to have you. Just want to check just a minor market check I just want to do for Nifty and Nifty Bank. Both of the good spike has happened. Any important views on that?
Yeah, good afternoon, Sharad. Good afternoon, Hiral. So yes, it's indeed a welcome relief, because after 4 days of decline, yesterday was a day of a breather, but still we couldn't see any major up move. And today we are seeing that Nifty is up by around 1%. On the Sensex expiry day. So we are inching closer to the area where we were earlier taking support, which might act as a resistance. 23,800, 900 Sharad will be the area where Nifty might find resistance in case if this recovery extends. The good part is banking is at least contributing to the move, while IT is completely in the doldrum. Banking is at least contributing, so which is definitely a positive thing, because other sectors, if you talk about energy, metals, pharma, they were anyways doing well. So it's more of short covering so far is what the markets are indicating. At the same time, sector specific approach is something which is yielding better results amid all this choppiness. So one should largely focus on that. And for the index, in case if this recovery extends, one can look for shorting opportunity on rise around 23,800 to 900 miles.
Right, but coming back to the rapid fire, Adani Enterprises stock is doing really well, and the volumes have also picked up. Do you see further up move in this counter?
So in fact, if you see Sharad, the entire group of Adani stocks, they have done exceptionally well in the recent months. And after this today's move, which is roughly around 7% up, and the volumes are also almost 3 times of the average volume so far. So this definitely indicates a promising a move to unfold further. So maybe close to around, let's say 3,000, 3,100 is something that the stock might test. So with stop at 25.50, definitely one can look for long positions.
Right, there's a standard disclaimer for Adani Enterprises. But moving on, the second stock which is in focus should be the group of stocks, maybe the IT stocks. So second straight day, they are spooked on the AI developments. Do you see further fall in these IT stocks, or is there any value emerging in any kind of names, be it mid cap or small cap, Ajit?
So broadly, I still don't see any reason one should dampen into dabble into a fresh long position into the IT pack, considering that the overall tone looks bearish, and we are completely diverged to what we are seeing on the global front. So basis that, and plus the IT index texture indicates a possibility of further decline, roughly around 700 to 800 points down from the current level. So currently we are at 27,000 mark. So maybe close to around 26, 200, 300 is something that Nifty might IT test in the coming days. So basis that, one should refrain from any fresh long position. In fact, in case if the markets offer shorting opportunity, IT should be the preferred pick.
Right, short IT. Hindalco, another stock hitting its 52-week high levels. Good time to book the profit, or do you think there is more sustained move here?
So metal as an index, as a pack, is doing exceptionally well. We are at the record high. Hindalco is aligned to that move. In fact, we have fresh breakout from a very short consolidation range also. So I feel that one should continue to ride this move with the 1070 as a trailing stop loss and keep on trailing your stop losses on rise. Let's say once we reach to around 1150 plus levels, one can trail the stop loss to 1110 and continue.
I'll see India back on a good volume buzzer and a strong earnings also. Good time to at least do a partial booking of profits in this counter. Do you think there is further buying in this space?
Sharad, first disclosure that we had recommended this to our clients. We booked profit in the early trade today, and we feel that yes, the stock has potential considering the overall texture. Means it was a multi-month high that the stock multi-year breakout rather that we had in the stock, and that's why we are seeing this kind of move unfold. But fresh buying, one should wait, let the stock stabilize in this range of 350, 370 before any fresh longs, and partial profit booking definitely can be recommended.
Right, another stock, Godrej Industries. Tomorrow the earnings come out. Any pre-earnings positional trade here?
So Godrej very volatile, which is very not normal, especially considering the past data. And after this sharp move recovery in today's session, I feel the upside is capped. So in case if you have any existing position, you may consider booking profit before the event and let the stock stabilize above 1350 mark to re-enter fresh.
Right. Speaking about stability, there's a counter called Care Ratings. Interesting numbers. PAT also jumped more than 20%. And you're seeing a good buying happening. It's generally a very stable counter. How do you see this, and is there any trade to be made here?
So yes, after this gap up start, volumes are picking up. Stock is still holding in green. So with stop at 1650, you can look for long position. But for fresh momentum, we need a break above 1800 mark. So let's say once we do that, probably around 1900, 1950, the record high zone is something that the stock might test.
Right. Another stock, big breakdown, Zaggle Prepaid. Seems like a big overreaction on the earnings. Of course, they were slightly mixed to negative. But what is there on the charts? Any suggested stop losses here, or more further fall will be there?
Sharad, in my opinion, one should exit the longs because the trend is down and the stock was making an attempt of rebound. We couldn't surpass the long-term averages. And today we are seeing a very decisive break. 20% the stock is already in the lower circuit with a strong uptick in the volume. So possibility of retesting the previous swing low or maybe inch lower seems high. So in case if you get an opportunity to exit in tomorrow's trade, early trade, you may consider.
Right, exit Zaggle Prepaid if we get an opportunity. Of course, apart from Zaggle Prepaid, we will be talking about Office Space Solution. That stock is also under pressure. Ajit, for any levels to watch out for, or you'll avoid this trade?
It looks more like a sideways thing to me, so it's prudent to avoid.
Right. And last stock for the rapid fire is Siemens. Their global parent arm has come out with a very strong guidance, and that is where a little bit of momentum has started coming in, especially in the last 1 hour of trade. I just wanted to get your views on it. Is there a good positional setup happening? What's looking like on the weekly or a monthly charts for Siemens?
True. In fact, post the ABP numbers, we were seeing that across the board, the profit taking was there, and Siemens also moved up very sharply in the recent past from 2800 to 3900. So after this dip, it seems like it has formed a fresh buying pivot, and once let's say we cross this 3660 mark, this will be the confirmation that the stock is set for the next leg of a rebound. So one can look for accumulation at current levels with 3450 being the stop and 3900, 4000 in the position targets.
Well, that's the important news coming in. But that's all, folks, for the rapid fire segment. But over to you, Hiral. What are you gathering in the Google trending stocks?
Thank you so much for that, Sharad. In terms of Google Trends, let's pull up the screen and see what's actually trending in trade, because last couple of days you've seen a diverse range that has come in. SAIL is interesting, HBCL for obvious reasons, Keynes Tech In fact, again, I'm reiterating, NDTV Profit will be speaking to the management at 1 p.m. as well. Vodafone Idea and Vidhi Speciality. Any views when it comes to Keynes Technologies and HPCL, Ajit?
So Hiral, very sharp cuts, means almost like 2 months of recovery, rebound, whatever we were seeing in the stock got engulfed in the single session. Volumes are, tremendously high, means almost 4 times of the average volume. So that clearly shows that the stock is in tremendous pressure. And once, let's say, we break the previous swing low close around 32.70, 32.80, then probably we may see a fresh leg of down move towards 2900, 2800 levels in the near future. So in case if somebody is holding long, chart indicates a possibility of fresh breakdown. So prudent approach is to reduce your position in case if it fails towards 32.80.
Okay.
And for Hind Petro, here also, like the entire OMC pack, we were seeing a bit of a rebound, but it's still struggling below the long-term averages. So no point arguing with the market until we see a decisive close above 410. One should refrain from any fresh long position. And in fact, if you have any existing longs, you may consider exiting and let the stock stabilize.
Okay, so that's with regards to 2 of the names on Google Trends. Thank you so much, Ajit, for joining in. Always a pleasure to speak to you. Let's pull up a HAL. Hindustan Aeronautics has just reported numbers. Their revenues have seen a growth of around 1.8%. 13,942 odd crores is what you're picking up so far in terms of the top line. EBITDA is down around 4.5%. 5,058 is the number that you're picking up. Margins is the one which has seen a strong improvement. EBITDA margins, this is a year-on-year number, but 36.3% versus a 38 is what you're seeing. But the profit number has seen a growth of around 5.5%. The stock is actually ballooned. It's at the day's highest levels. Let's just pull up that one on the screens. The stock is at the day's highs as we speak right now. I'm just going to try opening the release and see if there is any additional information that's coming in there. But the EBITDA is down 4.5%, overall in terms of as we speak. But we'll come back to HL numbers. Let's quickly listen in to what Sunil Bharti Mittal is talking about right now.
Telecom as much as possible. So to put a bit more granular sort of angle to it, Singtel had a difference of about 7%, or rather has 7% direct stake in Airtel, and it had about 6% to equalize. Now with this transaction, once this is done and shares are issued, this gap comes down to 3.6%. So first and foremost, we should see overall this gap dramatically reduces. And if Singtel, which has been on the path of a sell down of this direct stake, has to sell now much less than earlier. So 3.6% over the next 3 years or so, let's say 3-4 years, as a less than 1% a year, gets Singtel onto the equalization path that they stated in the last 2 years. And that brings us to equal stake. And then it will be during this period of effort, depending on how well Gopal, Shashwat, Sumen, and the entire management team delivers this wonderful cash flows, more dividends, more buybacks. Idea would be to keep using that, twin lever to get BTL above the 50% stake. That'll be my cherished desire. Our stake must go back to BTL. For that, I need a little bit more leeway in the hands of BTL, which I'm hoping will be delivered through continuously enhanced dividend, as you're seeing. And I think hopefully in the next couple of years, some buybacks in addition to the dividend. And that will give us the necessary capacity in BTL to buy more. If I could do it today, honestly, I will do my transfer to BTL now, but BTL needs a little bit more headroom on cash.
That's very clear, sir. Very helpful. Thanks for that answer.
Okay, so that's the word coming in from Sunil Bharti Mittal as we speak. But staying with HAL, I think the numbers are slightly above what the street was estimating, and that's the reason why you've seen the kind of spike that has come in terms of Hindustan Aeronautics. The 1 month, 15-16%. Let's just pull up the intraday chart and that'll tell you it's cooling off slightly from the day's highest levels, but categorically, in terms of the top line, specifically in terms of the margins are concerned, that is what has actually been above the street estimates, and that uptick coming in terms of HAL. The stock is cooling off slightly right now. But moving on, MTAR Technologies, that stock is gaining in trade on the back of order wins and the management commentary as the company has raised its growth guidance. Let's listen into what the management had to tell NDTV Profit earlier today.
If you remember, last year we had a weak first half of the year, but this year we'll have
a strong first half and even better second half. So that's a clear indication the way we're moving forward.
Very interesting. Mr. Reddy, good morning. This is Alex here. So I want to stick to or talk to you about that guidance improvement, 80% versus 50% approximately earlier. If you can talk about the mix therein, because you've also guided to EBITDA margins around that 24% mark, if I'm not mistaken. So is it because you anticipate that the mix of projects that you will be taking up will be relatively higher margin?
Absolutely, yes. Not only the relatively higher margin, we're going to execute a lot more nuclear orders in the current year, as well as the operating leverage, which kicks in with the higher volumes as well. We have analyzed this very carefully, and we are pretty confident of achieving the required margins for this year.
Okay, let me ask, so you mentioned nuclear, Mr. Reddy, but there is also for your company an AI data center play. And one of the new orders stands at 35 crore rupees. Of course, the order book is significantly higher. So I'm just wondering, what is the kind of exposure to data center as a business, and where do you see it going perhaps in FY27, FY28?
I mean, that's a very interesting part of the whole story, because it's another customer which we are working with, and that's just the first article you're talking about, which is 35 crores. But over the next 2-3 years, we're looking at more than that, increasing to about 450 to 500 crores. Basically, we're going to supply mainly to the data center infrastructure requirements in terms of the various assemblies that they require for implementation of the data center projects. And that's something which we would love to do. And it's actually moving in the right direction. We already received the order. We're also going to sign a long-term agreement with the customer shortly, and that would take us to the where I've mentioned around 450 to 500 crores for the next couple of years or 3 years.
Okay, so Mr. Reddy, I presume the exit order book at the end of FY26 was healthy. You added a new order today and maybe some others in the last few weeks, and you're talking very healthily about the data center business order book as well, I presume. What's the anticipated order flow for FY27? I'm just trying to understand what's the visibility that you would have for execution and growth for how many number of quarters or years?
No, we'll have visibility for a couple of quarters normally, and the orders that are released, or even sometimes even more. But by the end of the year, probably we are looking at almost I've clearly mentioned that we'll have a closing order book of 5,000 crores, and we are pretty confident on that. And that's also on the kind of conservative front.
Well, that's the management of MTAR Tech giving their views going ahead. But another stock, arguably the stock of the day, is Keynes Tech. Of course, a lot of promises are made by the management, but do they actually keep it? Now, to give that entire perspective, we joined in by Puneet.
Well, I think the 18% downtick just shows you that they're not able to keep it at this point of time. But what we've seen in Q4 results is that the revenue expectation was 1,700 crores to meet the guidance, and that has not come through. So at 1,284 crores, it's a miss on guidance for the revenue for the year. For the year, it was expected to be 4,100 crores. It has finally come in at 3,600 odd crores, and hence the downtick on the stock as well. We've also seen that, the guidance, as I mentioned, has been one of the other factors, and so has the cash flow. That has also not met the guidance for this year. Now, just in Q3, the management had said that we could see the working capital days between 85 to 100. That has actually come in at 125. So it's a huge miss that the company has reported. Operating cash flow has also been at negative 600 versus the expectation of a slight negative to positive bias. So they highlighted that there have been a couple of government contracts that got delayed, and hence you've seen that what was expected hasn't panned out essentially at this point of time for Keynes Tech. But you already started to see some key downgrades. Nuvama actually downgraded the stock this morning to a target price of 3,550 versus 5,550 earlier. And just to, in terms of what we had the conference call as well this morning, where they've said that they've had a management reject. Some measures have been taken essentially to address the gaps within the leadership positions. And they feel that, the changes will have a higher accountability. And while the near-term volatility has been there, it does not define the company's performance. So those are some of the key aspects spoken today on the con call, but definitely stock's been under pressure today and has been all day.
Thanks a lot, Puneet, for that analysis. And just in the matter of 7-8 minutes, the management of Keynes Tech will be joining us at 1 o'clock, and we'll give you the entire picture of that. But we are joined in by CA Tapan Doshi. Good afternoon, Tapan. We have a shortage of time, but just wanted to get your views on these stocks. Especially Keynes, everybody's talking about it. Big sell-off is there. Is there any kind of a value buy opportunity, or will you be away from these high-value DMS companies?
Well, hi Sharad, good afternoon. Yeah, the results are quite disappointing. No, actually, we were expecting much more. And if you see the working capital cycle is increasing, again, if you say execution risk is there, and valuation at this level with this performance, it looks like high. No, if you see the other EMS companies like Dixon and Sirma, they have performed well comparatively. Again, the capex is near term now is on a higher side. So yes, the disappointment is that we'll want to see what the management is saying, but at this level, better not to buy. Just hold the stock because the stock has fallen a lot. So it is coming at a value level, but we have to see what management is talking, then only take a decision.
Technologies. Bharti Airtel is another one that is in focus as well. You're talking about restructuring in terms of Airtel Africa shareholding. Plus, you have the numbers which have come in. The stock at the day's highest levels, gains of 3.5% coming in there. In fact, we did hear the conference call as well, but a lot of takeaways have come in where they have indicated that, yes, there is a need when it comes to, tariff hikes is concerned, but this will be on the lower category ones. And they're cautiously looking at it. Yes, we don't know what the timing is going to look like, but we'll be watching out for pretty closely. Tapan, any view when it comes to Bharti Airtel? Because good commentary there. Price hike is the only concern. And to your Vodafone Idea also, which is ramping up, where people are talking about capex plans that could be funded through stake sales, etc.
No, it's a completely value pick. No, if you see, of course, 5G monetization, I think it will accelerating from here. And if you see, broadband expansion is quite good against Jio, and digital services also scaling rapidly. Tariff hike, yes, we have to wait and watch when it is going to happen, but it's going to happen. And that will add directly to the profitability. Of course, debt level is on a higher side, but as the 5G monetization will happen, there it will come down gradually. So competition pressure is there, but it's like a duopoly. So we can, competition against Vodafone Idea, I think Vodafone Idea is far behind. So at this level, I think, and because of the strong cash flow, it's a peak where one can keep it in a core portfolio.
Another stock is Zydus Life. Rarely do we see a pharma company announcing a buyback, but there are two news. One is buyback and one is an oncology acquisition. What are the key details on it?
Well, company is the subsidiary of Zydus is buying a company called Assertio Holdings, which is a US pharma company focused mainly on oncology. So this acquisition will build an oncology portfolio for Zydus. Now the deal size is at $166.4 million, and Assertio will be delisted from Nasdaq, and the deal is expected to close in FY27. Now talking about this will be all cash deal, tender offer first, which will be followed by merger to acquire remaining shares. This is a US based specialty pharma company, as I said, mostly focused in oncology segment, and the key product is Rolvedon. Onto the financials in FY25, if you see, company did almost $68 million of revenue, and mostly was from this single product. Now, why Zydus is buying? Because this will help entry into the US specialty oncology market. Now, oncology for Zydus contributes around, only 9%, and this will build up the portfolio for them. Will get immediate commercial presence in US, 170 plus oncology accounts already in place. And also the other news, the why Zydus is buzzing, of course, the buyback, which is expected. The board meet is set on May 19th, wherein company will, consider this buyback and of course announce its results. So these are two reasons, why the stock is buzzing as of today.
Thanks a lot, Varsha, for that analysis. But Tapan, just wanted to get your views also in Zydus Life. Stock is doing well. How do you see the medium term or the long term prospect?
Well, valuation of Zydus Life is okay. No, it's not too expensive. Again, the specialty growth will be there in coming years. A good, maybe double-digit growth, and margin expansion is expected in next 1 or 2 years. I think new launches which they are going to have that will drive the growth. And if you see domestic front, I think demand is quite strong. Of course, their R&D expenses are quite increasing, but I think because their EBITDA margin is strong and maybe improving, I think this is a stock now one can hold on to their portfolio, because still the valuation is okay, and one can think about buying also as and when it goes down.
A lot for your opinion, Tapan, on that, but we are out of time right now. From me, Hiral, and the entire team put together the trending stocks. That's all, folks. Stay tuned to NDTV Profit, and up next there's a very important interview of Keynes Tech coming up at 1 p.m.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी
India's unshakable news habit. NDTV.com is India's #1 English news website. Excellence measured by those who built it. Presenting the jury of the NDTV Profit Business Leadership Awards. Sunil Bharti, Chairman of the jury. Founder and Chairman, Bharti Enterprises. Noel Naval Tata, Chairman, Tata Trusts. UK Sinha, former Chairman, SEBI. Kiran Mazumdar Shaw, Chairperson, Biocon Group. C.S. Sethi, Chairperson, SBI. Jayant Sinha, former Union Minister of Finance and Civil Aviation. Ramesh Damani, value investor and member of BSE. Cyril Shroff, Managing Partner, Cyril Amarchand Mangaldas. NDTV Profit Business Leadership Awards. Honoring excellence. Coming soon.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversation.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information blitz into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight.
Good afternoon. You're tuned into Lunchtime Trades with me, Shreyansi Singh, and this is the show that gets you a roundup of everything that is happening in the world of commodities, news and updates as well on the top buzzers at this hour, all while you grab lunch. But before we do that, let's take a very quick look at the markets right now and look at that surge really coming in, whether you talk about Nifty or Sensex. Look at that 280-point uptick coming in for Nifty as well, and hovering close to the day's high right now. When you talk about Sensex as well, about 800 odd point gains also coming in, very close to the day's high levels, even Sensex. When you talk about the sectoral picture, that's actually tilted very, very sharply in the favor of green. So it's pharma that's leading the charge with that 2.5% uptick. PSU banks, metals also shining with that 1.7% uptick as well, and Nifty Financial Services and some of the other sectors, everything barring IT is doing great for itself right now. When you talk about some of the gainers as well, you're taking a look at something like an NLC India, Alkala Mines from the broader universe, but when you talk about just the Nifty 50 complex as well, you do have a bunch of gainers. The Adani Group companies, Adani Enterprises doing quite well for itself, 7% uptick coming in on that particular counter. Cipla, Bharti Airtel, Dr. Reddy's, HDFC Bank, all of those counters in good shape. What's not doing so well right now, perhaps from the losing side for Nifty 50 is some of those tech companies, the likes of Tech Mahindra, HCL Tech, Infosys. Some of those IT names make a comeback yet again. So IT is clearly on the back foot, 2.9% downtick coming in for HCL Tech, Infosys, TCS. Anywhere between 2.5% to 3% downtick coming in for all of those counters. But let's also talk about what's really helping the sentiment right now in terms of the key important cue that we're looking at when it comes to the markets. And that, without a doubt, has to be the Trump-Xi meeting as well. Let's also tune into the commentary coming in from US President Trump in terms of what he then had to say when it comes to this particular meeting.
Great.
Did you talk about Taiwan,
Great place. Incredible. China's beautiful.
All right, and so there you go. That's the word coming in from US President Trump as well in terms of the entire picture for the visit. So it's a little bit of optimism that he's really reflecting. He's saying that, you know, the country is beautiful and the visit thus far has been great. And that's the key takeaway that you're looking at. That's providing a little bit of optimism to the market as well. And the Lal Street is also looking at it that way. But, you know, when you talk about Blackstone-backed Bagmani Prime Office REIT, that is in focus. That made a strong debut in the stock market, listing at a 3.5% premium as well. In fact, Puneet spoke with the management about the premium listing and what this really means for the company. Let's go across and listen into a slice of that conversation.
Bagmani Prime Office REIT is the one that we are focusing on today, and we're joined by the management of the company. Hugh Andrew, the Chief Executive Officer, Ashay Shah, the Chief Financial Officer, also now joining in. Gentlemen, both of you, thanks so much for joining in. Let me first just pose the question to either one of you, can go for it, just in terms of the sector, because we've seen a few listings over the last few years. And within the REIT space, the growth outlook, especially for a lot of companies to go asset light at this point of time, has been the interesting key factor. Talk to us a little bit about Bagmani, your focus on the commercial real estate space, and what do you currently see on the ground?
Sure. Firstly, thanks very much for giving us the time this morning. Look, you mentioned uncertainty. You know, we are very excited about today. This is the biggest REIT listing that India has seen so far, with a 6th REIT to list. So the market is maturing rapidly. And obviously the investor interest has been incredibly strong with that almost 25 times subscription. That shows market confidence and investor confidence in the sector. We see a continual demand from GCCs. And I think the whole real estate sector across India sees that demand. So you're right to say that there is certain geopolitical influences, but we haven't seen, and we don't predict to see, that affecting this asset class and the interest that the investors have, particularly with the Bagmani Prime Office REIT, with over 20 million square feet of revenue generating and assets under construction, and an incredible growth opportunity with a ROFO pipeline of over 47 million square feet.
Just in terms of what we've seen, over the last few years, that the concentration has largely been in these tech hubs, which require a lot of headcount and hence a lot of space for commercial real estate. Just talk us through your portfolio, how that has evolved over the last few years, and do you expect to be concentrated in these set hubs? Currently, what is the exposure that you have across the country?
Thank you. It's a very pertinent question. Let's deal with the type of demand that the real estate sector is looking at, and particularly our portfolio. Because of the economic development of India and because of the talent pool that exists, not just in Bangalore, but across all of those prime cities, we're seeing that the type of use and the type of tech demand changing. It's gone from companies that were outsourcing to companies now that see India as an innovation hub and a research hub. 89% of our occupiers, our partners, our client partners, are GCCs across a broad sector of industry with a heavy concentration in technology and also in the semiconductor business. In fact, over 20% of our occupiers are in the semiconductor business, whether that's research, innovation, or manufacturing. So India as a landscape for business will continue to change and develop. And I think the biggest factor will be the continued improvement in infrastructure across the country, but also that fabulous talent pool that India has and that those GCCs want to take advantage of.
All right, then there you go. So that's the update coming in as far as Bagmani REIT is concerned. But let's also move on and take the entire commodities spotlight also. Let's take a look at some of those factors as well that you're looking at when it comes to oil as well as gold. And when you talk about oil prices, they're remaining largely steady at this point in time. And you do have the Iran war that is, of course, keeping the global oil market tight. And that's the entire reason why you're seeing Brent also well above that $105 a barrel level. IEA as well as flagged severe supply shortages till the month of October, and that's also something that you're watching out for. And you do already have the Hormuz crude flows down, sharply since February, and that's also something that you're looking at as a very important factor. Now, when you talk about gold prices as well, that's also holding steady, currently holding on to their gains as we speak, but it's trading well close to that $4,700 per ounce level as well. Range boundary of trade coming in for gold as well. And right now you're seeing the Fed, the expectations in terms of the Fed holding rates higher for a longer period of time. And that's something that you're watching out for. Other than that, concerns are also persisting over Fed independence. And that has been in the past a trigger for gold as well. So that's also something that you're keeping on your radar in terms of factors to watch for both of these commodities. That said, before we get to some more insights, when it comes to gold as well as oil, let's quickly take a look at Bitcoin as well. That's slipped below $80,000. And you're looking at this decline coming in amid higher for longer US rate fears. That's also something that you're looking at. And other than that, the inflation impact that is keeping crypto pressured. But the headline really is the Clarity Act hearing, ahead of which you're seeing a little bit of caution really emerging when it comes to the entire cryptocurrency complex. The US Senate is going to be debating the landmark crypto regulation bill, and that's something to watch out for on the crypto front. Ahead of that 80,000 level, that's a key psychological level when it comes to Bitcoin, has also been broken. With that in mind, let's also quickly take a look at some of these insights also coming in as promised. And Ajay Kedia, Director, Kedia Advisory, is joining us on the show right now. Mr. Kedia, thank you so much for taking time out and joining us right now. When you talk about the entire complex for gold as well as oil, it's a very interesting setup that you're looking at. You have a high stakes meeting that has just been concluded. And when you talk about the cues coming in from that, how are you then looking at gold and what are you expecting going forward?
Yesterday was a big day, Sanjay. We have seen on domestic market looking to the concern which arise from the Middle East. We have seen our Honorable Prime Minister has already alerted about the gold not to buy for 1 year, and we have seen immediate action has been taken place. Domestically, yesterday we have seen 6% gain in gold prices, but on the contra, international gold prices are trading with the weakness only. Currently, prices are trading near to, we can say, 4,700 below. Timing, we expect with the inflation is rising around 3.8. There is a high possibility, whatever previously we were expecting a rate cut, aggressive rate cut from Fed, but now it's a high possibility that in the month of December, maybe there is a hint of rate hike. And that is why prices are expected to trade with a negative price. Yes, US and China meet is going to be more important because in last 1.5 years, we have seen the trade tension between US and China has impacted globally. And even Iran issue is been impacting very well. But let's hope if there is any positive talk, then definitely gold and crude has to come down. Otherwise, I think things would be awkward and maybe we can see Brent testing near 110 because logistical issues still prevailing as compared to the supply what we are getting right now. Shansi.
No, absolutely, and since there's a lot of volatility right now, Mr. Kedia, that you're looking at when it comes to gold, especially for the domestic market, right? How are you looking at somebody who could be looking at fresh buys, or if you already have chips on the table, How should they be approaching this? Should they be waiting for the dust to settle a little bit? Or what's the strategy that you would suggest there?
I think better would be better wait and watch, because one side already we have seen the appeal from the PM, and our love for gold is two different ends. So I think prices has already rallied very well. That has been already discounted. I am not so much bullish for next couple of months, because energy cost is been very important. It will impact your budgets. It will impact your logistic, everything. So maybe we can see price moving closer to $4,000, 4,100 would be a great level to re-enter. Because say in last 1 year period, we have seen rupee has depreciated to the tune of 14%. That has already been pricing in domestic market. Even a duty of 9% difference is also pricing. So I think on domestic side, if I get a level like 130, 140 could be a great level to re-enter for long term, because long term we are bullish on gold, but timing for a couple of months, unless until this geopolitical tension cools off, we expect gold can correct to the level of 4,000 to 4,100 level.
Absolutely. So some of it seems to be priced in as the view coming in here. But Mr. Kedia, just hold on for just a minute. We have an important update that we're looking at, and onto an exclusive. Then a big relief must be in store for OMCs. To give us some more information, you do have Shrimi's joining in with all of those updates that she's gathering from her sources.
Yeah, that's right. The government is considering a series of measures to boost foreign exchange inflows and strengthen the overall external position, as we've seen the tension in West Asia continue to keep global energy markets on edge. And what top sources indicating that center in active consultation with Reserve Bank of India is examining multiple proposals aiming at improving forex flows and even easing the pressure on reserve in case of this crisis further intensifies. Now, one of the key proposals under discussion is allowing state-run oil marketing companies to raise more foreign currency loans directly from the overseas market. Now, this could definitely help them bringing in additional dollar inflows at a time when crude oil-related outflows remain elevated due to uncertainties. And in fact, sources underline the fact that this is also going to help reducing borrowing costs for a lot of these OMCs, which are among the biggest buyer of dollars in the domestic market because of the India heavy dependence on the crude oil import. In fact, the other proposal which is also being discussed and being actively considered is the liberalized remittance scheme. Now, this is something they are talking about to how to sort of tighten so that the inflows, the outflows can be curbed. So exact contour of any tightening as such is still under being examined. The fine tunes are not being independently verified, but they are actively considering how to sort of curb the outflows through this LRS scheme which RBI has. Now, this discussion is coming as a series of meetings on the impact of West Asia crisis on crude oil prices, shipping costs, insurance premium, etc. And any prolonged disruption is kind of creating a concern among departments, among ministries, among government, that how to sort of curb all those, non-essential commodities, and one being increasing import of gold, which we have seen. So we will see a couple of more such decisions coming, soon, with regard to, boosting forex as well as curbing the outflows to sort of contain the overall import bill.
No, absolutely. Thank you so much, Shrimi, for joining us with that. So a handful of measures that you're looking at, some bit of fine-tuning on those finer details. That's something that's going to be worked out later as well. But before we wrap up, let's quickly take a look at some other updates also coming in. When you talk about oil prices, like we said, and we were talking about with Mr. Kedia as well, that Iran war is something that's keeping the global oil market tight. And you do also have IEA that flagged severe supply shortages till the month of October. Let's also get him back and try and get some of those insights also going. Mr. Kedia, just as we were talking about a moment ago, when you talk about oil prices, you do have elevated levels that you're looking at. So there's a little bit of pullback. There seems to be a little bit of a hurdle that you're looking at, close to $107 a barrel. When you talk about Brent, are there any levels that you're looking at that are acting as a key resistance level? And going forward as well, for this week to be wrapped up, what are you looking at for oil prices?
Yeah, I think the supply side concern is more important because, production has been there, but demand would be continue to be there. But important would be the state of Hormuz, whether it will be opening or not, because that is majorly impacted. So I think prices would continue to hold about 97, 90 106 level mark for Brent, and on higher side we are expecting 115 on higher side, because no further development has been seen in last couple of days. So we are also waiting to get an update from US and China whether they can trigger some new thing. But I think with the entry of Israel and UAE, one secret meet has been talk going on. So let us understand first, if geopolitical tension doesn't cool off, I think a supply shortage would be continue to be there, and maybe price can break 120 level, $120 mark also, if things continue to be there for next 15-20 days also.
No, absolutely. 120 is what you're looking at when it comes to oil as well. And I also wanted to try and understand if you're pricing in higher for longer oil prices as well. Is that something that you're keeping on your radar in terms of, the disruptions that we've seen and some of the supply shortages? It's quite the concern right now when it comes to oil prices. Are you looking at the lower level of prices, the lower band being revised in your outlook as well?
Basically, everyone will be expecting that whenever this type of moment comes, it will cool off. We have seen in 2022 when prices hit 130 level mark, and then we have came down to the level of $60 mark also. So it may possible that for next quarter, we may see prices are on elevated level. By Q4 and November, December, prices should come down again at 75 level. But we, to calculate that time, first of all, we have to see whether the war has been completing or not, because otherwise, I think it will be very difficult to understand, because Black Sea area and this Strait of Hormuz are two different world, because 20% of global oil supply is from Strait of Hormuz. But as of now, we expect let everything settle down, then we can see price moving towards $75, $76. We are not expecting price to come down to 60 level, but before that, 120, it can be 135, because things have been very critical as of now for the month of May and June.
Absolutely, and that makes perfect sense, in terms of how you should be looking at price levels as well, Mr. Kedia. But before we let you go very quickly, I just wanted to get a word in as far as sugar is concerned. I'm curious if you have a view when it comes to the ban until the month of September for exports for sugar as well, and if you also have a view there.
So I think FRP prices are already rising, ethanol demand is improving, and supply side concern would be there because this year El Nino impact would be there. So I think government has taken a precautionary step by banning the sugar export, and definitely this will, maybe we can see some more restricted steps coming in that will actually impact the global prices. We can see international sugar prices may see some more boost from here, but domestically we can see prices are almost at par with global prices. Maybe we can see some more upside. Important would be the monsoon and the ethanol price, how it will be moving further from here.
No, absolutely, and thank you so much, Mr. Kedia, for taking time out and joining us. So there you go. That's the entire update coming in terms of how you should be looking at oil prices, gold, as well as sugar going forward as well for the prices. Now, with that in mind, let's also take a look at some of these sugar counters as well that are buzzing away in trade, and some of the other stocks that are in focus as well. When you talk about any of your major sugar companies as well, you're seeing a cut anywhere between 2.5% to about 3%. For some of those stocks as well. There you go, 6.3% for something like a Dhampur sugar as well. But with that in mind, let's also quickly take a look at some of these other counters that are in focus as well. And let's also get in Shivam to take a look at some of the counters that make it to his radar. Shivam.
Well, yes, the first stock is the Zydus Life Sciences, which has been trading higher in today's session, around 4.7%. And this is mainly prior to the board meeting that has been scheduled on May 19, and it is expected that the board will consider a share buyback proposal, and also its subsidiary Zydus Worldwide is set to acquire Assertio Holdings for around $166 million. Now, talking about the Assertio Holdings, this is a US-based pharmaceutical company which mainly focuses on specialty and oncology supportive care therapies. Now, the company has a novel product which is named Rolvedon, and this aids in prevention of febrile neutropenia in adult cancer patients. Now, with this acquisition, the company will aid Zydus to secure an immediate US specialty oncology commercial footprint, and company will use it as a platform to expand its oncology specialty portfolio. Also, this acquisition is expected to be completed in the financial year 26 26-27. Next stock is Vishal Projects, which is up around 10% in today's session. The company has secured a major order from Power Grid Corporation, and this order is worth around 200 to 300 crores. Now, the first order is the construction of 765 kilowatt AIS substation package in Pune, Maharashtra, and second is the extension of 400 kilowatt transmission line package that is to be executed within 21 months. And on this, the management has said that this will play a pivotal role in removing transmission constraints in Pune region and strengthen the Maharashtra region's grid. Third stock is Easy Trip Planners, which is up 4%, and the company has approved a 500 crore fundraising plan, and the fundraising will be done via the rights issue of equity shares. And talking about the record date, it will be determined later and notified subsequently to the exchanges.
Absolutely, and thank you so much, Shivam, for joining us with an update on all of those counters. So 3 of those counters really buzzing away in trade, and that's what you're looking at. But let's also talk about a key legal development as well in the Sona BLW promoter dispute. The Supreme Court has in fact stayed crucial board resolutions of RIPL, granting relief to Rani Kapoor and putting key agenda items of the May 18th meeting on hold as well. Nimit Dixit joining us with all of those important details. Nimit.
You're here again. Now, that's actually what the Supreme Court told the fighting sides in the Sona disputes case, the RK family disputes. The Rani Kapoor, the mother, after the death of her son Sanjay Kapoor, has been fighting with her children and the rest of her family over the assets, the RK family assets, which includes, of course, Sona BLW, big listed entity, the auto part manufacturer. Now, what is happening in the Supreme Court here is, on May 7th earlier, parties approached the court and the court allowed them to mediate the disputes. Former Chief Justice Chandrachud was appointed as the mediator, very high profile mediation underway. What happened after that was told in court today was that on May 8th, the Raghuvanshi Investments, RIPL, which is a strong part of this RK family group which controls Sona, has ordered a board meeting to take place on the 18th of May. There, among certain agenda items, including the change of 2 independent directors, appointment of 2 fresh independent directors, as well as change of authorized signatory to handle the bank accounts. Of course, who handles the money has the power. So Rani Kapoor, the mother, who's the majority stakeholder here, who's also claiming in a suit separately that her stake is being diluted fraudulently, came and said that I cannot have this meeting go forward because these guys are trying to push me out of the company. Now, without going into the merits of that situation and whether that is correct or not, what the court simply said was that you guys have gone to mediation right now. Mediation is ongoing, and when mediation is ongoing, things need to be clear, things need to be settled. So the court did not stop the board meeting, but the agenda items to change these, to appoint the 2 new independent directors, as well as to change the authorized signatory to operate the bank accounts, were stayed by the Supreme Court. Now the matter will be referred back to mediation and will be taken up after 2 months.
Absolutely, and thank you so much, Nimit, for joining us with all of those important details. So the family feud has in fact reached the apex court, and that's the word coming in from the court as well. But let's also move on and talk about pharma major Cipla that's in focus now. It's announced a weak set of numbers, but when you talk about the key tailwinds, you're looking at the domestic and Africa market really aiding, and even when you talk about the brokerage verdict, it seems to be quite positive. In fact, Varsha is standing by with just that update.
So I would say revenue was in line, but EBITDA and PAT was missed. But the reason why Cipla is buzzing is not because of numbers, but because of the commentary of the management, and of course the brokerage is being bullish post the commentary. Well, the company is expecting strong launches which will help to aid growth. EBITDA margin expansion is on the cards. US business is expected to do well. Now, talking about the brokerages, well, let's see what Goldman Sachs has to say. They've maintained neutral, though they've hiked target price. Q4 results, according to them, were below estimates, but India, South Africa beats US pipeline in focus for FY27, and One Africa gathers momentum. Kotak has maintained buy with target price of 1,625. According to them, the numbers were in line, but domestic business delivers strong at 15% year-on-year growth. Robust H2 FY27 is expected, and US guidance brings a positive surprise. While MS has maintained underweight, though they've cut the target price as well. According to them, the earnings were weak. FY27 remains a transition year. EBITDA margins down, sustainability of gross margin improvement and launch timeline timeline of peptide assets will be a key thing to track, but the US pipelines is strengthening. So overall, all the brokerages and investors are, betting on the US pipeline, and of course the new launches and the capex will also go down, which will help the operating leverage, and hence the EBITDA margin will also improve for the company, and hence you're seeing the stock is buzzing in trade today.
Absolutely. Thank you so much for helping us out and understanding that entire takeaway coming in when it comes to brokerages as well. But let's also talk about something like a Sharda crop chem that's trading under pressure as well. And when you talk about that 9.5% cut, that's despite a stellar quarter that you had for the management. That's also confident that the El Nino heat wave is not going to have any impact on the company's business. Earlier today, in fact, we caught up with the management. Let's go across and listen in to the key growth drivers that they're highlighting going forward.
It does not worry me at all, because we are selling our products to about 70-75 countries around the globe. This El Nino may affect few countries, but that will not affect our total business. It is sustainable. I won't say it is a peak. I would say it will become normal, but nobody can predict about the future more accurately. Freight constitutes a very small percentage of our total cost and prices. It's very easy to pass it on to the customers because they are fully aware what is happening around.
And then there you go. So that's the word coming in from Sharda Crop Chem that's trading under pressure as well. Of course, the key headline that you're looking at in this day that you're looking at is the high stakes Trump Xi meeting as well. And on the screens, you do have some of these visuals also coming in. You do have a bunch of businessmen who've also flown in to China as well. And you do have Tim Cook, who's very visible in the frame as well. In terms of that update coming in for Elon Musk as well as Tim Cook, you did have, them talking about how they're going to be focusing in on tech. And that's been the kind of commentary that you've gotten. Of course, when you talk about the Chinese side, they have issued a very stern warning. But that's a wrap on this edition of Lunchtime Trades. Thank you so much for tuning in.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी
Excellence measured by those who built it. Presenting the jury of the NDTV Profit Business Leadership Awards. Sunil Bharti Mittal, Chairman of the jury. Founder and Chairman, Bharti Enterprises. Noel Naval Tata, Chairman, Tata Trusts. UK Sinha, former Chairman, SEBI. Kiran Mazumdar Shaw, Chairperson, Biocon Group. C.S. Sethi, Chairperson, SBI. Jayant Sinha, former Union Minister of Finance and Civil Aviation. Ramesh Damani, Value Investor and member of BSE. Cyril Shroff, Managing Partner, Cyril Amarchand Mangaldas. NDTV Profit Business Leadership Awards. Honoring excellence. Coming soon. India's unshakable news habit. NDTV.com is India's #1 English news website.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most insightful.
Welcome back to NDTV Profit. You're watching Small Cap Buzzers, and today we are putting the focus on one particular counter that's buzzing in trade today, and that's Kaynes Tech, down almost 19% now. And this is after the company's quarterly results failed to meet the guidance that the management had stated. Revenues come in this particular quarter up 26% at 1,242 crores versus the estimate of almost 1,700 crores to meet the guidance. So that's one of the key factors that is having a negative reaction essentially on the stock today as well. Cash flow was the other concern, but we'll talk about all of this with the management who's now joining us. Muthukumar Narayanaswamy, Managing Director of the company, is now joining in. Mr. Narayanaswamy, very good afternoon to you. Thanks so much for joining in. In terms of, this is of course your first full quarter as the Managing Director, and it's a tough one to handle most certainly. So just some clarifications to start us off firstly on what was promised essentially by your predecessors in that sense for the guidance for this year for FY26, and of 4,100 crores, you've done 3,600 crores. Largely, any particular delay in recognizing certain orders, has that been one of the reasons for not meeting the guidance, and is that penciled in for the next year as of now?
Good afternoon, and thank you very much for taking the. First of all,
Mr. Kumaraswamy, we have a bad audio with you. We'll try reconnecting once again on that one. But I think from what Puneet is saying as well, if we can just patch that audio glitch that's coming in right now. It's a severe guidance, Ms. Puneet, that we're talking about in terms of the fourth quarter, where they failed their revenue targets. The profitability has seen a drop as well this time around. There is margin compression. And if you heard the conference call as well, the management has come out and given a justification saying that, it's the geopolitical disruptions for logistic blockages and weak execution during the quarter which has led to all of this miss. The question is, from here on, if they're even giving a guidance, Puneet, when it comes to FY27 as a year, will they be able to deliver? Because that's where they've failed.
Well, most certainly, and I think those are some of the key aspects that we want to watch out for and also get some perspective on, because there was, a lot of expectations going into this quarter as well. Now, you had expected that, 1,700 crores, while a very tall target, you would get close to around that 1,500-1,600 crore mark. That was the estimate, but at 1284, there was that miss, and hence the pressure on the stock straight away as we started trading today.
And I think, a similar thing happened back then when you had their CEO resign, when the management was very confident that things will be in place. We had seen a similar crash happen as well. But from there on, I don't think so things have improved to any possible way. Now, one, will they be able to take a close look at what's happening in terms of the execution? Two, in terms of the kind of subsidy that they're going to get from the government, I think it's a catch-22 situation for them right now, because only in terms of a certain deliverables is when the government gives them a subsidy, right? Till the time they are not able to execute, they will not get the subsidy. And that is what is creating that mismatch in terms of cash flow as well. So that deteriorating working capital and that crunch when it comes to the subsidies not coming in, which is putting pressure on the capex, is a key concern, because how are they going to resolve for that?
Yeah.
That is the question. And apart from that, I mean, there are corporate governance and accounting red flags also that were raised in the past over year. So there is capitalization gap that is coming in. Puneet, I think we do have the management back with us.
Yes, Mr. Narayanaswamy, I hope I'm audible to you as well. And just, let me just repeat the question as well, because we saw that the target of 4,100 crores was just revised in the previous quarter. If you can give us some perspective of, there was some delay in certain recognition with a particular customer or an order, and is that revenue delayed or revenue lost?
Okay. Thank you for taking me in the call. Can you hear me well?
Yes, sir. You're audible. Please go ahead.
Two things. One is the missing the top line. For a full year, I think we have grown at 33% and it has grown at 39%. However, during the last quarter, against our guidance, we have dropped it mainly because of a delayed order, not a denied order. One of the two bids that we have done, and we were supposed to get the product, we were ready to execute the product, and the last minute, what we expected, the order could not come. That will be taken up in the first and second quarter of this year. So it is only a delayed order and not a denied order. And that is one of the reasons why we have lost the revenue target in the year.
So is it... sorry, Mr. Muthuswamy, just a clarification. Sorry, Narayanaswamy, just a clarification. So is it that order, basically, that you are supposed to deliver, so it's the product is ready with you, It's just that you have to deliver it to the client and recognize the revenue. That is the one key aspect that has not happened. Or is it that you didn't receive the order and hence that was already penciled in, which couldn't be turned around?
The product was the proto sample submitted, the product approval is given. The first lot of schedules should have come and produced it, but the order was not released on time because it's a government order on 2 business. So it will be coming in the first week of April, first week of May, and we are likely to execute this. We are still waiting for this. The materials is available. The product is already approved and it is demonstrated. And that's the reason why we lost in that the last quarter, which is against our guidance that we are given.
Okay, Mr. Narayanaswamy, this is Hiral on this side. So my question to you is, let's break this up. You're saying the order that was lost will come in the current quarter. And if that is the kind of scenario, what is the kind of guidance that you have in terms of execution? Because with the current order book, how much of it will you deliver in terms of the next 12 months?
Okay. There are 2 things before I give a guidance. We have been reviewing this business, and which is one of the fast growing business in India. And while the country's growth is around 8 to 8.5% GDP growth, this market, very specifically on EMS business, grows at around 15%. So we are very confident with the products in the pipeline, with the very strong order board of 9,000 crore plus. We'll be doubling the market growth. I think that's an assurance that I can give at this point of time. There's a huge volatility post end of February, first week of March in terms of the materials, in terms of the incoming components, and of course, the consumptions of the customers. While the market is little stabilized in the first week of May, there is a high amount, the amount of prediction, particularly in the automobile market, has come down to single digit high in this year when compared to the mid double digit earlier. So we want to be a little cautious on this because I know that the market is looking at us. We'll outgrow the market and we'll definitely make sure that our growth is double of what is the market growth. I think at this point of time, I want to cross with this. But as far as the missed target of last year is concerned, it's very clear that we will be executing that order for this year for sure with more values, but it is a delayed order. And
Okay. So what we want to understand is right now, there is a disconnect between execution versus the actual accrual that's happening as well. Your order pipeline is really growing and that's categorically seen from the numbers that you have. Now, the market is severely penalizing Keynes as well right now because it is unable to convert these orders into timely cash flow and revenue. And that is the concerning area over here. Please help us understand how much of your order book, apart from that delayed conversion, as you mentioned in terms of the order, is also because of a roadblock when it comes to supply chain issues or raw materials from a war crisis.
At this point of time, Keynes, if you see our numbers, we have quite good amount of stock that's available with us. That is one of the advantages why Keynes is able to convert the order into the business at the earliest. If you look at our market share last year, we have grown almost double of what we had previous year in automotive business. In spite of one of our largest two-wheeler OEMs, which is using an EV business, has dropped their business substantially, we could be able to grow at 29% when compared to the previous year in automotive market. In terms of aerospace, our growth is 49%. In overall, we grew at 33%. Of course, our guidance was much higher at 50%. And when it came down, the market expectation was high. We take it with the complete responsibility of it. And but nevertheless, for this year, we will be definitely growing this business because we have a very strong pipeline. Our plant capacities are available. The plant is capable of doing. And also, we are migrating ourselves into an EMS product, into the product selling. 30% of our revenue is going to come from new product, which we already launched, and also into the product. These strategies will take us into expanding our margin and at the same time sustain our growth.
Got it. Well, Mr. Narayanaswamy, so basically just, as we go into the cash flow part, I just want to get a sense of what you said. So you're saying you'll be growing double of what the EMS market is suggesting. So 15% is what the industry estimate is. You will be growing at 30% for the EMS part. So that point is understood. But you also have, the other business basically, which is of smart meters, and that is where the cash flow is getting constrained. So what is the growth that you are seeing for that business? Because you can't put a 30% growth on your current revenue, right? So if you can give us some perspective of just to analyze, and I know that you don't want to put a number for revenue for FY27, so we'll respect that part, but that how do you see that growth? Because we don't want to just put a 30% on 4,100, get you to 5,300 right now for the next year. So what is the estimate of growth for the smart meter business?
Last year, out of the 3,600 crore revenue, 900 crore has come from the business.
Sorry to cut you. Mr. Narayan, sorry to cut you, but your audio just went as you started to respond to that question. So if you can just try once again for responding to the question, sir.
Okay. What I said, last year, 3,600 crore revenue, 970 crore has come from the metering business.
Mr. Narayan, I think let me try once again, sir, if you can try once again, because I think when you're coming towards the screen, I think that's when you're audible. So maybe you can try doing that once again, sir.
Now?
Now, with a little feeble voice, but we'll take it, sir. Please go ahead.
Can you hear me well?
So now it's perfect. You can be close to the screen. I think that's perfect.
Okay. When last year, again, 3,600 crores of total revenue, our metering revenue was 971 crores, which is 25% of the business. But the catch here is the entire EMS for the metering business, we have been supplying as a metering solution earlier, which means 50 to 60% of this is the growth in the EMS business, and we have started selling the product. The metering business is a strategic acquisition for us. We wanted to migrate ours from an EMS supplier to a product supplier. This has given us a great amount of strategy in terms of the going into the product, and this has grown. But unfortunately, the business model is completely different. This gives us a product company. This gives us a expanded margins on this product, but this has given us a long working capital management. Having understood this, we have done the course correction for this in terms of selling the meter, in terms of the installation, and of course, in terms of the operating and maintenance over a period of years. So we have done the course correction to see how we can do this.
So, but how much of your current receivables are stuck in this slow-moving smart meter projects, and when will this be collected? Because that is going to have a bearing on your, capital cycle.
You are right. See, that's what I was just coming. So the second question on the receivables, if you look at the pure EMS business, which is my 67% of the business, my number of days has come down to 55 days when compared to what it was earlier. So we have done a substantial progress in these areas, and we, as a standalone EMS business, we have standard cash flow at 255 crores against 65 crores of last year. I'm sure that you would have seen this. But in terms of the metering business, our receivables has gone to 1,365 crores, which is almost, we are working on the next 3 quarters to clear it up to about 1,000 crores is what we are planning to get it out. In the next year, when we are going to do the business, we have clearly strategized how much we are going to sell it as a meter and how much we are going to sell it as a metering. But as a strategy of gains, this is very, very important business of getting into the smart meter, because it is not only in EMS space, in our product space, and of course in the data in terms of the operating meter. And these data are going to bring in a lot more value for our business in gains, which is going to set us to grow in the days to come. The consumer pattern, the consumer consumption, all these data are going to strategically help gains in the days to come in penetrating into more and more markets. And you have also seen, that's the reason when compared to our guidance, our profitability has grown up over a full year. Of course, the last quarter, our profitability was a little less, but in terms of the full year, for a 32% growth in the revenue, our EBITDA growth is about 39%.
So, Mr. Narayan, as you highlighted, and thank you so much for giving us that number of 971 crores for the metering business, as you mentioned. Now, the only thing that I think the street is not understanding, or if you can give us some perspective on, is what could be the growth expected from this business, because you've given us what to expect from the EMS business. The reason I ask is your cash flow, you are saying, well, over the next 3 quarters will come to a break-even kind of level from minus 600 from cash flow from operations right now, which is majorly dragged by your smart meter business. So how do both of those things come together for you in this year? Is it that you can expect at least market growth for the smart meter business?
We don't want that business. We want to grow in that business also.
You'll have to come just a tad closer to the screen again to give your answer, sir.
We would love to grow in that market also. We don't want to stop any market from growing.
Sorry, Mr. Narayan Swamy, I'll have to interrupt you once again because of some audio issue. I think you'll have to just be a little closer to the screen. I think, yeah, I know you're already close, but we'll try once again. I think we lost you, sir, at this point of time.
I think we'll just wait for the management to reconnect with us as well. But a couple of important points, Puneet, that they've already mentioned. I think two of the things that I want to still talk to them about is their negative cash flow, number one, and the elongated cash conversion cycle. Because the question is, how will the management prove that they are able to bill these orders on time without inflating that current 125-day working capital cycle? Because if that gets elongated, it's going to be a concern. Yeah. If your receivables are already at 134 days, so that also is a concern. So that is one of the major mismatches happening over there. And if you're talking about the capital deployed, that is something which is concerning. Mr. Narayan Swamy, are you able to hear us?
Yeah, I can hear you very well.
Okay. If you could respond to what Puneet just asked you as well, and then we will go to our next set of questions.
Okay. We will continue to grow in every segment because we want to de-risk the business. We'll be growing in automotive, non-automotive, aerospace, and also we'll be getting into the defense and space. These are the areas. So metering is a business we'll go. But how much of meters we will do as a meter sales and metering sales, which is including the O&M and things, is what we will do. And that is the reason why we are telling we will grow in the metering business, but because of the business model in 3 quarters, we'll come back to the normalcy.
Okay. My question apart from this to you is with regards to where your orders is concerned. Now, how soon will you be able to bill them? Because the working capital cycle is already at 125 days. And if I'm looking at your receivables, that has worsened to 134 days. So there is a major mismatch happening on that front where money is locked up in inventory, unpaid client invoices. So how do you plan to fill in this gap? Because that's what the street is concerned about right now.
Working capital. You are right, my collection days have gone up. But my in EMS business, which is 75% of the business, my net working capital has moved from 83 days to 55 days in the EMS business. The metering business with next 3 quarters of materials, receivables to be collected and converting into a direct sales of meters will be improving the cash flow. That's why I'm asking up to standalone EMS business is cash flow positive, but cumulatively at a consolidated level in 3 quarters we'll come back to normal. This will give us a good set of capabilities for improving on our working capital requirement and managing the supplies.
To add to this, out of the 3,300 crore project cost, if I have to look at the other part of the, capex, you've deployed close to what, 1450 odd crores as on March 2026. Correct me if I'm wrong. Now, under the ISM scheme, you qualify for a 50% fiscal support, which is a subsidy from the central government, and alongside a 20% capex subsidy from the Gujarat state government, right? Now, there is a cash flow catch over here because the subsidies cover up only 70% of your project costs and they are disbursed on reimbursement basis after hitting specific milestones. How do you plan to fill in this gap? Because currently you're on a 600 crore negative operating cash flow.
You've seen already we started hitting our subsidies, what we have spent on last year on end of March. That means this year, almost about 60 to 70% of the capital funding we'll be getting back into the subsidies in both the entities what we have made. Now, we are very, very confident and we have a clear pipeline to fund our projects. And also we are going to start generating the revenues from the new capex that we have started working in. That is going to add up either to our top line or to the bottom line, depending on strategy. We are saying that we are going to use it for our internal consumption or going to sell it outside. So both the things are going to really help us in terms of coming out of the cash flow issue.
So, Mr. Narayan Swamy, you've been very upfront with us and I appreciate, your gather of, your first proper quarter as managing director. So, because you also have to invest quite a bit and you mentioned some of the points, right? I mean, in your next line of capex, because you're managing both your smart meter cash flow as well as your capex for both OSAT and PCB. So just one question on what is the capex number for FY27, and is that largely being funded through whatever cash you have on the books? Will you be raising any debt? Do you need, and I guess that you don't want to raise equity at such valuations. Sorry, sir, I think it's me. When I ask a question, I can't hear you, but if you can try once again.
I can hear you well. We have enough funds in our QIP.
I'm just going to come in over here to say that if you can respond to what Puneet has asked you right now, maybe that does the trick.
I'm sure that you can hear me well now. We have the funds available from our QIP residues, but more than that, this year the smart metering peaking has already gone. So now we are going to get the collections of the last 18 months before what we did the business. So the funds is going to come back into that, and more so our subsidies will flow back. And with these two things, we are pretty confident of managing the working capital management and come out of the situation.
Okay, so I think lots we have to watch out for as well. But thank you so much for joining in. Always a pleasure to speak to you. In fact, we would love to come and see the facilities and actually do an on-ground interview with you as well and the management ahead to understand exactly, what is it that Keynes is doing to show the viewers as to what's the progression that's happening. But we shall connect back on that very soon. Thank you so much for joining in. Always a pleasure.
We are to host in our Sanand plant, which was inaugurated by Honorable Prime Minister on 31st of March. The plant has already started, the phase 1 has already started commercial production, and phase 2 capex is in full swing. Our first samples have been approved by our customers at AO in the US. So we are all set to grow, and the PCB plant is almost in the finishing stage. We are in Chennai today, seeing the progress of the plant. The plant will be up in operations by next quarter. And these two things are substantially, we are going to be the only EMS company, an end-to-end, from PCB to OSAT to EMS, and migrating from an EMS supplier to a product management company is going to give a substantial leverage for Keynes, which I'm sure that you will see that how we are progressing in this year going forward. Thank you very much. And thanks for giving us an opportunity to communicate back. Thank you very much.
Looking forward. Thank you so much for joining in. Always a pleasure to speak to you. Over to you, Varsha. I mean, it's interesting to hear the management, but everything is going to depend on execution, Puneet.
Most certainly. At this point of time, it's the key one. I think the stock's having a way today, but a lot to talk about and think about from what management has said.
Absolutely. But, guys, moving on from that, let's focus our show on GK Energy. Well, the stock is buzzing on the back of Q4 numbers, and I think strong, growth is expected in FY27. The stock is up 4%, but to, speak more about numbers and what lies ahead, we are joined by Mr. Gopal Kabra, who's Chairman and Managing Director at GK Energy. Mr. Kabra, welcome at NDTV Profit. Always pleasure to have you. FY26, I mean, especially Q4, you had a good quarter. Now, going ahead in FY27, what's the growth expected when it comes to revenue, and where can your margins go?
Thank you for inviting. Looking towards the growth number, so we are expecting the fantastic growth ahead, as the requirement for the solar pump is solar rooftop. Everything is going very fantastically. Demand has multifold. PM Kusum 2.0 is expected very soon with the great numbers. Magiltala scheme is growing up, and we have done the very fantastic business in that, as well as it's a decentralized business. So we are getting ample scope from various verticals. So we are expecting to have the almost double kind of the number in the coming year.
Okay, so you're expecting doubling of revenue in FY27. Am I right on track?
We are targeting that.
I got that view. And so what about margins? Currently in FY26, your margins are at 20%. Where this can go?
It will remain plus minus 10% in that range itself. So we may expect around 18 to 20% range. Looking towards the geopolitical scenario, we are expecting slight margin may get impact, but we have seen in the last year as well, earlier margin was in the range of 12% till H1, but year ending we able to reach 14% because of the policy changes what we do at the company level. We have the strong OEM partner network. There also we are able to change the some sequence where we are able to secure the more margins. So if procurement cost goes up, then we always identify the innovative way which can be implemented to keep and retain the margins.
Okay, so in FY26, margins were around 18% on a consolidated level, and you're expecting around 18 to 19% in FY27, maybe 1 or 2% here or there. Okay, and also, sir, when it comes to your order book stands at around 710 crore. What is the execution timeline, number one, and how is order book looking like? Maybe in next in first half of FY27, where this number can go.
Order book, what we have mentioned, it is as of now order book, and execution period is around 3 to 4 months for that. So majority will get covered in Q1, and Q2 also order will go ahead in that. And we are expecting further order in Magiltala 5 as well as the PM Kusum. Then smart solar rooftop scheme, which is started in Maharashtra. We are one of the strong player in that as well. So there also we are expecting a fantastic order book there we are targeting to reach at least 1 lakh household. That will give us the more network scalability.
And also, sir, talking about your receivables, which has increased, and now I understand you do have, orders from government as well. But just wanted to, have a view on where you're expecting, how you're going to mitigate when it comes to increasing receivables, and where you want to take that working capital days to.
See, right now we want to reduce 10 to 15 days of the working capital, the best what we can reduce. We want to do it. And in the government area where we work, where we have to do the installation, after installation, we submit the bill. And once verification is done, then the payment get released. So the whole process at any given time shall take 100 days. So 100 to 130 days shall be the standard timeline we should expect.
Right. Well, thank you so much, Mr. Kabra, for joining in and having a conversation with us. Thank you so much.
Thank you.
Well, this was GK Energy expecting doubling of revenue in FY27. But this is all the time that we have on this edition of Small Cap Buzzers. Stay tuned to NDTV.